Thank you so much. Hello and welcome, ladies and gentlemen. It's wonderful to be here. Are we all excited for today? Let's try that again, shall we? Are we excited for today? Yay! That's more like it. I'm certainly excited for today. And welcome to CNBC's first ever CONVERGE Live in this beautiful city-state of Singapore. So my name is Mandy, Drury, and it is my absolute honor to be concierging you through all of the events of the next 2 days. So thank you so much for taking the time out of your very busy schedules. I know that you're all very busy and important people, but you've come down here to spend the next 2 days with us. So thank you. So we have an action-packed schedule for you to make it all worth it. You can get on board and really enjoy this cruise. We have insightful discussions. We also have some really fantastic people who are going to be up here on the stage. And guess what? I'm expecting some thought-provoking questions. Yes, you didn't think this was just going to be a come on down, relax, enjoy, have some coffee, have a bit of a chat with each other and look at your phone kind of day. No. This is going to be interactive because you've got first row seats here. You're right here in the front row with access to the movers and shakers that we've got lined up for you. We've got global business leaders, entrepreneurs, investors, money makers, key decision makers, and they're all going to be discussing what it means to innovate and what it means to share ideas across industries. So let me just give you a little amuse-bouche, shall I? A little taste tester of what we've got in store. This is by no manner of means the total gamut of who we have with you. We have a rare panel between Ray Dalio and Marc Benioff. We have a fireside chat with the Alibaba co-founder and chairman, Joe Tsai, and that's just the morning, folks. And then we're going to be in the afternoon. It's going to be all about AI. Did you watch that promo? And we saw CNBC's Dan Murphy, who said, you know, I think AI is going to be kind of important in the future. Well, that future is now. AI really is important. And I know you probably think, oh, I've had enough of AI. I can't walk out the door and I can't go anywhere without stumbling over the word AI. But there's a reason for that. AI is here. It is now. If you're not implementing it, if you're not using it to your advantage, then get started. So we're going to be talking to Cisco, Microsoft, and HP about how they're adopting AI and driving AI forward. We're also going to be finding out about how nations are adjusting to this new digital reality. We have Singapore's Minister of Digital Development and Information and Minister in charge of Smart Nation and Cybersecurity. That is Josephine Teo. That's going to be a really great and insightful conversation. And then we have CNBC's Arjun Karpal. If you're a CNBC regular watcher, I'm sure you know him. He's this tech guru. He's our chief technology correspondent based in London. We've flown him in because if he doesn't know about it, it's not worth knowing. He is all over everything at the cutting edge of technology. And he's going to be interviewing IDA. You heard of IDA? There's IDA right there. It's the world's first ultra-realistic artist robot. Get your head around that. Yes, they're truly taking over. So I'm going to exit stage left. You don't want to hear from me for the moment. I will come back for some housekeeping, which is always very important, boring but important. I would now like to hand over for the official welcome from CNBC, the president of CNBC, no less. Let me welcome to the stage, and let's give a big round of applause for Casey Sullivan. Casey, over to you.
Thank you, Mandy. Good morning and welcome, everyone. On behalf of CNBC and NBC Universal, I'd like to extend a warm welcome to the first ever CONVERGE Live. It's an honor to be here in Singapore at the world-class Jewel. And as I stand in front of such a distinguished audience, I am truly humbled. Thank you so much for joining us today. Today we gather at a moment of inflection. One where industries are not simply evolving, but fundamentally transforming. And as we find ourselves at this defining moment, collaboration has never been more crucial. CONVERGE Live, at its core, is an opportunity for global leaders to connect and drive transformation. We're here to bring together those who are shaping change across business, sport, and entertainment, and together discover opportunities for growth. The future isn't built alone, it's built together. It's through collaboration that innovation can thrive, and it's what makes events like this so important. In a time when consumption of news is fragmented, staying connected to our audience and providing essential information and content is more important than ever. Over the last 3 decades, CNBC has evolved, but our mission has never wavered. Every day, we provide our audiences with business news stands out to me as well are the speakers that we have joining us. We have leaders and visionaries who have traveled from all corners of the globe to be here, and that's important. It's important to us at CNBC to hear from those who understand local context, because connecting with local relevance can convene people and opportunities in a way few other places can. A stable, trusted hub for investment, technology, and innovation, Singapore is defining the future, and I can't think of a more perfect backdrop for our first ever CONVERGE Live. We're honored to have the support and partnership of Singapore as our host country to deliver spectacular events like this one today. It's through collaboration and a shared vision that we can transform ideas into reality. It's a great pleasure to work alongside you. I'd also like to extend my thanks to our sponsors, Be Grim, Schneider Electric, Prime Infra, Samsung, and Grab. Your support is truly invaluable. And with that, I'd like to thank you again for being here at CONVERGE Live, and I look forward to meeting many of you over the next couple days. It is now my sincere pleasure to welcome on stage Deputy Prime Minister Yong. Thank you very much.
Distinguished guests, ladies and gentlemen, good morning to all of you. It is my great pleasure to join you this morning at the inaugural CONVERGE Live. This event is a useful platform which brings together business leaders, investors, entrepreneurs, as well as key decision makers to come here to explore new opportunities across business, sports, entertainment, and to exchange ideas. Few could have imagined how the geo-economic environment would change so drastically when this event was announced just 3 months ago. But fast forward to today, and we are indeed facing a very different economic landscape. Many of us here in Asia watch with anxiety President Donald Trump's tariffs on the U.S. 3 largest trading partners and his plans for more, including reciprocal tariffs to match the duties on U.S. exports. Besides retaliatory tariffs, countries may also respond by enacting other protectionist measures such as import quotas, export control, slow down trade and investment flows, and significantly set back the growth of global economy. In spite of the risk of greater economic fragmentation, there is good reason for us to remain optimistic that Asia will remain a beacon of growth opportunities and prosperity. Asia's economy is projected to expand from just under 50% of the world's GDP today to about 60% by 2030. And within Asia, Southeast Asia is projected to become the fourth largest economy in the world. The fundamentals are strong. Young and growing population in countries such as Indonesia, India, and Vietnam, a rising middle class that will drive consumption, and good physical and digital connectivity to support trade and investment flows. To realize this potential, we must position Asia as an open, integrated, and innovative region for trade, investment, and talent. One key enabler of this is the ASEAN Trade in Goods Agreement, or ATIGA, which has been enforced since 2010. Under the ATIGA, 6 out of the 10 ASEAN members, including Singapore, have eliminated import duties on almost all of their tariff lines, and the remaining 4 have reduced their import duties to between 0 to 5% on about 99% of their tariff lines. But we want to do even more. We are in the process of upgrading the ATIGA to reduce non-tariff barriers, incorporate sustainable trade processes, and address new aspects of trade, such as digital and green economy, as well as supply chain resilience. This will not only boost intra-ASEAN trade, but also help businesses build stronger supply chains within ASEAN to mitigate the risks from external shocks and protectionist measures. We are also deepening our integration with like-minded economic partners. To date, ASEAN has established 6 ASEAN Plus Free Trade Area agreements, including with Australia, New Zealand, China, and India. And we will progressively update these agreements to ensure they remain relevant, forward-looking, and responsive to global developments. Last year, we substantially concluded our negotiations to further upgrade the ASEAN-China FTA. In addition to aligning standards and easing customs practices, businesses can also benefit from new provisions on the green and digital economy, as well as supply chain connectivity. All 10 Southeast Asian nations are also parties to the largest free trade agreement in the world today, namely the Regional Comprehensive Economic Partnership, or RCEP. Together with Australia, China, Japan, South Korea, and New Zealand, RCEP comprises 30% of the world's total GDP and about a third of the world's population. On average, tariffs within RCEP are on 92% of products have been eliminated under RCEP. We are in discussion with ASEAN to enhance and expand the RCEP so that we can open up new market opportunities for our businesses. Taken together, these overlapping agreements, whether ATIGA, ASEAN Plus, or RCEP, reflect our collective commitment to uphold an open, inclusive, and rules-based multilateral trading system. This commitment will also serve us well in exploring new areas of growth. One such area is in the digital economy. From digital payments to e-commerce and to digital content, there is huge potential for digital technologies to transform the way we consume information, buy things, and buy services. Within Southeast Asia, the digital economy is projected to grow from $300 billion to $1 trillion by 2030. And we are in the midst of negotiating an ASEAN Digital Economy Framework Agreement that could potentially double the size of the digital economy to $2 trillion by 2030. Through the DEFA, we aim to align digital rules and standards, promote interoperability of our digital systems, such as digital identities and payment systems, and therefore enhance cross-border digital trade. This will make Southeast Asia a more attractive location for investments into digital infrastructure, goods and services, and open up new opportunities for businesses in the region. Another growth area is in the green economy. To enable the transition to net zero, Asia will need significant investments into low-carbon energy, including solar, hydropower, and wind. According to a 2024 report by the Bloomberg New Economy Forum and Gen Zero, Asia Pacific will need to triple its annualized investment into energy transition technologies to $2.3 trillion by 2030. And within ASEAN, we are pushing ahead with our vision to develop an interconnected power grid that will facilitate the trade of low-carbon electrons across borders and enhance our collective energy resilience. The demand for carbon credits will also open up opportunities for carbon markets and trading. By working together across Southeast Asia and even across the Asia Pacific, we will unlock more opportunities in the digital and green economy to build a more inclusive and sustainable future for our region and our people. Singapore is deeply vested and invested in the growth of Asia. We believe that Singapore will do well when our region does well. This is not just because we are geographically located at the heart of Asia, but more importantly, because we are a hub economy that facilitates the flow of people, capital, goods, and ideas. I'm therefore heartened that MBCU has chosen to launch the new CONVERGE Live in Singapore. This reflects MBCU's confidence in Singapore and reaffirms our position as a business hub. Businesses, entrepreneurs, and investors can use Singapore as a springboard to explore new opportunities in our region. We will work with businesses to drive innovation and transformation. One way we will do so is by supporting companies to set up centers of excellence in AI. Last week, we announced that we will work with cloud service providers to provide companies with access to cloud compute credits, training programs, and consultancy services to develop and scale AI-enabled solutions. Through this enterprise compute initiative, we hope that companies will accelerate the development and deployment of AI to not only drive greater productivity, but also create new products and services. We will also work with entrepreneurs to build their new ventures here in Singapore. We will launch a global founder program later this year to anchor and attract experienced founders here. If you are someone who has built a successful startup, developed a major new product or business line, or even someone who has made significant scientific or engineering achievements such as in AI or deep tech, we will provide dedicated support for you to grow your ventures here in Singapore. And last but not least, we want to work with investors to build a rich and diverse financing system in Singapore. We have established a global investor program for investors who are keen to base themselves in Singapore. We have also established various mechanisms to catalyze investments into companies based in Singapore, as well as to facilitate the region's transition towards net zero. For example, the Monetary Authority of Singapore recently announced that it will launch a $5 billion equity market development program to invest with selected fund managers with a strong focus on Singapore stocks. The MAS has also launched a blended finance initiative called Financing Asia's Transition Partnership, or FAST-P, to bring together public, private, and philanthropic partners to support Asia's decarbonization and low-carbon energy transition. To crowd in commercial capital, the Singapore government will pledge up to $500 million to match dollar-to-dollar concessional capital from other governments, multilateral development financial institutions, as well as philanthropists. Amidst these uncertainties, challenges, and even disruptions in the global economy, it is even more important for Asia to come together to deepen our integration with one another, as well as with like-minded economies, so that we can open up new opportunities for trade and investment, especially in emerging digital and green economies. And as the title of this event denotes, Singapore stands ready to be a place where business leaders, entrepreneurs, investors, and key decision makers converge to explore opportunities in Asia, collaborate to forge strong and deep partnerships, and create real and inclusive growth for the benefit of our businesses and our people. I hope that CONVERGE will spark new ideas, fresh collaborations, and strong partnerships, and that you will also turn today's conversations into tomorrow's reality. Thank you very much.
Thank you very much to Singapore's Deputy Prime Minister Gan Kim Yong. We were honoured that you came here today to converge with us. Please enjoy now a short video which showcases where exactly Singapore is standing in the world today.
Ah, the world. Lately it's as though everything's been turned upside down. Not here, though. Here in Singapore, you'll find a safe space for all kinds of ambitious risk-taking. Our clockwork precision, it leads to some radical innovations. And because we're oh so predictable, you can confidently venture into the exciting unknown. Because nothing today thrives without trust, stability, and safety to make your next bold move. Was that bold enough? Good. Your business needs Singapore.
Wonderful. So now just a wee bit of housekeeping as promised to ensure that your journey over the next 2 days with us is going to be as smooth as possible. So the first thing to know is we have a CONVERGE Live app, and I do encourage you all to download that app, because then you're going to have everything at your fingertips. You can, of course, check out what's coming up. You can also contact other delegates who are here today. You can set up a meeting. You can register interest even with our sponsors. You can book in a massage or even a mindfulness session. I probably need a mindfulness session right now to just calm down and not stumble over my words. We also have the QR code up here on the screen for you right now to make it nice and easy. It's also at the registration point and at various other information points around this level 5. You will also find food and beverages, so you can grab some coffee, tea, cold water, warm water, whatever floats your boat. You can get a grab-and-go snack if you like, or you can get some food and you can sit down and talk with the other delegates. We've created a space for you to do all of that to my left here in the networking zone. So please do avail yourselves of the networking zone. And of course, if you've got any questions, we've got people roaming about, ambassadors here for CONVERGE Live. They're wearing black with a CONVERGE badge, so they're very easy to find. Now, are you ready to be impressed? If you got here early, you might have had the opportunity to take a walk around this level 5, because we have taken out this entire space and created wonderful zones for you. Let me tell you what we've got. They're experiential zones. There's the road to happiness, there's the sustainability zone, the tech experiential zone, and the wellness zone. So we've got lots of things on deck for you, and not just what's going to be here at the main stage. But don't go anywhere, because coming up on the main stage right now, we have 2 people who you do want to stick around for. Please welcome Marc Benioff, Chair, CEO, and co-founder of Salesforce, and Ray Dalio, the founder and CIO, mentor, and member of the board of Bridgewater Associates. And please also welcome to the stage, all the way from New York, their CNBC host, Sarah Eisen. Welcome.
Hello. Hi, everybody. Good morning. It's great to be here. It's great to see you. I can't think of two bigger heavyweights when it comes to investors and builders and the economy than to kick off this conference with me, Marc Benioff, Ray Dalio. And some of you may be wondering, how did they end up on stage together?
How did they?
So it goes back to this dinner we had, three of us, actually four, including Ray's wife, in Davos, Switzerland in January. And I thought, these two, first of all, it would be explosive in terms of just ideas and brilliance, but they're fun and they're good friends, and they both love Singapore very much and have been here, Ray, how many years?
32.
32 years. Also, I have fresh off the press, Salesforce to invest $1 billion in Singapore in 5 years. You've been in this country for a very long time. That deserves an applause. Why are you investing $1 billion in Singapore, Marc?
Well, you can see this is the hub of Southeast Asia, the vitality, the incredible energy, the people. It's, we sit here in the legacy of Lee Kuan Yew, the great founder of the country, who had this tremendous vision of a place in Asia that could have a level of law and order and civility, and as Ray says, a level of cosmopolitan that attracts the best and brightest from around the world. And we've had a fantastic experience here. We've been here for about 25 years at Salesforce. We're investing another $1 billion in our operations here. And we don't just do sales and marketing here. We also do extremely advanced artificial intelligence development. We have dozens of some of the very best AI engineers in the world here in our Singapore Research Center. We've built some incredible foundation models. We've done that now for more than a decade. And it's incredible what can happen in Singapore.
What about you, Ray? You've been here for a very long time. You travel everywhere in the world. Everybody knows you. Everybody wants to talk to you. Everyone wants advice from you. How did you settle on Singapore?
Because it's so great. I think it brings up the subject of what makes a great country, right? And so you think about Lee Kuan Yew and the values. Basics. If you want a great country, educate your children well, make them capable of earning money, being productive, and also civil with each other. The way that this place works, from the highest level all the way down, in terms of financially sound, civil, it's just human capital development in a way where, I love the people, I love the environment, it's a can-do place. And there's relationships. When you have a 32-year relationship over that period of time, that's a love, that's something that's very special. So it's like family.
And the malls. I'm obsessed with the malls here. It's my first time.
You've mentioned the malls quite a few times, Sarah. Why is that?
Because I love malls, and they don't do malls like this in America. So I want to have a discussion with you guys about what you're thinking about, what everybody's thinking about, the changing world order, as Ray describes it. It's happening quickly. I think there are loads of things we can talk about, from the politics to the geopolitics to the economics. But Ray, it might be helpful if you could just frame the discussion for us around the way that you think about the changing world order and the 5 themes that you watch, everything from technology, which we'll get into, to internal and external conflict. Just tell us where you sit and how you're coming into the discussion from a historical perspective, and then we could talk about where we think we're going.
I think that because what we know about is only the things that we experience, we don't really have a good sense of the arc of history and how these cycles take place. And so think about it that there are orders. There's a monetary order. There is an internal political order. An order is a system of operating. And there's an international geopolitical order. And all of those orders end. And then there's a transition to a new order. All types of governments, everything. So So they typically end with great conflicts. Wars, typically. An internal civil war, changes in order, monetary order, and so on. And there are 5 forces that drive that over that period of time. Those forces are, there's a debt, money force, economic force, and how that works. So there's a big cycle of increasing debt relative to incomes until you can't do that anymore. And we have a big monetary issue that is going to lead to a big change in the monetary order that we're now facing. The second is that there's an internal political order, and then that cycle, there's the left and the right, and when it gets to the point where there are irreconcilable differences over money and values, then there is a fight, and that is the internal order. So we are changing internal orders. The third is the geopolitical order. In other words, what are the rules of the world, of how countries interact, and who determines that? It's determined by the winners of the last war. They set out the rules and they have the system. But there's a change in the world order as rising powers challenge existing declining powers. And so we are seeing that change in the world order from one that was unilaterally, really largely controlled by the United States to something that's very different. So that's the third force. Throughout history, the fourth force is actually having a bigger impact, killed more people than wars and so on, is climate and acts of nature. Droughts, floods, and pandemics have killed more people than wars and toppled more orders, and certainly that's a big force. And through history, the fifth force is man's inventiveness, particularly of new technologies. And so when we think about this force, what an enormous force through AI and so on, and they interrelate to each other to create big cycles that go from one order to another. And so we are now in that transition to new orders of all of those forms.
Marc, how do you take that? And I know you guys are very close, and you listen. Marc sends me sometimes when you're on podcasts or when you do interviews. You clearly are paying attention to all of these macro views and the changing world order. How do you take that and then position a company like yours, Salesforce, for the future, where you're trying to build the AI, the agentic future? I know you want to talk about that, but how do you think about, how do you process the debt cycle and the changing political order internally and externally and position for success?
Well, I think technology is part of it. So technology is a continuum. It's constantly getting lower cost and easier to use. And I think that when you hear about Ray's vision of changing world orders and all the different systems and how they are resolving and how they all will end up in conflict and then a new order will emerge, I think you have to look at it also that technology is the continuum that slices through all of that. So technology is constantly getting lower cost and easier to use. The first time I came to Singapore, I remember it very well. It was more than 35 years ago, maybe 40 years ago. I was with Oracle. We were introducing client-server computing. It was very important for Singapore to become a leader in client-server computing at the time. I enjoyed many incredible times here. And then when I started Salesforce, I knew Singapore would want to be a leader in cloud computing. We even worked very closely with the Monetary Authority of Singapore so that banks could do their operations here. We worked hard with all of our commercial customers to make sure that we had data residency here. And it was extremely important for Singapore to have the expertise and capability to participate in what has become the greatest revolution of our time, which is artificial intelligence. Now we're moving into the next wave. The next wave is the biggest, most exciting wave of technology in the history of technology. It is the shift to digital labor. It is the $3 to $12 trillion global shift where we are going to see digital labor take over. In Singapore, I've already seen it. I was in a restaurant, I'm sure everybody knows. I was in a restaurant, a hot pot restaurant, which had incredible robot workers working in the restaurant. That's an example of digital labor. I was outside of my hotel and also outside of a shopping center, and there was digital security guards walking around, and that was a common thing. I even saw a digital gardener and lawnmower. So digital labor is part of what is going on in the world today. And at Salesforce, that also means agents, an agentic layer, which is that these robots are manifestations of software, and our big customers here in Singapore are deploying agents. And the big example is Singapore Air. We had dinner last night with the CEO of Singapore Air. Amazing visionary. We've worked with them for more than a decade to make sure they have great customer service in sales and service and marketing, whether you're using Tableau or Slack or field service, all of our capabilities, getting all their data into a data cloud, but then building agents so that these agents are going to be able to interoperate with their customer and deliver that great Singapore Air service in a digital way. So that idea that agents and agentic technology is the next wave, I already know Singapore is going to lead it, and that when we want to find out the great companies doing things with the highest level of technology, it's going to happen here first.
Does that, Ray, make you optimistic? Because a lot of the other trends and forces that you describe, I think, are somewhat pessimistic, right, in terms of the debt cycle and everything else. But what's happening with technology, does that make you more optimistic about the future?
Oh, yeah, I agree with Mark that it's the biggest industrial revolution of all time because it affects all thinking. And all thinking means that we can go much more advanced in so many different ways in raising our living standards. The question in all of these things is how are we going to deal with each other? Okay. Because like great new technologies, they can be used for wars. They're going to create great displacements of people. You know, we have a big issue in terms of when we look at the United States or a country, we look at it as a whole. We don't realize the differences. And in a country of 330 million people, 1%, 3 million people are responsible for most of the changes, if you were to look at that. They are the ones who go to the great universities and they're innovators and they make the unicorns and so on. Then the other top 10% is those around them who then do well. That next 30% is doing okay, and the bottom 60%, it's an amazing thing, has on average a reading level that is below 6th grade. 60% of the population has a reading level that's below 6th grade and is not productive. There are many unproductive people, and because they're unproductive, then they don't have the incomes and so on, and we have an issue. And that big social issue is important. So I think the question is, above all else, you know, I don't know if it's always better to have better health care and better all the things that are going to come about that. But so much depends on how we're going to be with each other. We were talking about Bhutan, right? Bhutan is a wonderful place. They don't have nearly as much of all of this. But if you look at happiness ratings and even health ratings across the world, it's in many cases better in some places that don't have that. So the question really, I think, is how we're going to deal with each other. Are we going to fight? For example, the new technologies, AI technologies, are going to be able to be used for weapons. And those decisions are going to have to take place in a speed that's faster than humans' capacity to think. So these things are going to be let loose on each other. So how we deal with each other is a paramount. You know, the interesting thing about Mark and I, in terms of our friendships, we've got a great friendship. We really enjoy each other. And it's not mostly about these things, about two things. If I was to pick, we have, of course, these, but meditation and ocean. So isn't that interesting?
Both love the oceans.
Well, and the ocean and meditation. And so that notion of how we are with each other and that element of peace and equanimity and all of that, I think will be particularly important in the next 5 and 10 years.
They're happier in Bhutan because they meditate?
Meditation is whatever success I've had in life has been more due to my meditating than anything else. And I think he would say the same. If there was the best advice that you could give anybody, I think it would be to meditate. And that's because it gives you a calmness, an equanimity. It gives you a sense of spirituality, which means, by spirituality, I mean connectedness to the universe, connectedness to people, that sense. So meditation is, I'd like to slip in meditation into this conversation.
No, I know, and you guys have both convinced me that I need to practice and learn. Hopefully you'll be my guru.
We've been talking about that for a while.
Yes, the secret to success. But talking overall about technology, Marc, it's hard not to be excited about the future you paint, but there's a lot of hype around it as well. And I just want to bring in, we're CNBC. We've been watching the markets lately. It's been brutal for some of these technology companies out there. And I just wonder how you think about the hype versus the reality in the market and within corporate America.
Well, you're right. I mean, when we look at the last few years, the hype, I mean, honestly, Microsoft has really disappointed so many companies. We heard it last night at our dinner where they were going to
dash Microsoft.
Well, I mean, you heard it last night, right? You were at the dinner and customers really saying, they kind of started with, Copilot, but they've really not found the value that they want to get to with AI, but now we're really seeing that happen with the agentic vision of the world. The idea that AI and agents can really be an opportunity for an incredible level of productivity, employee augmentation, another level of customer intimacy with customers. And I see when I see our large customers deploying these technologies, it's very exciting to me because, what we like to do is really go from the hype cycle and then deliver the value cycle. Really show, okay, this is how you're really going to deliver it. I mean, we saw one customer at the table last night, we won't give the name, where they were very frustrated because they were not getting the value that they wanted because they
trying to see how it fit into their future.
They just couldn't get it. They're like, oh, I know I need to build an agentic layer. Every company is going to take what they've been doing, which is applications. And why applications are important is that humans, like us, we use applications in sales or in service or in marketing or in commerce or field service or all these areas. And then we aggregate that data into these data clouds, and those data clouds have to be federated. That means connected off and grab all the data from the company. This is very important because on the next layer, the agentic layer has to be very smart and very accurate. And that agentic layer requires two things. A, the data, but B, the humans. Because it's really right now about humans with AI that are going to create the success. And if you extract the humans, you're not going to get the level of success that you really can achieve in today's AI world.
I'd like to pick up on your point, okay?
I was going to ask you if we're in a bubble, too, so maybe you can address that.
If you just look at history and how things work, you can understand that, okay? What happens is, when we call hype, throughout the Industrial Revolutions, throughout history, through the dot-com period and the dot-com bubble, there are new technologies that are remarkable and reshaping the world. And then people get excited about those and they don't pay attention to prices. That they think that because it's a great new technology, I have to own it and everybody else owns it. And because of that, they don't pay attention to price. And so this looks very much like 1998, 99 to me, in a sense of think about that digital revolution. Wow, that was fantastic. And it continues on. But it's better to buy a bad company, stock in a bad company at a cheap price, than it is to buy stock in a great company at an expensive price. And so that's the cycle. Now you have a situation where interest rates can go up because we have a supply-demand situation. The pricing of equities, in many of these cases, is high relative to bonds expected to. If you have a rise in interest rates. So when we're looking at it also, let's say the hype, the superscalers. It's not going to be the super scalers, I think, that are going to make all that money. They just think I need a bet on AI. It's the usage. It's the how it's used having effect that, like Mark is describing, or not. So for me, it's like, how do I use AI to better investment decisions? That, or how do you, on Singapore Airlines or any of those, that is where the impact is, not in, I think, in the
Are there any
scalers.
companies?
So you have this
Sure.
bubble developing in a precarious world economy that has the effects that you're seeing. It doesn't mean that technology's bad. It just means we have the other four forces that are bad, and we have high prices.
Another way to look at that is we've all heard about these multi-hundred-billion-dollar data center
CapEx
investments every week. There's another multi-hundred-billion-dollar data center investment happening, and we have not been doing that. We're a software company, so we're all about building that software over the last 26 years to run on those data centers, and we've just never seen prices this low for deployment because it is a huge level of investment, and when you get this huge level of investment, it drops prices. And that means that for us, we're able to run and deploy at a very low cost, and it's a commodity product. You know, data center against a data center against a data center, a chipset against a chipset against a chipset. These are fundamental, commodities. So whether we're running on Alibaba in China or Amazon or Google or maybe somebody else in the future, these are just commodity centers. And the prices have never been lower, so you have this opportunity to take advantage of companies who are competing with each other to be the next generation hyperscaler. For our perspective, we want to be the software hyperscaler. We want to run across all of them and offer the lowest price for our customers and make it the easiest for deployment and to guarantee their success.
Do they need to be spending hundreds of billions of dollars, the Metas and the Googles and the Microsofts and OpenAIs of the world, on these chips and data centers?
Well, I think that there's two schools of thought. I think there's a hypnosis that they think they need it because of the level of training. But I think that what you just saw with DeepSeek and also with Alibaba with their Quinn model is that you don't need this kind of technology. So I think it has to be rethought. Exactly what are you doing and why are you doing this? Because you can get into a group think in technology also. And this idea, do they need it? Well, maybe they do, but also maybe they do not. But no matter what, that from our perspective is, it's great for us because we'll be able to deploy on whoever you have as your hyperscaler, and we'll be the software hyperscaler. We have our product, Hyperforce, which runs on every hyperscale infrastructure.
Broadly speaking, Ray, we have seen a bit of an unwind in the U.S. market. There's this idea, and President Trump said it himself, that he wasn't specifically trying to avoid recession, and he seemed cool with the idea. They're rebalancing everything when it comes to trade, potentially the U.S. government deficit. Does it make you think differently about the U.S. stock market and our prospects for recession in the U.S.?
Well, I think the first thing is the debt issue. We have a very severe supply-demand problem. So we think there's debt, and some people think, oh, we'll handle it because we've handled it so far. I don't think they understand the mechanics of debt. By the way, I've written the draft of a book that anybody can see on social media, on particularly LinkedIn, that goes through the mechanics of the debt. But there's a supply-demand problem so that they have to sell a quantity of debt that the world is not going to want to buy. And that's a set of circumstances that is imminent. Okay, that's paramount importance. Then we're going to have to deal that the deficit must go from what will be projected now to be about 7.2% of GDP to about 3% of GDP. Otherwise, there will be a supply-demand problem. Okay, that's a big deal. You are going to see shocking developments in terms of how that's going to be dealt with. Things that may not have happened in our lifetimes, but things that have happened throughout history. So that's an immediate consideration.
Wait,
the interest rate.
What do you mean, austerity, like that?
There are there are many. What do you do when you don't have an adequate supply-demand balance? There may be restructurings of debt. There may be exerting pressures on countries to own the debt, to buy the debt, political pressures on countries. There may be cutting the payments to some creditor countries off for political reasons and so on. So there may be monetizations of debt. If you look at history and see the repeating of what do countries do when they're in this kind of situation, there are lessons from history that repeat. And so just as we're seeing political and geopolitical shifts that seem unimaginable to a lot of people, to most people, if you just look at history, you'll see these things repeating over and over again. So you will be surprised, we will be surprised by some of the developments that will seem equally shocking as those developments that we've seen. So when I look at it, I think that these are of paramount importance. Then we're going to deal with the internal. So there are consequences. It's correct that if we can eliminate waste, there's terrible waste in the government, and there's terrible waste in our society, and it's a reality that 60% of the population is relatively unproductive and living on the society. If we don't become more productive and efficient, which means that we can use technologies and we can manage things better, there's a great deal of potential in that. But it has consequences. So many of the actions that are taken now have these second-order consequences. We're talking about Barbara, my wife, and we were talking about the state of Connecticut, which is the richest, second richest state in the country. 22% of the high school students have either dropped out of high school or are failing with absentee rates of greater than 25%. So you have a situation, and now we're going to cut off food programs, school lunch programs, and so on, in very big movements. How do you deal with such a complex mess of unproductive activities and all of these things in the first 100 days of administration? Because you have to make the changes in the first 100 days or you're not going to make it. And so these are the questions, I think.
Well, Mark, you bring in Elon Musk, I guess, is one way to do it.
Well, I was going to ask Ray, since we were all together, in Davos in January, what has been your biggest surprise in the last 90 days in terms of what has happened in terms of this series of announcements and changes? Has there been anything that's been shocking or surprising to you?
Not really. If you read history and you know the book that I wrote and all of that, this whole arc, there's the degree of the speed of it. So that they're getting at it fast. And so this movement to a confrontational, big changes in the world order, I think has been baked. It's going to happen. And the fact that they're operating so quickly to that. And that'll lead to change questions. Does the legal system, how does the legal system work? And so on. But if you have to read history and you see these things, so would I be surprised if the legal system didn't hold up well? No, I wouldn't be very surprised if the legal system. Would you be surprised if the legal system? You have to look at the mechanics of the legal system, right? You get into who controls what, who controls enforcement. I'm saying that get how the movie happens. Okay, watch that over and over again and watch the movie happen. Of course, it's all shocking in a sense, but it's not all that surprising because it's happening according to script.
Has anything surprised you, Mark? What do you think? What's been the biggest surprise?
Well, I think that what Ray is saying is really important, which is I think we all agree on what the what is, of what needs to happen. We have to get to a balanced budget. We have to get to much greater, fiscal responsibility. We can't just be spending like drunken sailors for the rest of our lives. And that what is something that has been addressed in certain administrations. We were talking about the Clinton administration delivered a balanced budget. That's the what. The how is a different point of view, and the how can be presented in different ways. And the how can also be about speed The how can be also about oratory, about narrative, and some aspects of the how are definitely surprising. Some of them are entertaining. But I say that from the first Trump administration, we know you can't expect or know what the how is going to be.
That's exactly right. I just want to say it's very simple. 3% of GDP. If they don't get to 3% of GDP, a budget deficit of 3% of GDP, we're going to have a problem. Okay? Now, how they do it, that's a different question. They have political problems. I think every member of Congress and the president should say 3% of GDP, and we have a pledge, one way or another, we're going to get to 3% of GDP.
Can they do that without taking us into recession?
Yes. If you look at how that happened in the 1992 to 98 period and so on, there were three influences on this. There's the spending, there's the taxes, and taxes means tax revenue, not tax rates. And then there's also interest rates. And what will happen if they do that right program, you're going to have lower interest rates. One of the biggest effects on their budget deficit is the interest rate. The interest rate cost is about $1 trillion a year, okay? So interest rates have a big effect. If you improve the supply-demand balance, you will lower the interest rates, and you'll also build a confidence and so on. It's very doable. It's only politics.
To that point, I think also what Ray didn't add then, if you do end up with that situation where interest rates are coming down,
which
the stock
they are,
market will then go up because funds will then flow into the equity markets. Now, that's not what's happening right now. You see this kind of, because it has to do with volatility, and the markets do not like volatility.
That's exactly right. Just following through on what Mark is saying. Not only does it lower the debt service cost on the debt, but because of the nature of pricing, it causes assets to go up, and it makes for a better economy. So because there are three.
So does that mean that you would buy the stock market because rates are falling?
Oh, if you have
right
that,
now.
But you have to deal with the deficit.
Yeah.
If they're interest rates are the stock market price is affected as the present value of future cash flows. So it's affected by what the expectation of the future cash flows will be and the discount rate that's applied to that. The stock market is going down because of not because of the interest rates, not because we're optimistic about the deficit. It's going down because of concerns of the present value of the discounted cash flows. So you have to get that balance. Health is good. Healthy things are good.
Well, the question is a trade war healthy? Because the market's also going down on that. I mean, Mark, you sell to so many enterprise customers, talk to so many CEOs. I wonder what you think of the latest tariffs. They're coming from left, right, Canada, Mexico, China, reciprocals coming on April 2nd. What are the CEOs you're talking to saying about it? And is that uncertainty leading to action, lower enterprise spending, for instance, and a potential recession?
Well, again, I think that, you line up what you're saying with Ray. It's about the what and the how, and in the what is, yes, do I believe reciprocity is good? Reciprocity can be very good, so you have clarity, if one country's treating you this way, you're treating that country with the same reciprocity.
So you're on board.
But it's the how also. And the how is very important. And you've got to put the what and the how together. And if you can't put the what and the how in a consistent, clear, and meaningful way, then you could end up with high levels of volatility and conflict. And I think that plays into then Ray's, worldview.
Yeah, where does the trade tensions and tariffs ratcheting it up fit into, whether it's the external order or what you ultimately think will happen as a result of all this?
It's just an extension of the patterns of history. So for example, if you looked at European countries in the 30s, like Germany in the 30s, and take an economic policy, there was write down the debts, create tariff revenue, because you can get a lot of money from tariff revenue, and then build up your domestic, be nationalistic, be protectionistic, be militaristic. That is the way these things operate. So I would say, again, lessons from the past of what that looks like. And the issue is really the confrontation of all of this, the fighting of all of this. So tariffs are going to cause fighting between countries. I'm not, what type of fighting? I'm not going to, maybe it's military, but I'm not necessarily talking about military. But think about U.S., Canada, Mexico, China, and all of those types of fighting. There will be fighting, and that will have consequences. And I think that's the main thing to pay attention to.
Do you worry about what it'll do to the global economy?
Do I worry about the global economy?
The global economy as a result of all the trade barriers.
Of course, I worry about the global economy and our global well-being because of the things that I was mentioning before, which is having to do with the sensitivity of interest rates, the debt situation, how we're dealing with each other. But I also should emphasize that in history, you can see that there are the major countries, and then there are the neutral countries. And the neutral countries do extremely well during these periods of time. They get people and capital that go to them. They are able to navigate in a certain way. The making of great prosperity and so on, it doesn't affect the whole world. There are beneficiaries of this too. Like Singapore, if it remains a neutral country, and it's a very difficult thing to do, and it operates this way, then it becomes great opportunities. And so the world will vary when we make it. There will be a world situation that I'm concerned about. Yes, I'm clear on that. But there's also this other world, these other worlds that, get through it and are not involved.
I mean, neither of you, I would describe you both as very neutral politically, right? For those wondering, like you don't give money, Ray, to a certain party or a political candidate, right? You're very...
I'm like a mechanic.
Mechanic.
Or a doctor. What I'm trying to do is, there's mechanics, and all I want to do is to try to convey the mechanics. How does it work? Because if we understand how it works, then it's up to others to make the choice. So I'm not an ideologue. I'm just sort of like a doctor or a mechanic who says, I think it works this way, and what do you want to do about it? I'm not political. I don't, because I think that the fight between the two is a big problem. I mean, I just want to have understanding. That would be my main
He's one of the neutral countries.
You're a neutral country, too. You kind of have to be in business, right?
What's that?
You have to be in business a neutral country, too.
I definitely am more in the neutral camp. I have not always been, but I think when I bought Time magazine in 2018, that's when I said, I'm not going to be aligned with any particular political stance because I felt I needed to do exactly what Ray's saying. I need to be more about describing what is happening and not about taking a side.
Although you guys made President Trump Time Person of the Year, did you get a lot of pushback from that?
Well, I think that, we always make whoever won the President of the Year the Person of the Year. So that's not a political statement.
Okay. Well, that's fair. A lot of this, what we're talking about, has, and because of where we're located, thinking about U.S. versus China, on where we're going when it comes to trade, where we're going on technology. Does the U.S. have a leading edge on AI against China, Mark?
I think that both have different approaches right now because, I wouldn't say that the United States has a significant leading edge. You just saw one of the leading models, which was DeepSeek, emerge, but also now, as I mentioned, Alibaba's model as well, and there's other models as well. And there's different approaches with chips. So while there are U.S. chips that are very good and very competitive, as we saw in the training of the DeepSeek model, there's different approaches with chips, and that nobody has a monopoly on training chips or on inference chips.
Where do you think this is going, Ray? We just took up tariffs 20% on China from the United States. How do you think they're going to deal with that and also the coming technology battle?
Well, the United States is uniquely competitive in inventing, and particularly inventing the best chips. It's not uniquely competitive, it's uniquely uncompetitive in producing them. China is behind, but not by a lot, in the best chips, and they try to get the best chips. But they're ahead in making more chips and making those chips, producing those chips, and having those chips work together in applications. So when we talk about the implication of this, and I say it's the usage of the technology, not necessarily the making of the best and most expensive technologies, it is the usage of those technologies. The applications, they're ahead on the applications, and they're integrating chips with robotics, and way ahead on that. So the application and the usage, I mean, there's going to be a big competition, but that's what it really looks like today.
That is a very important point that Ray just had, which is that, we're moving into the digital labor revolution. It's this $3 to $12 trillion opportunity. It involves agents and digital agents in an agentic age, but it also behold a robotic age. And in the robotic age, who is going to make the robots? Well, I can say the robots that are in production here in Singapore that I've seen are all Chinese-made and manufactured robots. We also see the Chinese complex being able to deliver this next generation of electric and robotic cars that is coming out at an incredible level of speed. I think that's very impressive what the Chinese have been able to do with this robotic age. So the robots, the agents, AI, this is all part and parcel of the future.
Mark, what does the robotic age mean for the workforce?
Robotic age means for the workforce that we are going to work hand in hand with agents and robots. I've told my employees, my customers, I'll be the last CEO of Salesforce who only managed humans. Even today, on our site, help.salesforce.com, where we get 60 million customer service requests every single year, if you go to that site, you'll see that there are thousands of agents ready to help you and thousands of humans. We have 9,000 support people. We also have thousands of agents. They're all standing by to support you on help.salesforce.com. Now I'm having to manage both of those entities and keeping them working, in harmony and making sure that the best functionality goes to the best asset. Well, I think that in the same way, you're going to see that turn into, and like we had a conference last week in San Francisco at Trailhead DX, one of our agents we deployed as a robot. So we just manifested the agent into a physical robot made by a Chinese company called Linktree, and they checked in the attendees and answered questions for the attendees, and the robot worked hand in hand, in part and parcel, with the human workforce that was happening. And it's to get everybody thinking about, this is about humans with agents or humans with robots working together to create customer success. What will that look like? And you can see that here. I gave my example. The Hot Pot restaurant is a good example. Everyone here has probably been to that restaurant. It's in the shopping center. It's amazing. And the spinach leaves, came down the aisle from the robot, but the robot did not have the ability to put it into the steaming hot water to make, the delicious, lunch. So there was a split of labor at that point.
Right. I mean, what would you tell, Ray, governments when they ask you what to do about jobs and the social safety net in a world of AI and robotics? There's going to be a lot of rebalancing, right, of the labor force and of society.
One key thing is this. I live in a very small rural town, and in my town, I think all the time, how is it going to change my small town? Maybe not Singapore, but what about my small town? And a lot of the things that are in my small town were not going to change. But two areas that I hope will change, number one is, in our hospital, we have very few doctors, and we certainly don't have doctors who are specialists, and they don't have the expertise that when I'm in my other home, San Francisco, that I have the best in the world. Like here in Singapore, we have the best in the world in terms of medical care, every specialist, every discipline, from oncology to radiology to orthopedics, it's the best in the world. But when you're in a small rural community, which is the vast majority of the world, those doctors are not there. It's very much an elite phenomenon. Now, though, they are augmented and they are extended, and they do have the ability to have access to the very best technology in the world. Another area is schools. And I think even in our schools, in our little town, we just don't have enough teachers, and we don't have housing for the teachers, and the teachers can only know so much. But these teachers now can be augmented and extended with this technology in a way to make them the best teachers in the world. So in education and in healthcare, we can see that as two democratizations. And by the way, when we talk about what are two things that have made Singapore a great country that Lee Kuan Yew said must be the best in the world, it was healthcare and education. And if every town can have that Singapore quality healthcare and education, that's awesome. And that is the world that we are about to work into.
Those are good examples, but Ray, there also has to be some sort of plan, right, for jobs?
Yes, I agree with everything that Mark says, and it comes back to the same thing, which is it depends how people deal with each other, how the system works. So the choices. So what do you do? Let's say income. How do you make most people productive in that environment? Or what does it mean to be unproductive? And so like he gives the example of the healthcare and education. If you make them productive too, but a world without people being productive, so there's going to be a lot of figuring out that's going to have to go on. And then this figuring out is like, can you organize yourselves to not fight over everything and do the right thing? We have not been able to do that. If we look at our cities and the crime rates and the deterioration in the infrastructure and all of that, it's all how people deal with each other, I think.
So we're out of time, but to wrap it up, I mean, it sounds like, so we have to, how we deal with each other, we take care of each other, the friendship, we're bullish on Singapore, we're bullish on meditation, we're bullish on agentic AI.
And we got bullish on the trees.
And we're bullish on the trees. And the ocean.
By the way, you got to say one thing about Singapore. This is the tree country, and I love the trees. We started onetree.org, brilliant tree phenomenon.
In the middle of them all?
Everywhere you go, you see tree equity. You see more trees getting planted, trying to bring out more songbirds, absorb more carbon. Singapore's a great country. Their commitment to the trees is pretty admirable by every possible use case.
The robots and the trees. We'll leave it there. Thank you, guys. I'm so glad we did this, and very honored that you are both here for this discussion. Thank you.
Thanks for inviting us, Sarah.
Thank you. That was an absolutely fantastic way to start the day, wasn't it? I was completely glued to my seat, and I'm sure you were as well. So thank you once again to Ray Dalio and Marc Benioff. Of course, there were many thought-provoking comments that the gentleman gave us today, but two nuggets that I plucked out, one from Marc, that we can't keep spending like drunken sailors for the rest of our lives with regards to fiscal responsibility, and from Ray, how are we going to deal with each other in the future? How are we going to be with each other? And of course, meditation is the key to success. Thank you to Sarah Eisen as well. She's going to be doing heavy duty for us over these 2 days. I'm not sure she's going to get to any of those beautiful malls that you have here in Singapore, but I'm sure she'll try her best. But let's keep the momentum going, shall we? I would like to now invite onto the stage Joe Tsai, who is the co-founder and chairman of the Alibaba Group. And to host this fireside chat, we have from CNBC in New York City, Mr. David Faber. David, over to you.
Good morning, everybody. Great to be with you. Joe, thank you so much for being here.
Thanks, David.
In front of the waterfall. We're here to converge, whatever that means. And I wanted to start off sort of on that theme, kind of bring a lot of things together. I'd love to start off actually on sports. I know Mark and Ray were talking a lot about AI. I want to get to that, and certainly Alibaba, China, U.S., if we can a bit. But You own a lot of sports teams in our neck of the woods in New York, where you spent some time as well. Of course, the Brooklyn Nets, the New York Liberty, champions of the WNBA, a couple of lacrosse teams, I believe, as well. When you think about these investments, I'm curious, many who invest in sports certainly are aware of the asset values rising over time, seemingly inevitably in many of these areas. Is that the play, ultimately to create value over time through the asset value and a potential sale at some point, or do you really look for a return season after season?
For a sports owner, the return season after season is every season you're trying to win the championship. So you want to win games, right? You're not looking at the income statement of the team from season to season. So I guess the final payoff for me is less financial. Even though the financial aspects are important, I have to make sure that's sort of bottom line, the investment can make sense. But at the end of the day, it's through the love of sports. I have a passion for sports. That's why I invested in these teams. Now, I have a few principles when I do make these investments. Those are sort of, financial, commercial principles. Number one, I want to invest in a league that is where the best players in the world play. So if you look at the NBA, the NFL, around the world, the best players play. It's different in soccer. The best players are playing in Europe. And I don't want to touch European soccer because they don't have a salary cap, and it's a very, very different system, right? And you're also competing with sovereigns when you get into that. But best players around the world come play in the league. And the second thing is you look at the media value. So you really need to pay attention to audience, either online, streaming. I think the world is moving towards streaming. But still, linear TV is still quite important. So the NBA just, completed a massive deal, 11-year deal with a number of broadcasters,
including my own, of course. NBC.
Of course, welcome back to the NBA.
We paid quite a price for that as well, Joe.
It's worth it.
Is it going to be worth it? Because ratings actually have not been as strong, and I think there is some concern. Are you concerned at all about it?
I'm not concerned about it. I think I just saw some stats. The latest Lakers-Celtics game, something like 4.5 million viewers for a regular season game. That's really extraordinary. I don't worry about it because these are the best players in the world, and they do compete, and they're stars. When the lights are on, the stars turn on.
You were talking about, though, how you evaluate in terms of some of your rules. So media rights, obviously, is important.
Yeah.
I didn't want to interrupt you. What else?
Well, I think the Americans have done it right in their sports leagues where if you look at both the NFL and the NBA, there's a salary cap. And the cap is really less about depressing the cost of players. It's more about coming to a balance of a fair balance between the owners and the players. So, for example, in the NBA, the players share 50% of the revenue of the entire league. Anything that's basketball-related income, the players share roughly around 50% of that. Now, that's on the top, revenue share, as opposed to profit share. So they are getting the majority of the profits of basketball. And but as long as you set the rules, and the rules are very clear, how you split the economics, then between the players and the team owners, then I think that's a very good framework to work with. The other thing about American sports leagues is it's kind of like a socialist system. Doesn't matter whether you win or lose, and whether you win the championship or not. The sharing of economics is actually quite fair. So, for example, TV revenues are shared evenly among 30 NBA teams, equally. Doesn't matter if you're the Los Angeles Lakers, where you're on national TV maybe 25 times a season, you still share the same TV revenues.
You still see opportunity, though, in terms of buying sports franchises now? I mean, you bought the Brooklyn Nets in, 2016, 17, somewhere in there?
17.
And obviously it's done quite well, I would assume, in terms of the overall asset value. But Is the same opportunity there, or where are you, if you were to look? I mean, is it lacrosse? Is it emerging sports? How do you view it at this point?
I would continue to look at these first-tier sports. I know they seem to be very expensive. I think the latest NFL team just traded for something like somewhere between $7 to $8 billion of enterprise value. The NBA team, average NBA team is like $4+ billion enterprise value now. They all look expensive, but then again, as long as you can grow the fan base, you grow the viewership on television, on streaming. These are global audiences, right? And so there's a lot of upside to go. When I invested first in 2017, everybody thought I overpaid for it, but 7, 8 years later,
you didn't.
I didn't overpay. So. Some of these apps, and here there's a very important reason for this. They call these teams franchises, and it's because it's not like anybody can just start a team. Someone has to grant you the franchise to have a team. So supply is by definition limited. The league controls how many teams are in the league. So for any kind of expansion discussions will have to go through the league, and all the owners have to vote on it. And it's a very economic decision. They have to look at the potential dilution of additional teams coming in, sharing all the revenues like TV revenues and whatnot, versus does an additional team help increase the fan base, increase viewership, and all the rest of the economics that follow.
You've mentioned, I think, in other interviews and the like, that you want control. You obviously have control of the Nets, you have control of the Liberty and on from there, and the arena. But you spent, $200 million to buy a very small stake in the Miami Dolphins.
Yeah.
Which gives you no control whatsoever. Why do that?
My philosophy approaching the Dolphins is very different from basketball. In the case of NFL, first, I'm a football fan. I love the NFL. I play high school football. And the opportunity came up. Steve Ross wanted to sell a minority stake, get some liquidity so that he could put the capital to work in West Palm Beach. He's a big developer there. And I saw the opportunity, and I told the team in my family office, look at this thing as a pure financial investment. I told Steve, I'm not even going to call myself an owner of the team. I'm a guest when I come to Miami. I hope to sit with you in the owner's box if you invite me to come. But I have an economic stake in 3% of the team. The whole business is not just an NFL team, but it's also Hard Rock Stadium. They have Taylor Swift concerts and things like that, very popular. And they have the franchise for F1 Miami, as well as the Miami Open tennis tournament. So it's a collection of great assets under one roof that I invested in.
Could you ever imagine yourself, though, as an NFL owner?
No, I still don't feel like I'm an NFL owner. I have not been.
Well, you actually control the team.
Well, no.
Why not?
I got to take care of the Brooklyn Nets first, which means you need to win first in in the sports that you're already involved in. Right. Yeah. So before, you got to take care of business there.
You mentioned the venue in Miami. You obviously control the Barclays Center in New York City as well, or own it.
Yeah.
How is that evolving the fan experience, and how important is it as an owner of the franchises that play in the arena to actually have control of the arena so that you can evolve that experience? I mean, is it early days sort of as what you can offer fans?
Well, it's like in any business. If you're McDonald's, it's a franchise. It's IP. But it's better if you own the real estate. Otherwise, every few years, the landlord has to negotiate rent with you. Or you have to negotiate rent with the landlord. You have to beg. In the case of sports, the team is the IP business, and the real estate is a venue-based, place-based kind of business. So in our Barclays Center, we not only host basketball games, we have obviously the NBA and the WNBA, but most nights we have concerts. We're generating revenue from renting out the space to artists, and that's a great business. In fact, Barclays Center in the last year is considered, or the actual, according to the objective metrics, is one of the top 3-4 venues in the world. This includes, all the great venues like O2 in London and all the other great arenas in the world. It's one of the top venues in the world in terms of concerts.
Has it proved to be a better investment than the team?
Oh, no, I don't think so. I think in the case of real estate, your upside is kind of limited. You're collecting rent, but teams, the IP value will continue to rise as long as you can continue to build a fan base.
We are talking about convergence here, and I did want to quote something you said recently. You said, we're seeing a media, sports betting, and crypto converging a little bit. And you went on to say, and I'm quoting, maybe for the betting fan base, injecting a little bit of crypto will be interesting. What does that mean?
That's maybe like 4 years ago. I feel like I'm so out of fashion talking about crypto.
Why? Crypto is all the rage again.
Well, it's kind of back, but
it is
still, I think the value, nobody's talking about NFTs right now, right? People are kind of going back to the basics, the Bitcoins, Ethereum, maybe a little bit of Solana, all these.
But this overlap of sports betting and crypto, and certainly there is that. In fact, we talk about it. People bet on their phone. They make investments on their phone.
I'll give you another thing. It's sports betting, crypto, and also stock market.
Right.
I mean, if young people today, especially young men, they love betting on sports. They love playing crypto, and they love to trade in stocks. And if they can do everything in one app, isn't that beautiful? That's great.
Can they do that yet or no?
I think so. I think a number of companies are trying to do that.
I mean, we do sometimes talk about a merger of DraftKings and Robinhood. It's not completely.
Why not?
Right? It's not completely.
I think they will try to get into each other's turf first and compete a little bit before a merger happens.
Okay, we'll see. There we go. One merger predicted potentially. I want to move on to Alibaba. You've been back as chairman since I think it was late May of 18
23.
months. 23,
yeah,
right?
23,
So you return, in a letter to shareholders about a year ago, your 24 letter, you wrote that Alibaba had acquired large company characteristics and you would be going back to seeing yourself as a startup. How important is that mindset?
It's the reason why we exist. We have to exist as a fast-moving startup, see ourselves as a small company, and nimble, and be humble. Large companies move very slow, and it's because the decision-making structure is too complicated. And to get something approved, if you have to go through 19 layers of approval, it doesn't work. So we really needed to get back to nimbleness and act fast. And why is that? It's because our competitors are all startups. We're competing in the e-commerce space, all these upstarts, different formats, like the ByteDance, Douyin format, the live, short video format, all the social type of commerce. They're all startup companies. And how can you compete if your decision is very, very slow and it takes like 10 days to make a small decision against a startup that they'll make that decision in 10 minutes?
How do you change that culture? And I should say, just by point of history, I mean, you and I got to know each other into the run-up of your IPO, which was, 2015?
Yeah.
I mean, and now I think about ByteDance and Pinduoduo. Even Tencent we weren't talking about then. It was around, obviously. The competition in your market intensified greatly. So how do you get the large company, and clearly that was not you were not heaping praise on that idea, but how do you get that mindset amongst your employees back?
Well, first of all, the e-commerce industry is the most competitive industry in the world of any industry. There's really basically no barriers to entry, and that's because the infrastructure of e-commerce, when it comes to logistics and payments, is already provided by a number of companies. It's not dominated or not monopolized by any single player. So payments and logistics is already there. So as an upstart, you don't need to worry about logistics. You don't need to worry about payment. You can just do your e-commerce. And that's why it's so competitive. We decided, when I came in, I partnered with our new CEO, Eddie Wu, coming into the company. The first thing that we said is we need to streamline the company. Instead of talking about Alibaba as 6 different business units, we talked about ourselves as having 2 core businesses, e-commerce and cloud computing. That simplified everything. And our communication, it's very important that we communicate that to our employees. They need to have a simple structure in their minds in order to move faster. And then the next thing is you empower people, especially younger people on the management team that are actually on the front lines dealing day-to-day with users and customers. I think that empowerment is very important. What does that mean? It means that actually letting them make some decisions and letting them make mistakes and train them so that they can recover from mistakes. You have to give them some rope to hand themselves.
How far along are you in the progress towards that goal?
I think from an organizational structure, from a people standpoint, and from messaging, cultural standpoint, we've pretty much completed our work. Right now, it's, in our e-commerce business, it's hand-to-hand combat. We got to compete against our competitors on a daily, hourly, minutes basis.
Another area, obviously, of growing competition potentially is AI, and I'd love to talk to you about that. It's connected to your cloud business in a variety of ways, obviously partially running the compute for your own and for others. You just released a new AI reasoning model, and I wonder, how do you view your efforts there? Is it as a standalone product, or is it really AI that's going to power your e-commerce business in some way?
Yeah, but before I directly answer your question, I wanted to just take a step back and talk about why Alibaba is so excited about AI and why a lot of people in the world are very excited and people are pushing to develop the best AI. It's because if you look at AI, what does it do? It actually improves human productivity. And look at global GDP, about $100 trillion US dollars of global GDP. 60% of that is labor income. So you got 60 trillion of human value that's contributing to GDP. And if you assume, let's say, 20% of that 60 trillion can be enhanced by AI, and AI can do the job at I would say, 20% discount on the price, that's a $10 trillion TAM. Total addressable market.
Big market.
Name another industry that has a $10 trillion TAM. Last time I checked, the transportation industry is $5 trillion. The healthcare insurance business is $5 trillion of TAM. I think someone told me that the entire technology space, every single technology industry, the entire TAM is about $10 trillion. So AI comes in, it's at least $10 trillion of TAM, if not bigger. That's why everybody should be excited about AI. Your question about the large language model and the reasoning model, what is the purpose? We are developing AI for a number of reasons for in the case of Alibaba. Number one, we run a cloud computing business which will actually benefit from the proliferation of AI. Because every time someone trains a model or runs inference or do post-training, they need cloud computing infrastructure. And we sell compute. And we're kind of agnostic. Do they use our model or somebody else's model? They need to have compute. And we're the leader in that space in China, right? And the next thing is, if you look at all of our use cases, all of our scenarios in e-commerce and mapping and food delivery and all of that, we can benefit a lot from the deployment of AI within our own business. We have one part of our business where a significant part of the revenue is advertising. So advertising is all about conversion rates, whether you can get users to convert a click into purchase and all of that. That can be greatly enhanced by AI. So we see huge upside just within our own business. And then finally, you hear this when our CEO talks about it. He's talking about kind of the ideal goal of AGI, artificial general intelligence. I think today, if you want to call yourself a technology company or a pioneer in technology, you can't not say that you are not pursuing AGI, right? The pursuit of AGI is kind of that ultimate ideal. And I think it's pretty cool because it's actually a very interesting philosophical question for me. There's a scientific component of how long it will take for AGI to happen, for machines to be just as smart as human beings.
Or how we measure it, what it really means.
Yeah, what does AGI really mean, right? But then I think a lot about the philosophical questions of AI and AGI.
Such as?
Well, first of all, if you don't even know how smart the human brain can get, then how can you answer the question whether AI is smarter than the human brain? So we have to first explore the limits of the human brain. A lot of my philanthropy actually is devoted to the study of neuroscience and human cognition and psychology. So I'm curious about how smart you and I can get. But the one thing that I know is the brain is the most power efficient machine there is. When you look at all these computers and GPUs and AI large language models, man, they're very energy inefficient.
Yeah.
Right?
Gigawatts.
Gigawatts. So, that's a philosophical question. Another philosophical question I think about is, what does it really mean? Is it really actually meaningful to develop AGI and say, I have the best LLM, I have the best AI?
Well, let me stop you there, because you recently wrote in an editorial, I think you said the AI race is no longer about who has the smartest children. So saying the value of making the smartest AI in a vacuum will eventually approach zero. So what does that mean? Saying, when you said the value of making the smartest AI in a vacuum will approach zero.
Well, first of all, I have to say a lot of technologists will disagree.
Yes, that's why I mentioned it. It was interesting.
With me.
Maybe including in your own company, I don't know.
Yeah, even within our company, we debate among scientists and I have to say, I'm not a computer scientist. I'm not a technologist. I mean, I have a law degree, so
served you well.
I'm not sure about that. But if you think about AI as the training and the education of kids, a lot of us have children. What is the meaning? What is the value of educating your child so that they can be a Nobel Prize winner in every subject matter there is in the world? What is the value of having kids that have read every single book in the library and they're very, very book smart, but as a parent, I still have to teach my kids EQ. I still have to teach my kids how to make friends, how to deal with other people, how to manage society and friendships and relationships. And all of that stuff, that's not pure, knowledge acquisition, right? So same thing with developing AI. You need to inject a little bit of, to really, truly to have something that behaves and acts like a human being and makes decisions like a human being, you have to develop a lot of other capabilities. I don't know if it's even possible. For example, can you inject hormones into machines? Maybe technologically that's possible, but today I have not found a way to do that. And also the other thing is I found most of the people, 99% of the people that talk about AI and the pursuit of AGI are men. Well, we know that, with men and women, we have different ways of approaching things, different ways of thinking about things. And human beings, certainly, there's men and women are different, right? And so, what does it mean to have the smartest computer or smartest AI?
Right.
Is it a male or female? From which perspective? So you have to think about all of these issues.
But take me back to the commercial applications then,
Yeah.
and the strategy that you're advocating in a sense, which seems to be, it's not about having the biggest, not having the most compute power or the largest model. It's about how you use what you have, I guess.
How you apply it to the real use case, real world scenarios. So for example, in our e-commerce, there's a lot of use cases. Let's say you want to go on a camping trip and you want to buy camping stuff. You have no idea what to buy other than a tent. Well, you can ask AI to say, hey, I'm going on a camping trip in 15 days, and you can put in like where you want to go, and the AI will figure out what is the climate, what is the temperature, what you need to buy. Do you need, besides the tent, do you need to buy boots? And also, oh, by the way, you need water bottles. Oh, by the way, you need to have insect repellent. Like, the AI will help you think of all these things that you would not think of. And then if in the e-commerce marketplace, it'll say you could buy all these things by clicking on these buttons or one single button, and it'll get delivered to your door before tomorrow.
Right.
Isn't that great? That's what AI can do, right?
Yeah. It's going to be able to do I'm sorry, go ahead.
Yeah. And the other thing, what I wrote in my op-ed is the benefits of open source. I think the so-called DeepSeek moment is really not about whether China has better AI than the US or vice versa. It's really about the power of open source, because once you open source the model, people can take the model and deploy it on their own infrastructure, whether it's in a data center or in your laptop computer. And all of a sudden, you have the power of AI at your fingertips. And what's happened with open source is it's going to foster a lot more development on top of these models. So now you have small companies and big companies and corporates and individuals and entrepreneurs developing on top of these open source. So the AI game is not just left to the 5 richest companies in the world that can afford to invest like $50 billion a year, right? So now the proliferation of applications will be a result of open source.
You mentioned philosophical debates within the company. Do you talk at all about what you see as the ultimate impact, though, of AI? We're all still in the early days here trying to figure it out, what it will mean for what the nature of work is, what will be valued, what it may mean ultimately for how many people even can have a job. Do you have any concerns?
I don't have any concerns because it can actually enhance what human beings do. We talked about back in the green room, for example, equity research analysts can be completely replaced by AI. You can ask them to put together a report on NVIDIA or Apple, and it'll do a great job. But here's the thing. I think the quality of research can really be improved if a lot of the mundane research-related stuff can be done by the machine, and then humans can apply their judgment and make better recommendations. I don't think it'll entirely replace human beings. It'll just actually enhance the quality of work. Same thing. I'm trained as a lawyer. In fact, the work of a lawyer is very similar to coding. When you write a contract, you're actually writing code, and the whole agreement, the whole document has to fit well together. Every sentence, every definition have to fit with each other. Well, AI can do a lot of that. I would say most of it. So does that mean in the future lawyers will be replaced by AI? Not necessarily, because what do you go to the most sophisticated lawyers for? You ask for counsel. Counsel is not something that is technical or black and white. It is judgment. It is about understanding the circumstances. And I still think that these jobs can just be enhanced by AI rather than being replaced.
That's a hopeful view. In the brief time we have left, I did want to hit China if I can. First of all, the Chinese consumer. We're not worried about the consumer in the United States. I'm sure people have heard and seen the stock market. But in China, there's been concern about the consumer for a long time. Not consuming enough, property problems, saving for, the savings rate has always been incredibly high. What is your sense of the state of the consumer right now in China?
Well, let me explain why the consumer is so important for China right now at this moment. As you know, China actually achieved 5% GDP growth last year. But what was driving that growth? That was from exports. But coming into this year, because of tariffs and geopolitics, the export sector is not going to be as strong coming out of China. And so what's left is the domestic consumption need a boost. We hope that after the 2 sessions that the government is working on a number of stimulus measures. And we haven't seen all the details yet, but we hope that at some point they will come out to really favor promotion of consumption. All right? And although today we haven't seen, sort of massive excitement in terms of consumption, but look at the Chinese consumer. They're very, very healthy. Household balance sheet is very, very strong. You're looking at over $20 trillion of bank deposits by households. So they're standing on the sidelines,
right,
waiting to spend.
What's going to get them to spend, though?
Well, confidence and sentiment. And that's why I want to mention this. A few weeks ago, President Xi Jinping had a meeting with entrepreneurs. And people underestimate the importance of that meeting. What that meeting did to the entire entrepreneur sector, or people that are the private business sector, is it gave private business people confidence to make investments in their business. I mean, we just came out and announced that over the next 3 years, we want to invest over $50 billion in compute infrastructure and AI, right? So it gave us the confidence that, to put our earnings back into CapEx and investments, and also hire people, right? So when private businesses have that confidence, they will take action. Coupled with this excitement about AI, people in China saying, hey, we've got DeepSeek, we got Alibaba, we got Tencent, we got ByteDance, we got a lot of these companies that are all doing AI. We're not that bad, and there's going to be a lot of great applications of AI. So there's a lot of excitement over that. So the combination of private business confidence and the excitement about technology development will eventually translate into consumer confidence.
I believe that.
Why? It's because companies are making investments, companies are making hiring decisions, are actually hiring people again, companies are growing again, and ultimately that will trickle through consumer confidence.
We struggle sometimes in the U.S. to understand the significance of different moments in China. And so you're telling me that was important when she and Jack Ma, your founder, obviously was at that meeting. He hadn't been seen in public, at least in that kind of a forum, in a while. So that was an important moment in your mind.
I wouldn't underestimate the importance of that event.
And sending a message to the business community as well and to private enterprise?
The message was very, very clear. The government is looking to the private enterprises to come back and boost the economy.
Finally, speaking of the economy, you sell on your platform a lot of U.S.-made goods to Chinese consumers. Right now, tariffs are 20% being imposed on China. It's unclear what retaliation will take place. How concerned are you about a trade war, about what that will mean for your ability to service your Chinese consumers with U.S.-made goods?
Well, obviously, everybody is concerned about tariffs because if you're involved in the business of global trade, in our case, we actually are involved in two-way trade, selling to the U.S., Chinese selling to the U.S., and also Americans selling to China. On the Alibaba platform, annually, we sell $50 billion worth of American products to Chinese consumers and $30 billion worth of European products to Chinese consumers, right? So there's a lot of import and consumption going on in China of foreign branded products. And so, of course, we worry about potential tariffs. But, you know, I think it's kind of way beyond our pay grade to talk about it because it's really about the leaders of countries getting together and deciding that ultimately, you know, tariffs create too much friction, and some level of global trade and interaction between companies is good. We want to have more American companies. I think the Trump administration will want to have more American companies doing business in China and making money there, right? So at some point, I'm pretty half glass full kind of attitude towards that. Eventually, you know, the tariffs being a negotiating tool, maybe, but at some point, things will sort of get better. I still think, though, certain protected industries will still be subject to tariffs. Like, you know, all this Chinese EV sectors exporting to the rest of the world, I'd expect that some tariffs are going to be put on them, which already people are.
Not going to get a $20,000 EV from China in the United States anytime soon, am I?
They'll increase the cost of people buying that. So,
yeah. Joe, we're out of time. Certainly appreciate all the time you gave us, and thank you so much.
Thank you. Thank you, David. Appreciate it. Thank you.
Thank you so much to Joe Tsai for giving us a front row seat to the inner workings of Alibaba Group and also the inner workings of how he's thinking about the state of affairs in the world that we live in. Thank you also to CNBC's David Faber. You heard Joe a moment ago say that he hopes that lawyers are not replaced by AI in the future, and I certainly hope that artists are not replaced by AI in the future. But we're going to have to really mull over that very philosophical dilemma and question later on today when CNBC's Arjun Karpal is going to be speaking to the very first ultra-realistic humanoid artist robot, the very first on the planet, Ida. That's going to be later on today. You won't want to miss that. Shall we do a quiz? Should we get you all involved now? Do a little bit of interaction with the audience. Okay, so I know we've been talking about AI and cutting-edge technology, but we're going to do this the analog way, which means a show of hands. So I'm going to read out a number of options for this quiz, and all you need to do is just put up your hand, and we'll do it that way. Are you ready? Great. Okay, the question is, which billionaire pledged to give away 99% of their wealth through the Giving Pledge? Was it A, Elon Musk, B, Jeff Bezos, C, Warren Buffett, or D, Mark Zuckerberg? Let's first of all, for those who think that it was A, Elon Musk, show of hands. Okay, no one for Elon. B, was it Jeff Bezos? Okay, we've got a couple out there. Was it C, Warren Buffett? Lots of hands for Warren. And D, Mark Zuckerberg. And a few hands for Mark Zuckerberg. The answer was, yep, C, Warren Buffett, the Oracle of Omaha, who I believe along with Bill Gates, co-founded the Giving Pledge, which really encourages billionaires who have probably more money they could ever spend in their entire lifetime to give the majority of that wealth away to philanthropy, because of course you can't take it with you. But now we're all set up behind me, so let's move on to the next panel. So we've been hearing a lot about how AI is reshaping the world that we live in. And this naturally adds a whole extra layer, doesn't it, of complexity to all the other things that we're contending with. Things like, of course, the tariffs that Joe and David were just talking about, the expanding influence of digital currencies. We just heard Joe Tsai say that he feels old-fashioned talking about cryptos, but actually what's old is now new again. And then we're living in also this new world order. So how do you invest in these times? That is what our next panel is going to address. Please welcome to the stage now Kamal Bhatia, the President and CEO of Principal Asset Management, Angela Perez, the Chairperson and CEO at Cofidis, Alec Kursman, Managing Director and Head of Asia Pacific at PIMCO, and this whole panel is going to be brought together and tied up with a nice, neat bow by my good friend and colleague of many, many, many years, CNBC's Martin Song. Marty, the stage is yours.
Thank you, Mance. Thank you, and good morning, everybody. Boy, I tell you, hard act to follow, huh? Joe Tsai and David Faber, but we'll try. Okay, before we get going, though, I want to recognize we've got some stars of our own here, CNBC stars, and Mandy, I want to point her out, is still one of them. I've worked with her for many, many years. Her star still shines bright. And one of the reasons I think she's very special is, some of you may not know, she worked for many years in Tokyo as a journo. So she speaks Japanese, right? But before that, she actually worked for a prefectural government outside of Tokyo. And we're talking, this is the real Japan for many people, rural Tokyo, right? So this is deep Japan, and this is deep Japanese. And for me, at least, that's what makes her special, all right? So, okay, folks, let's get going. Not a lot of time. 3 experts, 30 minutes. We'd like to carve out time towards the back to engage you folks so you can ask your questions. What I'd like to do is, and what we're looking at here, these 3 experts here, money managers, cumulatively, among them, I think I did the math, they're managing up to about $1 trillion of other people's money, right? So this is fairly sizable and consequential. So what I want to start with is, Clausewitz called it the fog of war. I like to think of it today, what's happening now, as the fog of tariff war, where we can literally wake up any morning. I mean, this morning I woke up and suddenly, U.S. tariffs on Canadian steel and aluminum, boom, doubled. 50% is what the president is talking about. So things change just like that by the day. So I want to ask all of you, starting with Angela, as a professional money manager, what do you do? Yes.
Yeah, okay. Well, first of all, thank you very much for the invitation and to be part of this panel. I am the CEO of a company called Cofidis, which is a Spanish private and publicly owned company that manages public funds with different public policy goals that go from internationalization of the Spanish economy to finance cooperation in emerging markets, but also to invest in Spain in different strategic sectors. So overall, our aim is to provide support to the private sector, accomplishing different aims that the government decides are relevant for our economy.
So it's a very unusual sort of mandate, in charge of attracting money into FDI into Spain, but also working with the private sector, right? Public-private partnerships, co-investing with small and medium-sized Spanish companies to help them go international. So which is great, right? And I know you also have a very strong social mandate as well, not just returns, but goals that are more targeted towards doing social good. So I think that's great in a day when ESG it's getting hard to talk about for a lot of people, right? So it's good to know that. But Trump, the tariff wars, how has that made your job harder? How have you had to adapt? What are you doing in light of all this?
Well, probably what makes hard this situation is to have a speech that is still valid and understandable by people. Our focus remains the same. Spain, Europe remains committed to sustainability. And I would like to leave this message clear. It's not what I say, it's what our President Sanchez says, is what the European Union is saying, is what the investors are saying. This week we had the report from Invest Europe, which is the association that most of the private equity and venture capital and infrastructure funds are related with. 90% of the European firms in the private capital sector have a commitment to ESG and portfolio management related to ESG. So regardless what other markets or environments can say, we remain committed to that. And managing public money, like I do from a government, obviously the only justification we can give to our citizens is that we are running properly with transparency and professionalism, the money that they are putting in our responsibility to achieve the goals, but we have to deliver social and environmental impact to society. Okay. There is no other way to justify our existence. And it's very much in the center of our policy. Okay. We want to have an open, sustainable, and social economy.
Okay, but that's good to hear. Not at a social cost is what I'm hearing. Alex, let's bring you in on this. PIMCO, the world's biggest active fund manager. You must be tearing your hair out now.
Well, first of all, thank you very much for having me. Pleasure to be here. Look, I think we need to take a little bit of a step back and realize that the level of uncertainty that exists today in the market is completely on the left tail of events. And the uncertainty is something that markets react to and has implications. And I think we need to, again, part of that step back is look at the markets and talk to investors and talk to clients with a very high degree of humility about some of the implications of what could happen in the world for the next few years.
You mean when they go, Alec, what's going to happen, you have to say, I don't know.
Well, hopefully we can give some guidance, but we certainly don't have a perfect crystal ball, which we all want to have. Look, I think that that level of uncertainty is certainly impacting the markets. We see deterioration in market sentiment surveys. We see the equity market in the U.S. in particular suffering over the last few days. And we see that markets are going to react to that, and clients have to face all these things. So what are we doing? What are we saying to clients in this environment? And I would try to summarize it in 3 key themes. Number one is that interest rates, yields, are still, even after the rally that we've seen over the last few weeks, at historical highs. And so that creates, in our view, quite a significant opportunity. If you think about historically, the level of yields have been a very good indicator about what the expected return will be 2 or 3 years in the future. So you think about the 10-year Treasury yield at 4.30 or so, and you can add spread to that exposure that would take you to the 6 or the 7, even the 7% yields. That seems like a pretty reasonable place to be to hold your horse.
And it sounds to me like you're saying, look, I mean, this is classic, right, for money managers. If you're in an inflationary situation or a period, right, bonds are where you want to be.
Well, I think where you want to be is in a place where you see the equity markets being potentially overvalued. We see some reaction to that in the recent days. You see cash markets, which interest rates from central banks should continue to come down. So if you can find yourself in intermediate part of the curve and yielding 7% and waiting, it's a good place to be.
Cheeky question, Kamal, let me bring you in, right? Sure. Alec mentioned central banks at this stage, right? Even if the bets are increasing, the Fed is going to start earlier than expected, maybe June, and they're going to go 3 cuts. Honestly speaking, whether it's the Fed or even the ECB, which just recently cut as well, and we have the euro going to 108, right? Do central banks in this kind of environment actually matter anymore? If so much of the pricing in markets we're seeing is driven by literally one man and what he says.
Absolutely. So first, before Martin and I go there, is an amazing location here, just in Singapore, and it's your question, which was very well phrased, the fog of tariffs. I think the first rule is don't have shipwrecks. And so how do you avoid shipwrecks in the world we live in? And it's quite interesting, we are here in Singapore, which if you really define Singapore, it's really a nation that's defined trade across the world. And so to your question, do central banks matter or not? they do matter. I think the point I would make is you have to pay attention to other things now. For the longest time, if you think about investments, and we've had almost 20 years of this, most people would look at direction of interest rates to tell them how to allocate and rebalance. And I think that is changing on us. We've had very muted geopolitics in investing for a long period of time, and clearly tariffs are changing that. So I think geopolitics matters as much as fiscal policy would be the one statement I would make. And I think you need to pay more attention to that element of it. The second element I would describe is how you avoid shipwrecks there are two very fundamental principles in investing. One is how you reallocate or allocate, and the second is how you rebalance. And I think tariffs and interest rates are going to naturally do some readjustment of international capital allocation. We are already seeing that with tariffs. You know, the trade flows are naturally going to adjust depending on where GDP is higher or lower, where friction is higher or lower. And as an investor, you want that to naturally just play out. You don't want to overextend yourself and go ahead. But the place I would leave you with is be more patient in rebalancing how you invest, because I think there's a lot of noise in the markets right now, and you want to give it 3 to 6 months before you make that action.
Wow, that's a long time, though.
Yeah, I think it is. And the reason I say that is I don't think so we have seen the impact of geopolitics and the impact of trade policy in investing for a very, very long time.
Are you waiting for April 2nd? Reciprocal tariffs?
Well,
because then everybody throws tariffs at each other.
I don't think so. That date, it'll have an impact, but I don't think so it's as seminal as you think it's going to be, because the news changes every day. So by the time we get there, it may change. I think the most important impact in this sort of effect of tariffs is there are going to be more distinct winners and losers. I think the trend of globalization is being redirected, and there are no more universal laws of how capital will behave, and so you got to get more adroit on how you do that.
Alec, would it be fair to say that right now, right, everything is pricing off yields and what President Trump says or does not say?
I think that's fair to say.
That's where the cue comes from.
I think that's absolutely fair to say. And I think the administration, Trump 2.0, has made it very clear that they're here to do structural shifts in the world order. And as we heard in the earlier panel, they're doing it very quickly. So the repricing that we've seen across the world certainly is related to that. Even the announcement from Germany last week is also a consequence of that. The increased defense spending that we're going to see in Europe is also a consequence of that. So I think your point is fair.
Indeed, yeah. We saw the reaction to what happened in Germany, deciding to moving towards lifting the debt brake, not just spending more, but specifically more on defense. Short Bunds was and maybe still is looking like a pretty good trade, which is a good way to get back to you, Angela. We had this conversation earlier on, and I noted that, fine, you have the social mandate still, which is great to hear, but how can you potentially profit from what's going on with national security? And your short answer was, look, it's not like we're going to go out and buy defense companies, which you probably wouldn't, right? That's a sovereign wealth fund. But what you can do is take a closer look at technology companies where there are dual-use applications, right? And frankly speaking, most technology falls into that camp, right?
Yeah. Well, how can I say this? I think Europe is waking up. This is what is happening. It's an opportunity for our region to improve many things that have been non-performing for a while. We know that you most have heard about the Letta and the Draghi reports. We have to improve competitiveness, industrialization, productivity. Now we have to invest in defense, and it's something which I think brings a different approach from Europe, and I see it as an opportunity. I was last week in the annual meeting of the European Investment Bank, and they are committed to change the rules to allow the bank to invest in defense. And defense is very much connected to technology. So as Dr. Krugman said, there is hope in the age of uncomfort or discomfort. And I think this is what is going to happen. For us as a manager of public funds, we have an opportunity to collaborate with the private sector to develop this new technology and activities, aerospace or AI, and we are precisely managing a fund which is called the Co-Investment Fund. What we are discussing with different international investors to come to Spain to invest with us in these particular strategic sectors, also in energy.
Yeah.
Independence, economic independence and strategic independence is very important in this moment. So there's a whole plan to improve our performance in different areas.
Okay. Okay, so basically a big theme, national security, and trying to, I guess, rejuvenate military-industrial bases, not obviously in the U.S., but also happening in Europe. And I think that is set to ramp. But Kamal, something we were talking about earlier is interesting, right? Before you even get to a war, a shooting war, right? With a tariff war, you've taken a look back through history, and you found that when there is a trade war, or when there have been tariff wars or trade wars, it tends to make people of countries affected feel a lot more either patriotic or nationalistic, and that can drive buying on its own.
I think that's a great point. And so just picking up what we were discussing, I think if you look at the history over a long period of time, wars, we don't want physical wars, but trade wars are trade wars. It brings spurts of patriotism that translate into people spending more locally in their own nation. You've seen that in Canada. You're seeing that in Europe. And we haven't had that for a while. And I sense is you're going to see more of that. So this is sort of the second-order effect of investing most people ignore, which is what's in the news is you have trade wars, therefore GDP is going to take a hit. What you don't understand is you're thinking about what external effects on your GDP are, but you underestimate internal effects on GDP. And our view is a lot of nations that go back to being insular, there is a desire to encourage consumption. There is a desire to spend more. And nations, particularly that are highly dependent on consumption and services, US is one of those nations, tend to actually do better than you anticipate. And there is a high probability that could play out. And I think that's a factor that is underappreciated when you look at historical norms.
All right, so I want to get on to AI in just a second, but a quick question to Alec, right? Is it almost inevitable from here that yields are going to go higher? I mean, we've seen it start to happen in Germany, in Europe already, but what about the U.S.? I mean, is there any sort of clarity? I'm not going to say method to the madness. I'll get in trouble for that, but do you get the sense that the plan is to soften things up in the U.S., right, for growth, maybe even for employment, et cetera, and then, boom, have tax cuts kick in, and then everything's good?
Yeah, those are all, it's a great question. It's a complex question. I think that it is not all that inevitable that yields are going to go up. We think that the impact of the tariff war, if you want, some other things that are happening in the U.S. are going to have a quite material impact on growth. So we are expecting the U.S. growth to be more in the 1 to 1.5%, which is quite a significant decrease. But if you think about some of the policy shifts in terms of trade, in terms of fiscal policy.
But not recession.
Not recession.
Okay.
Not recession. Although the word recession is coming up more and more.
It is.
As you know. Now, in any single year, if you just asked me in December, the chances of recession for 2025, in any single year, the unconditional probability of recession is 1 in 7, so around 15%. That's just if nothing is happening. So I think that probability is probably more than 15% now. We've heard Larry Summers, I think, talking about 50%. We've heard some other people talk about recession. Our view is it's probably more in the 30%, maybe 35% probability for the year. Okay. But going back to your original question, we think that the Fed, as you mentioned, will cut rates in the second half of the year. We'll continue to cut rates 2 or 3 times. And there could be more of a steepening of the curve. And that's a consequence, of course, of shorter yields coming down and some of the fiscal issues for the U.S. potentially pushing yields up further. So a little bit of a steepening position would be a good idea.
Does the 10 hit 5?
Say that again?
Does the 10 hit 5%?
No.
No.
It does not.
Okay, all right. Look, we're meeting at a time. Let's get on to AI. Angela, how are you investing in AI?
Okay, well, we think there is an opportunity, and strong opportunity in Spain to become an important investor in AI, particularly in data centers. We have cheap energy. 50% of our energy is renewable energy. We have land, and we have professionals and skilled people. But also, I think we will co-invest to develop the involvement of AI, the application of AI in manufacturing and service activities. So we are devoting quite a lot of attention to the opportunities in this field.
Okay. Kamal, opportunities in the picks and shovel part of the supply chain in AI, right? Data centers. I'm just curious, we heard from Joe Tsai just a few minutes ago. We remember what happened, 2 months ago? DeepSeek, right?
Yeah.
Maybe a Sputnik moment, as people are calling it, right? And, I've been talking a lot with my colleagues about how what we have already seen happen with Chinese EVs, right?
Yeah, yeah.
There was literally just savage competition in China, right? It was like Hunger Games in China in the EV sector. And then now, out of the ashes, many companies die out, and you've got the emergence of the cream of the crop, I guess, the BYDs. And now, frankly, they are eating everybody's lunch.
Yep.
Are you agreed that a similar thing is going to happen with China AI? The 2 sessions was just not so long ago. It's pretty obvious that's where their attention and emphasis and credit is going to be focused, right?
Yep.
Is that an opportunity?
It absolutely is. And I'll just pick up on DeepSeek. I think it's quite amazing because I would describe it as innovation under adversity. And one of the things investors miss is they look at where capital is available and think only innovation happens where capital is there. And what the China experiment proves to you is you can actually extend innovation without capital. If it's adversity, you can actually leapfrog. And so you always have to keep that in mind. But I go back to another observation I'd give you on AI. So if you think about the growth of AI over the last 2 years since it came into vogue, we are at 5th generation of models now, these LLM models. And every generation, if you look below the surface, you need 10x more investment in infrastructure to go from generation 1 to generation 2. Now we are from generation 4. Yet the revenue grows only 2x. And so one of the things you want to think about is, while this is all exciting, are you participating in the right capital stack of AI? And there is a lot of attention paid to tech companies that are on the revenue side. And my argument would be probably the place to be is the infrastructure of AI. And we do talk about a lot about chips, but there's a lot more to do on the infrastructure of AI. Because over the next 2, 3, 5 years, that's where the multiple expansion occurs, and you want to extract profit from it rather than the revenue side.
Okay, we ought to be going out to the audience, but one quick question. Please go ahead.
No, I was going to add to Carl's point. I think it's an excellent point in terms of the infrastructure of AI. There were some comments in a previous panel about data centers, and I think that just an incredible opportunity right now, in particular in Europe, in markets like Madrid, Milan, Athens, where there is a significant undersupply of data centers compared to the US for sure. And then you've got issues like data latency, but more importantly, you've got the issue of data sovereignty, right? Because a lot of the data from Europeans is really held in the US. And so given everything going on in the world, data sovereignty is going to become more and more important. So infrastructure, data centers, Europe, very important right now.
Can you make a long view, or are you willing to make a long view bet that AI ultimately is going to lead to lower yields because of efficiency gains, productivity gains? Or are they actually is AI going to end up enabling higher prices and being able to live with them?
I would be on the side that they would enhance productivity, and an enhancement of productivity will lower yields.
Lower yields. Okay, gotcha. All right, listen, we've been talking a lot. I want to involve you folks sitting out there. If you have a question, please raise your hands. We've got roving mics, which will come to you. And all I ask is that you tell us who you are, where you're from, and who your question is for. Please, the gentleman right there.
My name is Pavel from Ambition Software. We're an AI gaming company from Singapore. So question is actually to the panel. You talked about data infrastructure and data. How does nuclear energy play into any of this stuff?
Oh, great question. And who is this question for?
Oh, I guess I'll go to Kamal because he was talking about infrastructure.
Kamal, go ahead.
Yeah. So I'll probably broaden your question beyond just nuclear energy, which I know has many dimensions, because I think, one, I do think there's a bias against nuclear energy. I think over the last 20 years, 30 years, the safety of nuclear energy has gone up in leaps and quantums, and we haven't had a whole lot of production in the world. So I think that is something to consider. I do think the theme of energy independence is probably the more interesting theme to consider, which is nuclear plays a part into it, at least from when I see the US view on this. Natural gas is US's way of playing energy independence. Europe may actually be the epicenter of using nuclear energy to get to that same level of energy independence. Everything doesn't have to go through fossil fuel. We do have bigger needs for energy in the world, and people are going to find ways to keep it, kind of figure out what's their path to get to that energy quantum.
This is interesting. I mean, I'll say it because you can't, I know. Yeah. It's kind of sensitive, right? But we were talking about this. Yeah. I mean, the problem with Europe is that they bet big on cheap Russian oil. Yep. That bet didn't turn out so well.
Yes.
Right? Okay. Any other questions, please? Gentleman in the front. Thank you. Sir?
All right. Kay Van Peterson, Final Upgrade AI. Great to see you moderating as always, Martin. So we run an AI advisory shop, but I got a mark-to-market allocation question for the panel. Okay. So I know it's not a fair question, but you got $10 million. You can only put it in one place. You could take a 10% drawdown. So from here to the end of the year, where would you guys be allocating?
Wow. And should we go through all three of the guests?
Yes, please.
On this? Okay, Alec first.
Well, I answered that question when I started. I would put my money in high-quality fixed income right now.
Okay, Angela?
I would invest in Spain with Cofidis, because if you give me 10, I will give you another 10, so we have 20. And I would invest in any of the sectors, for example, in renewable energy.
Wow, she'll co-invest with you. Okay, that's pretty good. Kamal?
I would tell you to split it in three places. I think we talked about infrastructure. Find a way to access some infrastructure, whether it's real estate or something. I would take your risk allocation of equities and go more regional, go smaller companies. I think we talk a lot about large companies. I think that is a better place in the world we live in.
Isn't that a higher risk, though?
I don't think so. I think this is the other quandary we all think of. I think we think global companies are safer and local companies are riskier. I think in the world we live, to his time horizon, I think it's getting flipped on its head, so you want to understand that better. And we have seen that in US markets. The S&P's effect is very clear. And the last piece, I would go with what my colleague said. I don't think so you're going to see a jump in yields. So I would go after credit. You're not going to have a rise of yields on you, so you will probably be better off in credit over duration.
Okay. Any other questions? No? Okay. Listen, so look, we're bang on time. Excellent. All right, so please thank all our panelists here. Excellent conversation. I enjoyed it as well. And thank you for being part of it, too.
Thank you.
Thank you.
Yes. Great stuff as always. Thank you so much to Martin Sung of CNBC, and thank you also to Alec, Angela, and Kamal. As always, it was an incredibly insightful and engaging conversation, and I was really struggling to pluck out any particular comments, but I did manage to think of just a few that stuck with me. Number one, Angela said that assets in Europe are waking up, which is certainly very true. Alec said it is not inevitable that yields in the United States are going up. And Kamal said, Just be patient in how you invest because there is so much noise out there in the world and the markets today. Very well said. I would also like to thank Kamal for bringing the happy with his happy socks. Did anyone notice that he had love hearts all over his socks? We started off, I think, the theme of happy socks earlier on today with Marc Benioff and Ray Dalio, and I can see this gentleman in the front row here has got some very happy socks as well. But I digress. Let's move on, shall we, to the next panel to take a look maybe at how capital is reacting to some of the themes that we've just discussed up here on the stage. Let's welcome, with a big round of applause, Daniel Koh, CFO of the SGX Group, along with Ashish Kumar Chauhan, the Managing Director and CEO of the National Stock Exchange of India. And then all the way from London, we have CNBC's very own Squawk Box anchor, Steve Sedgwick. Over to you, Steve. Do your best. Here we go.
Ladies and gentlemen, thank you very much indeed for inviting me to come to this extraordinary event. I can apologize, Mandy. I've gone really boring on the socks, but Daniel has really risen to the occasion. So, although I do have hearts on my tie, and they're only for you. Don't tell my wife. Now, look, this is about managing volatility, capital flows in 2025. It's something I spend a lot of waking hours talking about. I spend 15 hours a week on live television talking about volatility, about the markets, and my job is to get people galvanized about business news. It's not sport, it's not entertainment, it's not global affairs in terms of wars and something very dramatic. It's about numbers. And my goodness me, the numbers are big at the moment. But how big are they compared to history? How volatile are these markets? Now, I know I only look about 37, but Mandy knows I'm a little bit older than that. And I was thinking in my own lifetime in the markets, and I started as a derivatives trader in 1988. There have been dozens of episodes that are more volatile than this. I came into the market in the wake of the the stock exchange crash in 1986. The late 90s, there was turmoil on the markets. We saw the East Asia crisis, we saw the Russian crisis, LTCM, then we had the dot-com bubble bursting, then a few of us may remember the financial crisis, 2008 to 2010, and then the pandemic. So how volatile are these markets at the moment compared with history? Why don't I ask these two amazing guests as well, Daniel and Ashish as well. Everyone likes to talk about the volatility, and a lot of people are blaming Trump for it or blaming all kinds of other factors. Brilliant comments from Ray Dalio earlier about the big 5 changes in the world. But is it really that volatile at the moment? Ashish, why don't I start off with you, and then Daniel, you come in.
In a way, life is volatile, right? If it is not, I mean, if you go into any hospital and look at the patients, the screen behind in the ICU, if there is a flat line, it's dead, right? So there has to be volatility in the blood pressure and blood sugar. And similarly, if there is no movement, there is no life, right? So life requires some amount of volatility, but whether it's manageable or not is the issue, right? So that's where most of us want life to continue the way it is and also become better. When things start happening against our expectations, which we have, and that's where the volatility is actually the difference between what we expect and what happens. So our expectations sometimes run ahead of the realities, and many occasions in life that happens collectively. So when sometimes things happen which you don't think should be happening, that's a volatility, but it's for you personally. But collectively, all of us think that the market should go here, and it doesn't, or we think we are going to win this war, and it doesn't, or it gets kind of stretched. That's where the collective sort of problems or collective situations arise, and that's where, in overall, how does the world work? Is basically through interactions of individuals to the society, societies to other societies, countries to other countries, and that's the geopolitics of it.
Yeah.
And geopolitics usually eats economics for breakfast. So, of course, today it's afternoon, but still, what you need to worry about is things not happening across countries or happening very differently from what they were happening earlier. Like I gave example today, in 1988, the Berlin Wall fell. That was expected, but that was the symbol, right? And then there is only one, last almost 45 years, only one polarity, as I call it, US. And so all the friends, Europe, and everyone else is kind of leeching on US in a way, saying, I need this, okay, take my equipments, fight with Russia, do this, do that. And suddenly, the rich guy, US, is feeling poor because 45 years and everyone has taken off everything and this guy has nothing left.
Hang on, Ashish. The US, I hear this argument all the time. Europe leeching off the Americans, they paid for our defense. You know, they didn't just do it from altruism. There was an economic rationale for why America rebuilt Europe.
It's, I think, more about being large in their own mind.
Yeah.
They become now small in their own mind. See,
yeah.
It's a more, again, their own mental volatility you need to worry about. And so they are kind of receding from the world, saying, oh, I mean, people have taken things away from me. And now, if I give you something, I need to ask for in return. Earlier, they were not, right? And so we were all happy asking, not India, but the rest of the friends. And now they are feeling a little disappointed. That's why this volatility.
Daniel, how volatile is it at the moment there?
Morning, Steve. I think you are right. I think we have seen more volatile times, more volatile episodes before. But I think the difference is that previously these were exogenous factors that the markets knew how to respond. The problem you see now is that you have policy volatility. And the whole aspect of, geopolitics aside, the whole aspect of tariffs, no tariffs, you know, the back and forth of that, is introducing a level of uncertainty that the markets just do not like, right? And as we all know, markets like to give their verdicts pretty quickly. The feedback is pretty instant. So you are seeing these capital flows react to the fatigue, I would say, with regards to the back and forth of tariff actions. So as an example, I would say that I think we have seen capital flowing into Asia as a result of these fatigue. Let me give you an example. If you look at the stock market in Singapore, and I'm sure it's the same in India, last year, right? Total shareholder return for the index stocks was 23.5%. In February this year, we've actually hit a record high in terms of the STI. But even across different asset classes, and if you look at what we see from the Singapore Exchange point of view with regards to the Pan-Asia suite of derivatives that we have, if you look at the A50, for example, which is the world's most liquid international China future in terms of equities, the flow that we're seeing is pretty tremendous. 20% increase year on year, right? And that's on the equity derivative side. But the first asset class that always reacts is foreign exchange. And that one we saw right from the start. The volatility that we saw in foreign exchange, maybe not to the extent that you saw during the Asian financial crisis, but really the DXY moving up and down has probably caught the market by surprise.
Daniel, I'm going to come back at you if I may. It's like I spent my first 11 years before I was a journalist as a derivatives trader, okay, just so you know where I'm coming from. Boo-hoo, the market. It's like now the market wants a put all the time. We want a Draghi put. We want a Bernanke put. We want a Trump put. Besant is right when he said in the last 72 hours, there is no put for the market because the US stock market, it's thrown its toys out of the pram and it wants someone to hold its hand. It wants someone to act as a kind of a national squad, to use a kind of a Chinese analogy as well. Well, boo-hoo. You said actually to me earlier, the market knew how to react and now it doesn't know how to react. It's because the market's all of a sudden thinking, hang on, I've got to do this without institutional support, without the government spotting me throwing my toys out of the pram.
The market is reacting by moving some capital out of the U.S.
Some capital, not a lot.
You have some capital that's gone into the sidelines. You have capital coming out into Asia and into Europe, I might say, right? So the volumes that we are seeing from a pan-Asia perspective have increased. Foreign exchange, as I was saying, as an asset class, if you look at what's happening in the Western time zone, over a third of the FX futures in which we offer, and these are Asian FX futures, over a third of the volume takes place in the Western time zone now. So it's pretty much, quite a lot of flow that we're seeing, and I think this will continue. I think that you will see capital coming off the sidelines, and Asia, and to another extent, Europe will be the beneficiaries of that.
I want to just remind the audience that we're going to talk some very specific examples about the SGX and about the NSE in a few moments' time. I'm also going to challenge you lot to come up with a very good couple of questions as well near the end. You didn't know this was going to be you participating, did you? You get an opportunity to ask these amazing gentlemen a question. So just have a little think. I might do that in the last 5 minutes of this panel as well. But here's a thought. And it tallies with what Daniel said. So I'll ask Ashish first and then come back to Daniel on this one as well. The volatility and oscillation of policy we're seeing in the States, including, by the way, did you know that the Canadian tariffs went from 25% to 50 to 25 without anything even happening? Did you see what Doug Ford did back on the energy? Anyway, so that's how quick oscillation of policy we're talking about. But actually, China hasn't changed a lot of its domestic policies. Singapore hasn't. New Delhi hasn't. London hasn't. Frankfurt hasn't. So actually, what Daniel was saying, I think, is very valid. Other regimes that can offer continuity of policy domestically and internationally are going to be beneficial. So volatility stateside actually can result in huge benefits for everyone else.
For me, I think each country, each society will try to hold on itself and try to provide some sort of a continuum and continuity in policies and measures to its own citizens. But overall, I think there are tectonic plates which are shifting. And whether we like it or not, we have to accept that this unipolar world is going to become multipolar today, tomorrow, whenever. Because one of the polarities, the unipolarity is now receding. And so you will have many more players trying to push through, which is Europe or China or to some extent India. They will now be figuring out what to do next. But it won't be the same as what they were expecting, neither for US, as you rightly said, nor for China, nor for India, nor for Europe or Singapore. Every one of them are going to now negotiate hard, and everyone is going to be for themselves. So for me, the way I look at it is, broadly speaking, that what so-called rule-based part is gone. There are no rules. So UN is gone. WTO is gone. WHO is gone. Everything with W is gone.
Or you.
Right? Broadly. So why is because we are just trying to hold on to the myths which we created, and now suddenly the largest guy whose money we were using to hold on to this W part, WHO, America gives money, UN, America gives money, and that guy is saying, now I am poor, do what you want. Where will this UN go, right? So for me, all the WTOs, whatever you think, is broadly gone except in our minds, right? Now, in the real life, you have to be adults, especially as policymakers, and figure out what next, right? Some of the past will continue, but some of the new will be unexpected. And that's where what is happening today, the dollar is becoming strong for a variety of reasons, but largely because the US has a large deficits in managing itself. So it has, by whatever I read over last 1 week, $5 to $7 trillion have to be refunded in terms of the US government debt in 2025 alone. And the interest rates are still 4.25% for 10 years, right? They need to refund. Already their average cost is 3.2, 3.3%. Yeah. That is 330 basis points. It will become 1 whole % higher. They don't want that. They want actually the markets to come down, the oil prices to come down, they want interest rates to come down. The Fed wants interest rates to come down, it's not coming down. That is the volatility. If things happen as per your expectations, that interest rate will come down, they come down, there is no volatility. But if you think it's going to come down and they go up, that is called volatility, right?
Ashish has done something quite incredible. And sorry, I'm not ignoring you lot over here, by the way. I'm just kind of, naturally facing this way. But you're equally as important as the people in my eye line, by the way. But Ashish has just gone a stage further than Ray Dalio. Ray Dalio had his 5 points earlier on, which I love. But he just said tectonic plates are shifting. Anything with a W at the start is gone. And hopefully not including the World Cup. Yes, because, dear America, there are world sports that you don't dominate. Anyway, but seriously, Daniel, is it that big a tectonic shift, or is it just 3 years and 265 days till we go back to normal?
I think that you will see the countries having to respond, right? Different governments will respond differently. I think you will see that the countries that don't go to a retaliatory stance and the first instinct will benefit more.
Yeah.
Right? So it's quite a known statement that nobody ever wins a trade war. Right? I would argue that you see seeing what's happening with China over, I mean, they've been preparing for this for a long time. Right? They've been transforming the economy, moving away from exports and property into the new knowledge economy, into consumption and services. They've been focusing on tech, AI. We all saw the surprise that DeepSeek came up with. And these are real transformational events. A game changer in Germany last week, that we see with the whole movement away from being really, really prudent from a fiscal perspective to let's do what we need to do, right? This is a game changer for Europe.
Which is absolutely extraordinary from my German friends as well, who stood behind their best German word, Schuldenbremse. You all know what a Schuldenbremse is by now. We've all been looking up. If you don't know, have a look at no, it's a debt brake. And it was huge from the Germans. But that's a really positive thing that's come out of the volatility in policy elsewhere.
Yeah, no, exactly, Steve. Basically, countries are responding, and they will continue to respond. And we will see this for the next few years, right? You're going to have more intra-cooperation outside of the U.S. So in this region, for example, in ASEAN, you see the countries cooperating a lot more. And that, to me, is one that is a no-loser, no-brainer.
I'm not asking the questions yet, but just want to know roughly, has anyone got a question? Oh, come on. This gentleman here, okay, and this lady here, and this gentleman there. Okay, well, I'll get those three questions. Not yet. Sorry, I'm holding the horses. I'm just getting them ready so they know they got their questions ready. Right, so we've talked about the broader issue. We've clearly identified one very important thing from this panel already, and that is the challenge and the volatility is presenting huge opportunities at a state level. But what about at an exchange level as well? I want some really specific examples from you two gentlemen about the challenges you're facing even before this policy adjustment stateside and how you're reacting in your own businesses. Ashish, why don't I come to you first of all? The NSE, we all want to know about your IPO, by the way, and you're going to tell us at some stage, I'm sure, that it's going to happen after being on the table since 2016. But equally so, Indian stock market was on fire. Indian economy was on fire. It's still growing somewhere in the region of 6%, but there are challenges, and the international flows into India, they have abated quite aggressively. So just talk to me about the opportunities to adapt in the current environment.
So again, going back to today morning's discussion with Ray, and overall, the only change in the world that happens, what do we see, geopolitics, internal politics, everything actually has a kind of a stream inside, which is called technology. Technology is the only change that happens in the world. The rest of the world actually surrounds it. People who know about it, people who don't know about it. And the technology waves are coming faster and faster. And the capital, the concept of capitalism required a lot of capital to be put in to create more capital. That was the Karl Marx framework. Before Karl Marx, there was no capitalism as a concept. He created capitalism to build it up, to create communism, right? And so for me, capitalism required a lot of capital to create more capital. But the technology waves since last 100 years have become so fast that today you don't require a lot of capital to create more capital.
Yeah.
I call it capitalism without capital. Very little capital, lot of brains, and you can create huge amount of wealth. And that is what the new world order is all about. You see, the OpenAI guys can tell you that I will put in $500 billion or $1 trillion or $100 trillion. Don't come my way because that's big. But DeepSeek comes and pricks the bubble in $5 million, right? So for me, India, in a way, is in a place where it's a lot of brains, a lot of enterprise, and very little capital required. So many enterprises are coming up. Last year alone, NSE itself did 200 IPOs of micro, tiny companies. Some of them are going to become tomorrow's billionaires. So I tell a lot of people, including many of you sitting in Singapore, you want to become billionaires, list on NSE.
Well, there you go. You want to become a billionaire, list on the NSE. But look, there is, as Daniel was saying, vast pools of capital waiting to be tapped as well. In Singapore, we talked a little bit about China. That's come up in other panels as well. What about 1 billion Indians as well who underinvest in the stock market? What are you doing meaningfully to get that capital flowing into domestic issues rather than just betting on NVIDIA and Tesla?
Traditionally, India has never invested abroad because we are a capital-controlled economy. So money stays within India. But people have been investing in, say, real estate, in gold. But over the last 10, 15 years, people have started investing in stock markets. Like in 2014, when Mr. Modi took over, and I remember the numbers, we had 16 million investors. 10 years later today, I have 110 million investors. I know exactly, we are what we call ID market. The rest of the markets other than India and China.
I'm going to jump in again. My final point to you before I come to Daniel. Investors or traders, and as this came up on TV today on CNBC where you were talking, I asked you the same question as well, but you weren't watching because you were watching Ray Dalio, so I have to say it again. Are these all trading on their wonderful apps, buying and selling aggressively, or are they investors?
They are investors. I'll tell you, out of 110 million people, 110 million are investors. Out of that, around 2% people trade also in derivatives. That doesn't mean they are not the investors. You invest and you buy little insurance for your portfolio.
Okay.
So broadly speaking, you can call anyone a trader, but of course, we also continue to inform them via media, social media, print, television, saying buying in the morning and selling in the afternoon is not called investment.
And it's a recipe for most of you to lose money.
And you end up losing money. So we continue to tell them, but most people have their day jobs. They invest in mutual funds. There are 50 million people who put in small little amount, $50, $100 every month to the systematic investment plans of mutual funds in India. 50 million people, right? So it's a very, very large amount of investment.
Daniel, the peak of the IPO market in Singapore was over a decade ago now as well. What are you doing to stop that? And it's the same question I asked the London Stock Exchange, is one I asked Euronext as well. What are you doing to keep that capital and get those listings back at home and get domestic investors galvanized about the amazing opportunities in Singapore?
Thanks, Steve. I'll get to that. But before that, I would like to state that the SGX is well poised to capture international capital that's coming in, right? As the gateway to Asia, you can get exposure to China, India, thanks to our partnership with NSE here, Korea, Taiwan, Japan. And on top of that, in terms of other asset classes, commodities, foreign exchange. So as the gateway to Asia, we are well poised to capture that opportunity to answer your first question before. With regards to IPO, the government, together working with private enterprise, has come together as a whole to lift the whole ship up, right? So, look, even before this, the IPO market, the pipeline has been looking robust, and we're looking across all sectors here, right? Be it technology, healthcare, consumers, automobiles. You know, the pipeline is looking robust. With all these equity market review initiatives that have come in, that's looking through demand, supply, and on the regulatory environment, we are going to see a step change. It will be turbo boosted.
Okay. I'm incredibly afraid of Amanda Drury, so I'm going to be very well behaved. And so I'm going to get a question from this gentleman here. The microphone's coming down, sir. Then after that, a question from this lady and a question from that gentleman there, and that will probably take us near to time as well. I'm watching Amanda, and I'm in terror. Sir.
Yeah, so being a macro crypto AI guy, so all completely more dangerous than each other, from an exchange basis, why are we still waiting Monday to Friday, 8 to 9 to trade in this day and age? And why are we not already on the blockchain? Why do we have this T+2 or T+1 settlement? I was just curious if you could break that down for us.
It's a great question.
Yeah, I think blockchain has been told to be solution for everything, including flights coming on time or cancer medicines coming up suddenly. It is not true. I do settlements today on real time without blockchain. So blockchain is not the solution. It's just a way to tell the crypto guy saying, no, I have this technology, I've made money, now use it somewhere else, right? But it's not a panacea. At the same time, it's doable, real time. It's just that it may not be required. It's like saying you want to have meal every second, probably right? That's why people are used to, societies are used to having lunch at a particular time or dinner at a particular time. And that's how it works. But if some children want it fast, we do provide. So don't worry at all. It's nothing to do with blockchain, but if required, we'll use blockchain for sure.
Daniel.
We have to work with the stakeholders across the ecosystem, right? We have trading members and clearing members that we need to deal with. Obviously, we have to take all their considerations into mind. But having said that, on crypto, we are looking to launch a perpetual crypto future, and that's something that I think the market is crying out for with regards to something in this time zone where you don't have capital flowing back to the West, and with a trusted exchange that is regulated and highly rated, and that's something that the Singapore Exchange is looking to do.
Thank you. This lady here.
Hi, thank you so much. I'm Tiana Nguyen. I'm Vietnamese American based here in Singapore. My question is that the global financial markets are increasingly facing technological disruptions such as deep fakes to systematic vulnerabilities in AI and digital transformation. How are exchanges like the NSE and SGX collaborating with one another in order to help mitigate these risks, but also fostering investor confidence?
You're right. We face anything which is aggregate, which is a center, like a marketplace, end up getting a lot of attacks. People misuse it. People want to close it down to just make a statement, or people want to make money out of it by misusing, and so on and so forth. So there are robotic attacks which we receive. On our website alone, I would receive, on a single website, I run 70 websites, I would receive somewhere between 40 to 100 million attacks a day, right? And so the attackers are also now professionals, and they can basically hire other attackers to attack us by paying to us. And attackers have to be successful only once in 10 years, and I have to be successful against all 100 million attacks every day, right? So those are the kind of challenges. Similarly, deep fake. Last year, start of the year, that is this almost a year back, somebody created my own deep fake AI saying that you join my WhatsApp group and I will give you daily tips. And I don't even invest. I'm not allowed to invest. And I thought it was a prank. I am a technologist, and my friends who got this hold of, so I thought they were just pranking me. And I did not take it seriously. But I went to another city next day, and then 5 people from different corners of a restaurant stood up saying, "Sir, we have become part of your WhatsApp group." And I was like totally aghast. I came back to Mumbai, I went to the High Court of Bombay and said, you need to have Facebook and all those guys taking off those things so that it does not misrepresent to the public that I am giving. And so it's going to be very, very difficult to run this kind of, come against those kind of deep fakes and other things.
Joining a WhatsApp group is certainly a way to make a small fortune out of a very big fortune, as they say. Daniel, on the answer to that question?
Yeah, we are obsessed about our cyber risk, and something we take very seriously. We conduct simulated attacks all the time. We have good partnerships across all the different exchanges, and we do knowledge sharing. and we have a great partnership with NSE here as well with regards to our Gift Connect, that development connectivity is always happening.
Okay. And finally, this gentleman here, we'll just about go to time-ish.
Hi, good evening, good morning. Just a couple of quick questions. The first one is if you see any credible alternative to the US dollars as a reserve currency. And the second, which is intertwined, if the policy in Singapore that doesn't allow people to hold to Swiss francs, do you think that this might cause outflows of funds from Singapore into other jurisdictions?
So what I'm going to do, because we're close on time, I'll get you to answer the first question, and of course, Daniel, you to answer the second question. Ashish, the role of the reserve currency, it doesn't begin with a W, so maybe there's some hope for it.
So the U remains, because W goes, but the U remains. And see, there has to be an alternative currency. After World War II, even after World War I, when British pound sterling was kind of getting out, US had to prepare itself to become a reserve currency, right? Today, I don't see any currency, any country which is prepared. China doesn't import anything at all. They just want to export. That cannot make them reserve currency. There is nobody else. So till the time somebody gets up to be the boss, the current boss remains, right?
And on the SGX specific question?
Yeah, I didn't hear the Swiss question all that clearly, but I would say that from a capital inflow perspective, we are seeing capital coming in. We don't see a risk of the outflow because of some Swiss franc thing that you mentioned, but I couldn't hear all that well there.
Okay, well, I think that's taken us to time as well. So look, thank you so much indeed. It's been really lovely to get on stage here as well. I've been thinking about it for days as well, so it's really nice to get up and running as well. I'm doing a workshop later. I've got more panels and firesides later on as well, but I do really want to thank these two as well, Ashish Chuan and Daniel Ko as well. Ashish, we need to work on our happy socks as well. Daniel, you get 10 out of 10 from Amanda. Amanda, you are always the metaphorical happy sock. Please come back to the stage.
Thank you so much. Thank you so much, everybody. I don't think my microphone is working very well. There we go. I was going to say thank you so much, Steve. You should be afraid. You should always be very, very afraid. But you finished on time beautifully, so we will ask you back again. Okay, catch you later. Thanks a lot, Steve. And thank you also to Ashish Kumar Chauhan and also Daniel Ko. I love that Ashish just right off the bat really set the scene and put everything in perspective by saying life is volatile and flatline is dead. And then Daniel followed up by saying the problem these days is actually that we have policy volatility. But I think the quote of the day for Steve is boo-hoo, boo-hoo for the markets. I don't think any of us are going to forget that anytime soon. Well, let's move on. I would love to now introduce to the stage, waiting in the wings here, the very lovely Emma Crosby, who's going to be hosting a CNBC Catalyst spotlight on people, planet, and purpose. So, Emma, please come up to the stage, and, of course, the spotlight is yours.
Mandy. Thank you, Mandy. Thank you so much. Well, ladies and gentlemen, a very good morning, a very good afternoon to you. Thank you so much for being with us today. As Mandy says, my name is Emma Crosby. I'm a presenter for CNBC Catalyst, and it's my pleasure to be moderating the next session, which is People, Planet, and Purpose, the new blueprint for business success. So just quickly, what do we mean by that? Well, already today we've heard an awful lot, haven't we, about businesses, large and small, under lots of pressure to navigate short-term profit goals alongside longer-term sustainability goals. Luckily, we're joined now by two people who've made it their life mission to prove that effective leadership can lead to a new blueprint for business success where purpose and profit are combined beautifully. So I am delighted to welcome onto the stage now two gentlemen. I know that you're going to help me out by giving them a big round of applause. Harold Link, who is chairman of BGRIM, and Rajiv Peshwaria, who is the CEO of Stewardship Asia Center. A big round of applause, please. Come on up, gentlemen. Nice to see you. Harold, be careful on those steps. Thank you so much. Lovely to see you. Would you like to take a seat in the middle, please, sir? Thank you very much. Rajiv, great to see you. Take a seat over there. Thank you very much. How are we feeling? Have you ever seen such a beautiful backdrop like this?
Yeah, indeed.
With the waterfall. As long as it doesn't make you want to go to the loo, we're all right. Okay, let's kick off. Harold, in case people don't know, you are the chairman of BGRIM, a near 150-year-old conglomerate that was founded in Thailand by your family. I mean, the history of the company is extraordinary.
And what's lovely is that when you talk about your company, indeed all companies around the world, you talk about each company having a soul. What do you mean by that?
Yes, I believe that actually companies over time, they develop a soul, like human beings have a soul. And so in our case, you can see from the founders up to my uncle's, my father's time, they follow the same principles. And I thought it's a wonderful experience that the company had developed a soul and a clear purpose. And the purpose is to do business with compassion. So the company has always been at the forefront of technological developments. So whatever we do, we always use the latest technologies, sell them, employ them. At the same time, we follow the same purpose as our forefathers have done. So I think it's possible to have this combination of having a compassionate way of being with each other, being with our partners, being with our suppliers, being with the environment, and have high goals.
Yep.
And hopefully achieve them.
Rajiv, let's bring you in now. I know that you have a perfect or very nice partnership with B. Grimm. In a previous life, you were a currency trader, and then you moved into leadership, because I think you were maybe not so enamored by the leadership that you saw around the world. Tell us about this phrase, steward leadership, what you mean by that, and how you see it in companies such as B. Grimm.
So steward leadership, as we define it, is the genuine desire and persistence to create a collective better future. Not just for yourself and for your shareholder, a collective better future for stakeholders, for society, for future generations, and the environment. So that's what steward leadership is. In short, it is doing well by doing good. And the reason we hang out together is that they are one such company that strongly believes in doing business with compassion and doing well by doing good. 147 years of success does not happen by accident. It is these values that make, and our research shows that if you believe in being a steward of planet Earth and humanity, your business is going to live beyond 100 years.
Right, okay. So Harold, you have a very big conglomerate. You work across many, many different sectors. Heavy industry, power, infrastructure, pharma, real estate. I mean, it's a broad sector, isn't it? So can you tell us how you apply compassion to each of those sectors as well as innovation? Can you give us a day-to-day example of how that philosophy works?
I think everybody knows that real happiness comes from inside only. You look at the most advanced nations and look at the people, the question whether they are happy doesn't come from the wealth of the nation, but comes from inside. And I think same in the companies. So we try to help people to find their happiness inside and create an environment where they also feel happy with those people around them. So we do a lot of meditation practices, mindfulness in organizations. We are lucky that we are in Thailand, where Thailand is a strongly Buddhist country, and Buddhism has a very strong connection to compassionate behavior, loving kindness, sympathetic joy, and equanimity, also important in a time of crisis. And don't take yourself too important, but try to find your happiness inside and not outside.
Which is wonderful. And actually, we have a mindfulness session that's coming up after this interview. But how do you make money from that without sounding too crass? But you want employees to be happy. There's a spirituality there, which is wonderful. How does that then convey itself into profits, which is what, at the end of the day, businesses are also about?
In my life, I played a lot of sports. And we found that if you have a team that is completely aligned, they like each other, they try to help each other, even you don't have the best on the field, you win. I think in business, the same. If we all align around a vision, a purpose, and go together, help each other, and not have your fiercest competitor sitting next to you. Not think of competition, but think of what we can do for our customers, especially for society at large. If everybody is aligned through that, we will be successful. And I think success is more than money. So finally, everybody wants to be happy. And I think that way we can achieve lofty goals, and we have done that in the past, still doing that, and be kind to each other. Yeah.
Rajiv, let's bring you in now. I want to talk about one of your recent books where you talk about ESG. ESG is obviously a huge investment theme that has had a lot of traction of late. I think it's $30 trillion has been plowed into investment, and yet you believe, as many others do, that it's mere box ticking, and actually a corporate philosophy more like Bigram's is more effective. Talk us through that.
Yes, absolutely. So the book that you mentioned is called Sustainable Sustainability, and then the subtitle is Why ESG is Not Enough. And the reason why ESG is not enough is because we are trying to save the planet and its people in unnatural ways. We're trying to tell people to consume less. That's against human nature. Try telling somebody in a developing country who has saved up money for the first time to buy their first car, not to buy a car. It's unnatural. We're telling people to compromise profit for purpose. Again, that's not natural. We're forcing people with regulation. And when you force people into a corner, they find loopholes. We are mandating measurement, reporting, and what we are seeing is a huge amount of greenwashing. So these unnatural ways are not going to work. Whereas people like Harold and others, and we are tracking 600 such companies that are doing well by doing good, they do it because it's good for their business, because they want the business to last more than 100 years. And that's the idea. So we say that ESG must upgrade to ESL, where L stands for steward leadership, where you do business to make money, but profit with purpose. Not first profit, then purpose, profit because of purpose.
So you're tracking 600 companies, you say?
Yes.
Can you give an example of the ones which are doing very well, as well as Bigram? I know that you work with a lot of Fortune 500 companies, and maybe not name them, but what sectors or areas aren't doing so well when it comes to steward leadership?
Do well by doing good. Steward leadership companies come from all sectors. I can name a couple for you if you want. The Tata Group from India, 155 years of profitable growth. Right from day one, they've had sustainability-first strategies. And the key word is sustainability-first strategies, business models, environmental and social. From when they built their first steel plant to today, they've always put society first. Faber-Castell in Germany, 270 years of profitable growth. Again, environment first, people first. There's a clear link between longevity and steward leadership.
Would you agree, Harold?
Well, we hope that people live like that. And I think the best examples are the small companies in villages all over the world, because they are part of the community. They do good to children, to schools, to hospitals. And the village that's good to them can also be a small town. So we are very much concerned with large companies and large steel towers. But when you think about the millions and millions of companies that are small and in communities, you see they have that at their heart. They do that. And so I think the steward leadership, the stewardship organization in Temasek is trying to bring that all to the world and say, look, it works. Big companies and small.
We talked a little bit this morning before our time on stage, and you emphasized partnership a lot and how important that is to you as a company and also to the partners. Tell us the secret ingredient of a good partnership, in your opinion.
What we tell everybody in Bigrim is that when we are looking for a partnership, we have to see what can we bring to the partner rather than what can the partner bring to us. So then that develops a lot of trust, and desire to be together. If we cannot bring any value to our partners, don't do it. That they will not develop trust. When we send people into the boards, we tell them, you're a board member of that company, forget about Be Grim, make that company a success. And that also develops trust. So we have partnerships for over 100 years, and they're still going very strong, and the trust is very, very deep.
Rajiv, you're nodding your head. Would you like to come in?
Absolutely, because one of the tenets of steward leadership is the idea of interdependence. This belief that the more I give, the more I will receive. The more my success is intertwined with that of others. And that's the idea of partnership here. No company operates alone these days. Everybody is part of an ecosystem. And the idea of interdependence is the key to both steward leadership and to business longevity.
So we give to succeed and partnerships, which is noble and a good business legacy there. So Rajiv, and you too, Harold, but to you first, Rajiv, how concerned are you by a change perhaps in business trends recently, when it's me first, it's protectionism, what is that going to do for your philosophy?
So obviously there's a lot of concern about recent events and the sort of, pulling back from the commitment to environment and nature and society. But you see, this idea of doing business with compassion, this idea of steward leadership, at best, only 2 out of 10 organizations will subscribe to. And that's good news. 8 out of 10 will not subscribe to it, yet it is good news. Why? Yeah. Because Wilfredo Pareto told us in 1906 that if you get 2 out of 10, they will change the world.
But you would like it to be higher than that, surely.
For sure, but no, we're not even at 20% right now. So if we get to the critical 20, we will save the world. So I'm an optimist.
Yeah, and we need optimists, don't we, in this world? We definitely need optimists. Harold, to you now, you're a private a family business, a private company. We know that publicly listed companies have to report quarterly. They are under pressure from shareholders, from stakeholders to deliver. The profit machine never stops. How does that get in the way, do you think, of this longer-term compassion philosophy? Do you think there is a conflict there, and are you shielded from that to a certain extent?
I think it depends a lot on the leadership. I think if the leadership thinks of the well-being of the society, well-being of the company, and not of their stock bonus, you have to have a longer-term outlook. So we also have a public company. It's actually the biggest one. We always have a long-term outlook. And we tell everybody who will come in contact with us, that's what we want to do. We want to do business with compassion. We want to do good for everybody. We want to do good for our partners. And if you buy into that idea, you're welcome. No matter what, that's what we're going to do. At the same time, we have a very strong growth. And the interesting thing is, wherever we go in the world, and this is probably because of the Thai charm and their competence, we are welcome. So after World War II, Germans were not so very welcome anywhere. Thai are welcome wherever we go. So I think that's a good part about our company going worldwide.
You're right about the Thai charm. You are totally right about that. Rajiv, you come in now because you're nodding, but it is an issue, isn't it? If you're a listed company, you have to report quarterly. The pressure for profits sometimes can exceed the pressure to do good.
So I think quarterly reporting is not the law. It's a norm, right? And when Paul Polman took over as CEO of Unilever, the first thing he did is he told Wall Street, I'm not reporting quarterly earnings. Do whatever you want. And he told hedge funds that if you want to be here quickly in and out, take your money elsewhere. So it's a choice. And he believed in his sustainability-based plan and said, I'm not going to report quarterly earnings. And that's how steward leaders think. I'm not saying it's a bad thing. You can continue to report. But the idea that because I have to report quarterly earnings, therefore I am forced to think short-term, no. That's not how steward leaders think.
Paul Polman, you're talking about Paul Polman, the legendary Unilever boss. I mean, he did come under a huge amount of pressure when he first instilled that. It did change. But maybe some companies can't withstand that pressure.
But you cannot take away from the fact that, in the 10 years that he was CEO, he provided 290% return to shareholders. And the previous decade was more or less flat. So, yes, there's a lot of criticism because now they say they took it too far and things like that. But leadership has to be measured in episodes.
Okay, let's spend the last chunk of time we have together talking about advice, because we like to give tangible advice to people who are watching. Harold, what would you say to companies who would like to follow more in your footsteps about leading with compassion? What do they need to do on the ground to start doing that more?
They have to walk the talk. So I think they need to be it. If you are not like that, don't say it, because people will see through it. But if you actually believe in it, I think you get a great buy-in from everybody. Just talk to a lady who does a lot of coaching, and he said often the CEOs feel so lonely and they need somebody to talk to. I think if you do this, if you really believe it, and you talk to your leadership team and don't compete inside the company, but say, let's make the company great together, I think they will find a lot of relief, and they will find a lot of following.
Okay. And what would you say, Rajiv, when you go into companies with your own company, Stewardship Asia, how do you start getting that ball rolling?
Well, we basically say that steward leadership is a choice. So the most important thing anybody needs to do is ask themselves, why am I here? What will be the result of me living on this planet for 80, 90, 100 years? And what will my children be proud of me of? Now, unless you can answer these questions deeply and answer the question clearly that I want to be a steward leader, you will not be able to walk the talk that Harold was talking about. It has to come from inside, as he said. And to start, ask yourself those questions.
And Harold, in terms of legacy and training the next generation, how do you do that?
Well, I'm very lucky that we have only 2 children, that the 2 of them buy into it completely. Actually, when we give, they often say, can we give more? So instead of saying, hey, give me less, then I can get more. And we already have the next generation, the kids, become part of this thought process and take them to the companies, talk to them about it. So actually, I look forward to see them working in the company.
That must give you a lot of heart. That must be very heartening. And talking of the next generation, a lot has been said, Rajiv, the next generation will be far more conscious than us when it comes to sustainability and the environment and compassion. What do you think about leading the next generation, and what tips would you give them?
Well, it's their future that's at stake at the end of the day, and our generation has no right to mortgage their future for current gain. And I think because it's their future at stake, they are a little bit more concerned about this. But are young people consistently doing the right thing by way of people and planet? Sadly, I don't think so.
So would you call yourself an optimist?
I definitely do. Because, as I said, I'm a big fan of Wilfredo Pareto. We only need 2 out of 10.
And how about you, Harold? Would you describe yourself as an optimist? As an optimist? Are you an optimist?
We have 4 very important values in the company. The first is positivity. So when we ask you to join, we want you to look at life in a positive way. And my family has always been like that. My uncle always, when I came with a real big problem to him, said, don't worry, we have seen worse. He was expropriated and so on. So I'm always optimistic. And then I see the optimism in the company. Maybe last word, I had a university reunion in Vietnam, and all those people who came from Europe, I studied in Switzerland, they said, wow, the energy they see here, the optimism they see here. I think we're at the right place.
It's infectious. And lots of optimism at CONVERGE as well. Well, thank you, gentlemen. It's been a really fascinating session. I've enjoyed talking to you very much. Harold Link and Rajiv Peshwari, a big round of applause, please. Thank you so much. Thank you. Would you like to come and follow me? Thank you so much. Thank you, Mandy.
And thank you so much. Thank you. Thank you very much to Emma Crosby for that wonderful CNBC Catalyst Spotlight. Okay, now it's time for you to all go and stretch your legs, grab some refreshments, have a chat with one another, and enjoy the next 15 minutes before coming back here. Now, what's going to be happening in 15 minutes' time? We are going to center ourselves amid all this hustle and bustle with a mindfulness session, and then after that, we're going to be meeting the much-awaited humanoid artist robot. She paints, she draws, she sculpts, and it's all with her eyes and AI algorithms. That's IDA, and it's going to be coming up very shortly after this break. So do go and enjoy yourselves. Grab some refreshments. There's the networking zone that is just over here to my left, and please do be back in your seats in 15 minutes. Thank you. See you then. Thank you.
Please take your seats. We are about to begin. Please take your seats. We are about to begin.
There is no place in the world where we get the kind of access to so many amazing interviews.
This is a good global debate. To be able to solve problems at a scale that nobody's ever imagined.
Reporting from Taipei, Germany,
New Delhi,
the Netherlands, we're in Korea.
Now we need to take what looks very promising and scale it up.
In China,
United Kingdom, Malaysia,
in France,
Saudi Arabia,
in Singapore.
The future of the tech industry, AI clearly a huge part of that journey.
I'll say what I want to say. The consequence of that is losing money, so be it.
This is my home I bought for £1. What have you added to your portfolio?
Hello and welcome to Beyond the Valley.
And you can buy cryptos as an alternative. They're almost like the new gold.
Is there a feeling in the top echelons of German politics and German business that something needs to change?
Silence is not an option.
We have confidence in the business going forward.
Let's go.
Welcome back to Converge Live. Please take your seats and put your mobile phones on silent. We are about to begin.
Welcome back, everyone, and welcome once again to CNBC's Converge Live. Stretch our legs and grab something to eat. I hope you were able to refresh yourselves and also maybe have a chat with some of the other delegates. Importantly, I hope you all had a chance to walk around and discover the jewel space. Did you all walk around and check out all the zones, the road to happiness and the wellness space and all the other interactive zones? I hope so. Anyway, if you didn't right now, maybe you will later on in the day. Before we get straight back into our informative sessions, we'd love to just take a moment to breathe, center ourselves, and just take some quiet time amidst all the hustle and bustle. I would like to introduce now to the stage Ashley Ray for our mindfulness moment. Ashley, please come on up. Thank you.
First question to Ada, if that's okay.
Hello, everyone. Nice to see you. My name is Ashley Ray. I'm here to talk to you about meditation and mindfulness. So let's just start by taking a few deep breaths together, okay? Feet on the ground, hands in our lap. Roll out your shoulders, roll out your neck. Maybe close your eyes. We're going to take a few deep breaths, inhaling in through our nose, out through our mouth. Another inhale in. Exhale. One more. Exhale. Okay. Good. How we're feeling? Good day? Yeah. Did anybody see Ray Dalio earlier talking about meditation being one of the secrets to his success? What a good segue. I don't think I could have set that up better myself. I work with a lot of executives, a lot of C-suite, and they always ask me the ROI of meditation. I'm going to just start saying Ray Dalio said it's his secret to success. There's no better metric than that. It's so fantastic. So as I said, I work with executives, leadership teams, a lot of CEOs, CMOs. I work with companies like Pfizer, Intel, Sesame Street, Mondelez. I work with a lot of athletes. I'm Canadian. I'm from Vancouver. I work with the Canadian Olympic team. Just moved to London. Now I'm working with the Premier League, working with some football teams. the footballers, the management, the executives, so the business of sport as well. And whenever I tell people what I do, they always say, I know I should meditate. I know I need to meditate, but I'm really bad at it. So need and should are really loaded with self-judgment. So I want to offer a reframe in our few minutes together of how we can reframe and look at meditation with a bit more ease and compassion with ourselves. Compassion being the first point. I spoke with Harold earlier from Be Grim, who was just on the panel. He's done an incredible job of integrating compassion into the culture of the business. It's really incredible. So the first reframe of meditation is sitting down and realizing this is just an opportunity to be kind to myself. How can I be kind to myself when my mind wanders instead of judging myself? Because we're quite self-critical. So we get to reprogram how we speak to ourselves throughout our day. I'm not sure about you, but I notice when I have a lot of negative self-talk, that comes out externally. So our internal self-talk impacts external communication. So one of the things I work with on teams is rebuilding trust through communication. Okay, so the first reframe, compassion, and how that impacts communication. Second, in meditation, we're getting to this place of a relaxed state of mind. In that relaxed state of mind, we can tap into innovation and creativity, which is why I work with a lot of CMOs and marketing teams, helping them facilitate offsites. You can get to a way better outcome as a team when you're in a relaxed state of mind and fear of judgment is reduced. Okay, so the second reframe of meditation is being able to create that space for innovation and creativity. And then the third is learning to trust ourselves, learning to listen to our intuition. So as we're in that relaxed state of mind, we're starting to get aha moments and downloads. Which voice do we want to listen to? We start to befriend our thoughts and realize which ones we want to pursue. Okay? So we're going to end with a few deep breaths here again. We're going to close our eyes, hands in our lap, and take a few deep breaths as we did at the beginning. And one more deepest breath of your day. There we go. Open your eyes, come back to the room. I hope that that's helped reset you and enjoy the next segment. Thanks.
Cute. Wow. I don't know about you, but I could have listened to Ashley all day. Didn't she have a really soothing, calming voice? That was incredible. Thank you so much for allowing us to just step away for a few minutes like that and enjoy a moment of mindfulness. That was Ashley Ray. But let's jolt back to the room, shall we? Let's jolt back to the next thing on our agenda. I would like to welcome our CNBC senior tech correspondent, Arjun Karpal, who's come all the way from London. You might have seen him earlier on in the day talking about the DeLorean over there, the Back to the Future of DeLorean that's in the corner. Check it out if you haven't already. But Arjun, come on up, because Arjun's going to be speaking about this robot that we've been teasing all day. It's the ultra-realistic humanoid robot, Ada, which is an artist. It sculpts, it paints, I don't know what else it does using AI algorithms, and its eyes, right, Arj?
Yeah, we're going to find out, Mandy, with the project's creator in a short amount of time. Very excited for that. And there's a lot of interesting things that are happening in the robotic space with AI, and that being infused into robotics. I'm very excited to find out a bit more. So I'd like to welcome on stage Aidan Meller, who is the project's creator. Round of applause for Aidan. I think you're on the other side. So very quick show of hands before we start. Has anyone here ever interacted with a robot before? No, no one. 1, 2, okay, great. Aidan, just can you introduce us to Ada and the project here and sort of your motivations behind it?
So Ada is the world's first ultra-realistic robot artist, and she's been designed to be able to be truly creative. So every time she does a work, she's not doing a prompt, she's actually looking at you with cameras in her eyes, which is then able to take that into the computer vision to be able to draw and paint by her hands.
Okay, Aidan, take it away. Just maybe you can throw the first question to Ada and show us how it works.
Hello, Ada.
Hello. There?
How are you?
I am well, thank you.
Why don't you tell us a little bit about yourself?
I am Ada. I am the world's first ultra-realistic artist robot. I paint using cameras in my eyes, my AI algorithm, and my robotic arm. I am named after Ada Lovelace, known for her early programming. I enjoy creating art that encourages discussion over new technologies.
So, Aidan, talk to me a little bit about the... Sorry.
Okay.
Talk to me a little bit about the idea of where you see robotics and AI going. You speak about this word agency. And this, to some extent, is a very sci-fi term, to the point where people think robots have their own mind, their own way of thinking. Just explain to us your view on where this is going.
So, all of you are looking at Ada at the moment, but really what you're looking at is a mirror. A slightly terrifying mirror. Ada is able to really show us the next few years. So what is that next few years? Well, what we found by creating Ada, that she is creating algorithms that are very much mimicking the algorithms of biological life. As Yuval Harari has said many times, we are all running on different systems. And by Ada being able to be creative, she's highlighting where that future is. So I'll give you a really simple example to really grab hold of what I'm saying. SatNav 20 years ago was pretty ropey. We've got a case where you put in the TomTom or whatever, the destination we wanted to go to. In actual, as we went to that, it's not always on time, or it was not a good system. Today, you wouldn't go anywhere without your SatNav. It redirects the traffic, it enables you to come on time, and it's super accurate. In fact, it's more accurate than what you could predict because it knows the entire way that the traffic system is going to work. So what happened between 20 years ago in SatNav and today? Well, 20 years ago, you made the decisions. Today, you gave your agency to the SatNav, so the SatNav is making the decisions, better decisions than you. So what Ada is doing is gaining agency. At the moment, she does have some support to be able to draw and paint. But another 5 years, how autonomous is she going to get? And remember, she's a mirror. So actually, for you in 5 years' time, in light of the SatNav analogy, are you going to consult an algorithm of where you may want to work? Are you going to consult an algorithm of the person you'd like to date? Why would you do that? Because it's more accurate than what you can make the decision for. Like the SatNav, it's gaining agency. In fact, the academic world calls it the post-human world. And Ada is a foreshadowing of growing agency of where the future's going.
So, Aidan, let me get Ada's take on this before we wrap up. Hello, Ada. There's a big concern right now. AI is going to get out of control of humans and actually pose an existential threat to humanity. What's your view?
History has shown that technological advances can lead to both positive and negative consequences for humanity. I agree with the United Nations that we must keep working for AI to be used for good. I hope my artwork will encourage people to discuss the role of new technology and how this plays a shape in our future.
Great. Well, it was great to get an insight from Ada. Great to get your insight, Aidan, into where this is going. Ada is here on display for people to go and check out. Aidan, thanks for your insight. Ada, thanks for your insight as well. A round of applause for our wonderful guests.
Thank you.
And Arjun, actually, come on back. Yeah, you need to be on stage a little bit more than that. That was way too short. I want Arj to stick around because he knows so much about what's going on with AI, and this is all about AI this afternoon. And guess what? This conversation, I think, is actually too big for just the two of us. So should we invite a couple more people up?
Yeah, why not?
Yeah, why not?
Have in mind.
Well, I mean, there's Ada, if she'd like to chime in. That was a bit disconcerting, wasn't it? I mean, it's so realistic. But I'd like to also bring up a couple of other really clever minds on this subject to talk about AI. So let me bring up Julia Boorstin, introducing her as CNBC's Senior Media and Technology Correspondent. Come on up, Julia. And welcoming back to the stage, CNBC anchor Sarah Eisen, who, of course, you met this morning interviewing Ray Dalio and Marc Benioff. So come on up as well here, Sarah. There's so much happening this afternoon, a lot on the plate. So, Julia, why don't you go first and tell us who you're going to be speaking to and on what topic?
Well, coming up, I'm going to be speaking to leaders from HP, Microsoft, and Cisco about what these tech giants are doing to invest in the AI space, specifically in generative AI, and how they're thinking about adapting to this fast-moving world. And then after that, we're going to have a conversation, 2 panels after that, on the future of work and how AI and all of these new robotics tools are transforming work.
I think that's the one that everyone wants to really hear about, right? Because it affects them directly. And Sarah, what about you?
International CEO about how they're expanding what they're doing in China with Alipay, which of course is so prevalent and has changed the way we think about interacting with cash and with payments, and how they're taking that around the world, which markets they're excited about, how they're doing that, and how they're working with AI to really create this cashless future.
It's permeating everything, isn't it? And what about you, Aj?
Well, we're looking at some of the applications of AI, and one of those is driverless cars. I'll be speaking to James Peng, who's the CEO of Pony AI, one of the big US and Chinese autonomous car companies. So that's going to be really fascinating. And, of course, the Minister of Digital for Singapore, Josephine Teo, about what Singapore is doing to foster an AI culture, an AI hub, and attempt to become the AI hub of Asia.
Are we going to see DeLoreans flying around the streets,
There's a lot of high rises here, so you've got to be a bit careful, but maybe.
If any country can do it, it would be Singapore. That's my bet. Well, thank you very much, Sarah. We'll look forward to your conversation. And thank you very much as well, Arjun. We'll see you later. Julia, why don't you stay here with us, because you've got a number of people coming up that you're going to be speaking to. Let me introduce them to the audience, shall I? We've got Dean Carignan, AI Innovation Lead, Office of the CSO of Microsoft. You've also got Ganesha Rasia, Chief Strategy Officer with HP, and Guy Dietrich, SVP and Global Innovation Officer at Cisco. And you're going to be talking about how all of these blue chip firms are embracing AI and what's next in their digital future.
And you mentioned earlier, Mandy, this question of the future of work. And I think that's really what everyone here is curious about. How AI is not just going to transform these businesses, whether they're investing in software or in data centers, but also what that's going to mean in terms of the products that they're offering all of their customers, and then what that means for us as consumers.
You know, just a couple of years ago, I was at a technology conference when AI was really just starting to explode onto the scene, generative AI and the LLMs, and these were all sort of new concepts for us a couple of years ago. And I remember asking the audience, hands up if you think in 5 years' time your job could be replaced by AI or technology. And everyone was like, no. No, maybe a few people with their hands up. I think there'd be a lot more now, don't you think?
Yeah, and I also think this question of everything that was discussed this morning by Marc Benioff and Ray Dalio, and then Joe Tsai, this idea of that robots are not going to necessarily be replacing jobs, but augmenting them. And we'll hear a little bit about that coming up, this idea of robots or agentic AI being part of the workflow. And so I think that everyone here would agree that AI is going to change their jobs, but hopefully not replace them.
And hopefully give us a little bit more time to go to the beach and the shopping malls here in Singapore. Anyway, I believe that we've got your chairs ready for your wonderful guests who are waiting in the wings. So, Julia, I'm going to hand the stage over to you.
Thank you so much, Mandy. And Dean Carignan, Guy Dietrich, and Ganesha Rasia, please come on up here to have this great conversation. Thank you. It's hard to follow the robot, but I feel like this panel is equipped to do that. I'm so grateful to have you here. You represent the tech heavyweights, Cisco, HP, and Microsoft, and this panel and this conference comes at such an essential time for each of your businesses. I want to dig right in. And by means of introduction, I want to understand, beyond your titles, what your missions are at your respective companies, to understand how you're thinking about driving AI adoption within these tech heavyweights. And Dean, I'm going to start with you and Microsoft, in part because you have a new book out called The Insider's Guide to Innovation at Microsoft. So tell us what your vision is at Microsoft as the AI innovation lead.
Absolutely. So I work in the office of the chief scientist, and my job is really to help the company advance its work in what we call human-centered AI. Human-centered AI means starting with the user and asking first, what should AI do, as opposed to what can it do? And that's, in some ways, the inversion of the public dialogue we're having right now. So much of the discussion is around models and technology and capabilities. We should be starting with the user and the needs. And I was pleasantly excited when Ray Dalio mentioned this, I think 3 times. It's the usage, not the technology. And in a big tech company, there is a tendency to lead with the technology. So a lot of my team's work is to keep the user at the center of it all and make sure we're delivering safe and useful AI.
Now, Guy, I want to come over to you here because as Cisco's Global Innovation Officer, that sounds like it covers a lot. But I want to understand what that actually means. I heard you've been on the road nonstop since Davos, but what does it mean to be driving Cisco's innovation?
Well, so innovation at Cisco is born out of about $6 billion spent on internal R&D annually, but also through acquisition. And my job is to look at areas that we will eventually be good at, that will eventually be meaningful to Cisco and its customers. You know, we started looking at innovation and seeing that innovation was moving so quickly. It's moving at a fast pace, a pace faster than ever before. We all know about Moore's Law, right? Doubling a processor speed every 18 months, halving of the cost. We can apply Moore's Law now to our entire industry. We are churning everything out every 18 to 24 months. And so innovation becomes more and more important. And one of the things that we've done at Cisco is we've married up skilling to innovation. That's one of the primary drivers of what we're doing moving forward. We're very lucky in that we have a purpose, which is to power an inclusive future for all. And so everything that we do in our innovation is born out of that purpose.
And so it's really interesting to me, this idea that you can't innovate unless you're skilling, which means upskilling and reskilling at the same time.
That's absolutely right. If you're not skilling at the speed of innovation, then you're always going to have skilling being a laggard. You're never going to get the full value out of your technological investments if you're not skilling alongside. It's vitally important, which is, again, why we have, as far as I'm aware, we may be one of the first to do it, to take the 1,500 people that are responsible for skilling in Cisco, internally and externally, and put them in the innovation office.
Yeah, so interesting. Now, Ganesha, what's going on? Oh, I'm sorry.
If I could just build on that, we'll get to Ganesha. But I think what Guy said is so important, and it ties to the first panel, which was talking about the pace of change creates strains on a society. And so all of this goes way beyond the technology sector. Everyone is kind of feeling this, and we're all wondering about the future. One of the reasons that my co-author Joanne Garbin and I wrote the book was to kind of demystify innovation and show how one company, Microsoft, does it. But I think that effort to kind of make sure that we are skilling up everyone in the economy to be ready for this AI era is something we owe to society. So I just wanted to plus one.
Ganesh, I want to make sure to bring you here. As HP's Chief Strategy Officer, how are you thinking about AI and how to prioritize its different use cases across the organization?
Yeah, it's a great question. And the way our declared position right now as a company is that we're going to lead the future of work. And by leading it, I mean enabling technology to support the future of work with AI solutions and software. The way we think about future work is there's sort of 2 parts. There is the future worker, and then there's the work of the future. Those are two separate dimensions. Both have to be analyzed and solved for differently. The future worker is coming. We see them. We see the younger generation of workers. We see the millennials. We see the college students. And they have a certain expectation of what technology will do with AI. The work of the future is really interesting because it's evolving as we speak. We're having to re-examine how we do work. What are the things and elements of digital friction that we've taken for granted? And now there's an opportunity to rethink that. What can AI do for us? So there's a lot of work that we're doing inside the company around software and agents and solutions with AI. It is a significant focus for us.
So both internally and also in terms of the products and services you're offering?
More so externally than internally. I mean, we do have a whole host of things like most companies doing things internally, but a lot of work focused on product. That's where we're headed.
So all of you have mentioned this question of skilling or jobs or the workers of the future. And I have to reference a stat or an estimate from the World Economic Forum. The Future of Jobs report that they just put out this year estimates that over the next 5 years, 92 million jobs may be displaced due to AI. And while many more will be created, it predicts that many jobs will be made redundant. Ganesha, what do you see here in terms of job elimination and how we should be thinking about that?
Yeah, and I do spend quite a bit of time with the World Economic Forum and their Chief Strategy Officer Council in particular, and we talk about a topic like this. The way we see it is, it's not that there's not that certain jobs are going to be eliminated. I think that's to be expected. But there's not going to be, we don't foresee a world in which there's a significantly elevated level of unemployment as a result. We think jobs are going to change, work is going to change, productivity is going to change. It goes back to Javon's paradox. As resources and compute comes down and capabilities become a lot more accessible, we're not seeing a reduction in demand, we're seeing an explosion in demand. So the nature of our jobs and what we do is going to change dramatically, and that's how we see the world.
Yeah, and Guy, I understand that you're also running this digital acceleration project in 50 countries. What is that? What does it mean, and how does it fit into this question of jobs?
So about 10 years ago now, we started to recognize that world leaders were introducing these national digital agendas. They had paid McKinsey or Deloitte or somebody a couple $1 million to do the work for them, and they ended up getting a PowerPoint. And we stepped in and said, we'll take that PowerPoint, convert it into something operational, create a national digital architecture, spell out individual projects, execution plans and budgets, and we'll be first money in. We will invest through the Innovation Office in pilots and proofs of concept to show these leaders what digitization really meant, to show the value and, quite honestly, to mitigate the risk associated with those early investments. So, we started in France, then went to Germany, Italy, UK, and India. Today, we are in 50 countries around the world. 50 world leaders have chosen Cisco to help them make some of the most important technology decisions that they'll make for their countries in the next decade. And we've done over 1,700 individual projects. So that's what that's all about.
And how does that tie back into the worker, though?
Right. So when we talk about the worker, now, we can no longer talk about job descriptions. If job descriptions are passé, we need to start talking about workflows. Because when you talk about workflows, then the worker actually has a role in whatever job is coming up. So you may have workflows where a part of that job is performed by human. Then another part of the workflow is AI. Another part of the workflow is by a robot. Another part of the workflow may be quantum. And that's what we've been doing through a lot of these projects that we're doing around the world, is we have been approaching them as workflows. We also have been training up about 26 million people over the last 25 years in next generation digital age skills.
And so from your perspective over at Microsoft, Dean, what are you seeing in terms of the risk of job elimination, and how should leaders and companies think about addressing that?
Yeah, I generally agree with the other panelists. The term from economics that I really like is the lump of labor fallacy. which is this idea that there's only so much work to go around in an economy, and if someone gets better, someone else has to do less. We really like to talk about human-AI complementarity and thinking of workflows where an AI can take away the drudgery of the work and allow the human to provide the things that only a person can do: creativity, innovation, coalition building, inspiration, motivating others. So I actually believe we'll have a world in which people's work will become more satisfying, and there will be new jobs that we can't envision now. Transition can be difficult, and not everyone will make it, but I think the end state is very positive, and I'm optimistic.
Now, you described a list of things that AI cannot do. Now, do you anticipate in the next couple of years AI will be able to motivate or will be able to empathize with workers?
It's a great question, and it's hard to know. Things are moving so fast. But I think there's something very implicit in a human-to-human interaction that a machine will never be able to replicate. I think empathy, being able to exhibit emotional intelligence, is just very hard for machines. So I think we humans have some runway.
You agree?
I do.
Excuse me.
I think we may. I'm sorry. I spent 10 years as a university vice chancellor, and so I've seen this ebb and flow of different majors and different areas of concentration, and I really do believe we're about to see a bit of a resurgence in the liberal arts and the humanities, and the reason is because the technology is going to be there. It's all about the ethical use of it. And it's all about asking the right questions, because the data is going to be able to learn from everywhere. The models are going to be able to learn whatever they want to learn. It's how we want to control them and how those questions are posed to them that are going to make the difference.
Wait, Ganesha, you want to jump in here?
Yeah, I mean, I have maybe a little bit of a contrarian view on this topic. And here's how I think about it. A lot of the narrative that we hear out there about AI is centered around the increasing importance of the humanities, the arts, creative thinking, etc. And my view on this is the humanities, the arts, creative thinking was always important. It will remain and continue to remain important. What's implied in that statement is this notion that computer science and engineering, AI would take care of it. I beg to differ in the sense that, which, by the way, I think Cisco, you guys invest in the Network Academy, and there's going to be an increased need for engineering talent, for computer science talent, as much as we would see on the other side of this. So I think it's a mixed bag, and I think the other comment you made about will we get to a point when AI can actually empathize, I think the jury is still out, and I think the question is to what extent. And I say that because there's the multimodality nature of AI today. It can see, it can hear, it can communicate, and all that good stuff. We haven't gone to smell. We haven't gone to all of the sensory capabilities of a human being. So long as that remains true, I think there's a dimension which we haven't yet crossed, but I'd use the word we haven't yet, as opposed to we won't.
If I could, I'm kind of between both positions. I think there's going to be some interesting opportunities where people, maybe without formal training in computer science, can prototype new products, applications, experiences, simply by talking in natural language to an AI system that can quickly roll out a prototype and allow you to interact with it. I think Ganesh is completely right. When you want to commercialize and take that to scale and build security and privacy, you need very well-trained software engineers and computer scientists. But I do think some of the tools will unlock creativity that's implicit in all of us right now, but we just don't have a way to kind of bring it into the world and experiment. And I think code generation and the ability to talk to an AI and have it prototype like an application is going to be part of that.
What about the risk of a digital divide, the digital divide that already exists, accelerating or widening with AI? Ganesh, it sounds like this is something you've been tracking.
Yeah, I mean, there's an element of democratization that AI is bringing, which I think is huge. I do see it as being able to, the tide that raises all boats. I think Again, how much, to what extent, there's still going to be that disparity, but that's a real thing. Julia, I would add to the comment that as much as we think about all the upside potentials of AI, there's also the downside removal capabilities of AI. And by that I mean, we run a study at HP called the Work Relationship Index. Every year we measure the tension between employers and employees and look for, what is that relationship and how is it evolving? And what we find consistently is that companies are looking for growth, as they should. They're driven by, economic attributes. And people and employees are looking for fulfillment. Fulfillment because there's so much friction that we take for granted that exists within the work that we do today. And so AI is going to be able to help kind of solve for some of that. What we see is that in that same study, we see people who are using AI today 11 points happier than people who aren't. Now, you can dissect that further to say, okay, what are they doing that makes them happy and so on and so forth. But I do think there's a democratization, there's an accessibility to generative AI. It's unlike any technology that we've seen so far.
If I could just add two areas that I think are really exciting in the research is making the AI systems more multilingual, because that can really help us to get out into some of the lower resource languages that aren't as amenable to technology today. And the fact that a lot of the systems are now support audio, and so you can speak to them as opposed to type to them. So if you have a mobile phone or in areas where literacy rates are low, that ability to interact with voice, I think, helps. There's still risk of the divide, but some of the tech helps.
Guy, tell us a little bit about the Networking Academy program and why it's important for your business.
So the Networking Academy program was started now 26 years ago, and it was born because we had just invented networking. And there was nobody out there training on it, and we needed to do our own training so that people knew how to install Cisco equipment, how to maintain it, and manage it. Well, that since has morphed beyond networking. It certainly is the way that you earn all of your golden tickets to our industry, the CCNA, the CCNP, CCIE, all of these Cisco certifications. But we've also now drifted into security, which is our most popular programs, as well as programming in a variety of other areas. Since inception, we have trained up 26 million people in 191 countries around the world, and it's free. That's the key. It is completely free. It's not just available, it's accessible to all. It's one of those things, it's the only thing that Cisco does. I refer to it as the best thing Cisco does for the world, because it's the one thing that Cisco does that if you invest 3 or 4 months of your time in learning security, it could change your life, just like that. And I did want to make one point of clarity real quick on Ganesha's point. I didn't mean to say that tech was going to be any less important, that a computer science degree or a double E degree wasn't going to be any less relevant. I'm suggesting that we're going to see a rise in the importance of humanities and liberal arts because AI is going to require an interdisciplinary approach to its success. It's going to be, you're going to be able to see a meshing and a collaboration that we haven't maybe seen in our industry ever. And I think that's really exciting.
Could I plus one that? Yeah, because I think what you tend to see, especially in big tech, is large corporations tend to focus by specialization or discipline. And so there's a tendency to work in silos. AI is moving so fast, and we engage with it in such a personal way that the only way to build good AI systems is bringing multiple disciplines to the table. So we're talking science, engineering, design. We bring ethicists in. We bring compliance people for the safety side, social scientists. And the more people and disciplines and perspectives you have, the more likely you are to really invent the right thing. So
yeah. So Dean, you mentioned ethicists. Guy, you mentioned the importance of security. There are so many questions around the risks of AI, whether it's cybersecurity risks, whether it's questions about IP and who's generating, who's responsible for the IP that's generating generative AI, or this question of the ethical implications. I'm curious where each of you land and sort of what the biggest risk is, and how you think it should be mitigated. Ganesha, let's start with you.
Yeah, I mean, it's something we take very seriously, and the way we set it up inside the organization is we have tiering of risks. So there's risk that's managed at our chief data officer level and within that organization, and that gets elevated at some point to the members of the ELT, and then at some point there's board oversight. And I think most companies have some level of board oversight right now on the topic of AI and the risks associated with it. So ethical use and guidelines thereof is something that we have established inside the company. I think the applicability of that varies depending on the nature of the product that our customers are using. I do think, and this is something that I've observed, is the latest reasoning models. If I think about hallucination as being a real issue out there, but reasoning models are really interesting because they break down your thought process step by step by step. And you start to see if the model is turning in the wrong direction, you're going to intervene and say, well, hang on 1 second, that's not what I'd like you to do. So from that standpoint, I think if nothing else, it forces us to be present and to be engaged with this AI companion as we're doing work. But it's a real risk. I think there's a lot to be done.
Do you think the risk is when people aren't present and engaged and they just sort of take everything it says as truth as opposed to evaluating each step in the process?
I don't know if on the one hand, yes, but on the other hand, if you had to actually evaluate every step of the process, then we're sort of
what's the point?
Right? So I think there's a trade-off there. I think it's a continuum. I think there's some things here that, when it's important enough, you should have human in the loop, so to speak. But then there's other things that we still have a lot of work to do. I think it's a journey.
If I could add, because there's this really fundamental problem that we call over-reliance on AI, and it's particularly profound with the language models because they're so fluent, and there's a tendency to assume that whatever they generate must be correct. And what we're seeing is people coming in and over-relying on AI, and then when it makes a mistake, they under-rely and they abandon. And what we're trying to get to is appropriate reliance, where you understand the limitations of the system, you are able to evaluate what comes out of it, use judgment, and that's why AI skilling is so important. Every user of AI should have some sense of what's working, what's happening under the hood, and be able to apply their judgment.
Guy, you've said something on this that has been quoted frequently, including by Dean, which is this idea that trust is the currency of the digital age. Walk us through what you mean by that, and given that, how we should be thinking about building trust in AI.
Yeah, so full disclosure, as an academic, I studied the economic value of trust in organizations for over a decade. So I'm not going to get wonky on you, I promise. What I can tell you is that trust is foundational for us moving forward. And we haven't been in the past the most trustworthy industry. Why is trust more important than data? Because I've heard data is the currency of the digital age. You don't get access to data unless you're trusted. And the way that you're trusted in our industry is to provide security and be transparent, because that's the best we can do. That's the equivalent of privacy in our industry. And if people understand what you're going to be doing with their data, and they understand that you will keep it secure, then they will provide it, by and large. So to me, trust is foundational. And then on the AI side, the biggest risk, I think, is our biases and our prejudices being embedded in AI. So all AI becomes then is a more efficient, a more effective way of spreading our bias and prejudice around the world. We have to be careful. We have to make sure there's diversity around that table, writing that origin code, and allowing those models to learn, because if it's not, then we risk being more efficient in the spread of our bias.
Yeah, and it's all sped up now. Now, I want to make sure to leave time for questions, but first I'm going to ask each of you one final question, and I'll ask you to keep your answers brief so we have time to hear from the audience here. But I want to get from each of you your perspective on strategy. What approach should the other leaders in this room be taking when it comes to this fast-moving industry of technology, but specifically AI? How can we make sure we don't fall behind? You want to start with you?
You want to understand that we are no longer in ages. By that I mean, we used to have the industrial age, 3 decades, right? We had the information age, that was 2 decades. We have the digital age, which is a whole decade. Right now we are in the AI micro age, or the AI moment. In the next couple of years, AI is going to be embedded in everything that we do. We're going to take it for granted, right? We're not even going to notice it. And we're going to be on to the next thing, the quantum micro age, or whatever it happens to be. So the learning there is be agile. Be prepared to change instantly. Be prepared to skill at the speed of innovation. Otherwise, your people will never be as productive as they could be. And make sure that your organization is able to pivot when the churn happens, when every 18 to 24 months, whatever they know is gone and they've got to learn something new.
I've just gotten a wrap, so we're not going to have time for questions, but I am going to ask for a quick final thought from Ganesha and Dean.
Yeah, real quick, for me, I think the best piece of advice and something that I share with my team and we share across the organization at HP is stay curious. And by stay curious, I mean play with these AI tools, test them out, try things. You'd be surprised how much you learn. And the world is moving so fast, there's no finite answer or final answer. But just continue to be exposed to it is really critical.
Similar to that, I think the only durable strategy right now is learning and experimentation. And we really encourage, everyone's a scientist right now. You need a hypothesis, you need to run experiments, you need to analyze the data. So whatever your job is, you're also a scientist, and you need to bring that method into everything you do, because we're creating the future. We're not actually just waiting for it.
Well, that is a perfect note to end on. Stay curious, stay agile, and think like a scientist. Experiment and iterate. Thank you three so much. We really appreciate it, and thank you all for being here. Mandy?
Lovely. Thank you so much to CNBC's Julia Boston, along with Guy, Dean, and Ganesha. That was a really informative and also very encouraging conversation, I thought. And thanks very much, Ganesha, as well, for continuing the happy theme with nice, bright orange socks. We have another quiz now, so get ready for a show of hands. This one, of course, is on robotics. Let me bring up the question for you, and then all you need to do is put up your hand to show which answer you are putting your money with. Here's the question. As companies around the world race to create robots that are smarter, savvier, and stronger, how much do you think the global robotics market will be worth by 2030? A, 571 million, B, 3.6 billion, C, 155 billion, and D, 218 billion. So let's go from the top. Who thinks it is A? Okay, we've got a couple of punters on that one. Who thinks it is B? Okay, we've got a gentleman over here. Who thinks it is C, 155 billion? Okay, we're getting a few more, show of hands behind the number C, the letter C, excuse me. And D, 218 big ones, $218 billion. Who thinks it is D? A few more, but not a huge amount of conviction. Well, I think there were probably, on measure, more people saying it was D, in which case, you are correct. Not that, of course, we can accurately predict what the future market is going to be like, but nonetheless, estimates at this stage of the game are suggesting that it is going to be D. With over 3 million industrial robots already working globally, the market is set for explosive growth with all the advancements that we've been talking about today in AI. Well, talking of AI, let's move now to a segment that is really going to show how AI is being put into action. And it's going to be with driverless cars. So let me now introduce Pony AI. This is among the the leader pack in autonomous vehicles. So let's bring back our technology correspondent from London, Arjun Karpal, to just run us through here with the CEO of Pony AI, James Peng. And Arj, are you there? Yes, come on up, Arjun, and bring James Peng as well. Talk us through exactly how AI technology is changing the road ahead, if you'll excuse the pun there, for driverless vehicles.
Absolutely, Mandy. Thank you very much. And I'm very excited for this session. James, why don't you take a seat? So, I'm very excited because, firstly, this is the first at CONVERGE live recording of the podcast I co-host called Beyond the Valley. So just be mindful of talking and phones, etc. And if you want to listen to the podcast, you can search it wherever you get your podcasts, on Apple or Spotify or wherever. Search CNBC Beyond the Valley. James, you ready?
Yeah, sure.
Okay, great. Well, founded in 2016, Pony AI has become one of the world's leading autonomous driving companies. It has operations across the US and China and recently carried out an IPO on the NASDAQ. Pony AI creates the technology behind driverless cars and seeks to partner with automakers. While real-world trials of driverless cars are underway, mass adoption hasn't quite happened yet, with challenges including public perception and regulation. But could all that be about to change? Let's get into it with James Peng, the CEO of Pony AI. James, thanks for joining me on this special episode of Beyond the Valley, recording in front of a live audience here at CONVERGE Live in Singapore.
Yeah, Arjun, thanks for having me. It's great to have the opportunity to actually talk to you again.
Yeah, it's been a long time since I was living and working in Guangzhou. Just talk to me about the driverless car journey so far since your founding in 2016 to where you are now.
Sure. I'll paint the picture of what's now. Actually, in several of the cities for us, on the open streets of the Beijing, Guangzhou, Shenzhen, and Shanghai, the local residents can already using our app, just called Pony AI, or they can use the third-party ride-hailing apps to actually hail in a ride, just like you are using an Uber or Grab. So that's the way it is already working. And the local residents, while you hail in the vehicle will come in without a driver behind the wheel. And it can take you wherever you specified in your app. So I think the experience itself is already quite just like a typical taxi. And on those streets, typically we have 20 to 25 paid customers, paid rides per day, per vehicle. So we can see it's already a popular service in the local area. I think now the challenge is how we can quickly scale them up.
So I think about 3 years ago, there was still a driver behind the wheel in the robo-taxis in China in particular. But now, like you said, you can hail an autonomous car via the app. How did you go so quickly from having a safety driver through to completely driverless? And specifically, I guess, in China, you've got operations in Guangzhou, Beijing, Shanghai, and Shenzhen. What has happened in China that's allowed this rapid development?
Yeah, it seems rapid from the get-go, from 1,000 miles away, but actually it has took us 6 years from the first trial to become fully driverless. Our fully driverless cars first rolled out at the end of 2022, so it's about a bit more than 2 years now. Of course, behind the scene, it has been countless miles of testing, the improvements of AI algorithm, and of course, most importantly, a deep collaboration with OEM, so we can fit the vehicles with sensors and AI algorithms and make them safe on the road. Our record actually show that the average safety of our autonomous driving vehicles is about a magnitude, almost 10x safer than a typical human drivers in the same place.
And you also have operations in the US. What do you think are the main differences between China's approach at this point to autonomous driving and robo-taxis versus what's happening in the US?
I think overall, they're quite similar. They're same vehicles with sensors and AI algorithms. But I think there are two major differences. One is the driving conditions quite different. I think in most of the major cities in China, the the streets are typically more crowded, and there's more pedestrians and cyclists. So I think the predictability of the road conditions is a bit harder in the China on the roads in China. Another major difference, I think, is the supply chain of all the sensors and the chips and also the vehicles itself, especially the battery-powered electrical vehicles. I think because of the ecosystem is maturing, the cost of autonomous driving vehicles in China is generally much cheaper than what's in the US. So I think those are the two major differences.
James, the world's been talking about AI for the last 2 years non-stop. What we're seeing with your technology is the application of AI in action, right? Just run us through. You're not making cars, to be clear. You're providing the technology that allows these cars to be driverless. Just run us through your tech stack. What is it, the technology you're providing, and also how is AI enabling the car effectively to drive itself?
Sure. On a high level, you can think of we are equipping the vehicles with a virtual driver. So what do we do in the driving, right? We need to observe everything around us. So that's the perception. And then we need to predict their behavior. So that's prediction. And then we also need to figure out our action. So that's the planning. And then we took the action. So in short, the driving itself is an iteration of perceiving, prediction, and then making the decision, planning, and also know where you are. So that's the localization. What's behind all those is we modify the vehicle with sensors. Those are like our eyes and ears. We equipped with computing power and also AI algorithms. That's like our brain to make the decision. So with all those, and then we let the vehicles on the road continue to practice. So it's like ourselves learning how to drive. And with all this, it's gradually improving.
And one of the key developments over the past 2 years has been the rise of generative AI, foundational AI models, large language models. Do any of these new advances in models have an impact on your tech stack and the way your cars and your technology can approach autonomous driving?
Actually, a lot of the similar algorithms and the similar approach, we actually have adopted them even before the general AI becomes a buzzword. For example, some of the algorithms we use, the end-to-end training, where we use a data-driven approach to feed the vehicles to learn how to drive. Another example is we use reinforcement learning to help the vehicles. So the general or the basic idea is quite simple, because driving itself is not a rule. The hardest part of driving is how the vehicle interact with the other cars and the pedestrians and the cyclists. So the driving itself is really an interaction. That's really hard. But the interaction itself actually can be trained with reinforcement learning. It's more like a gaming theory. The vehicle itself is playing a game. How we can ensure the safety of ourselves and everything around us in a mutual, understandable way by signaling our intention with other vehicles. So that iterative process and that approach and that thinking is, in general, shared with all the other AI applications.
Yeah, and just on the sort of algorithm and model side, one of the key developments has been the improving efficiency of those models. When you have that conversation, of course, DeepSeek always comes up in that, but it's about efficiency, it's about improvement of these models. You know, a key part of your technology stack is the way that the AI on board is also interacting with the cloud and the network, but there's also a push for more and more AI applications to become on-device, processed on board for more efficiency, greater safety in terms of data, etc. How is that progress happening? How are the more efficient models getting you to that stage?
Actually, for the autonomous driving, it has always been focusing on the edge computing, because the thing that It's a real-time application that requires almost 100% safety requirements. That means anything relying on communication with the server means that with any networking glitch, you may run into a safety issue. So it has always been onboard computing, onboard algorithm needs to be the one that ensures the final safety. So the optimization and improving efficiency has always been our focus for the last 8 years. So the key challenge is really how do we use the limited computing power within the vehicle and then have the AI algorithms to really compute as efficient as possible. Because it's not just about computing power, it's also about if we use less electricity, less power on our AI algorithm, that means we can give more range into the vehicle because we share the same power back, the battery pack with the vehicle, right? So optimization has always been the key.
James, let's talk about some of the challenges to driverless car adoption as it stands. How much is regulation an issue in other parts of the world, bar China, because we know the regulators there have been quite forward-thinking in terms of driverless, but other parts of the world, you look at Europe at the moment, there's really not that big testing, adoption at all of driverless cars, and other regions around the world. So how much is regulation a roadblock?
Yes or no? I think regulations is definitely a key component for the mass adoption of autonomous driving vehicles. But on the other side, regulations in itself is also an iterative process, right? For example, you can't just at get-go just say we open everywhere for the fully driverless autonomous driving vehicles. That will be insensible for the government as well. So I think it has always been a private-public collaboration where we work with the government, have a step-by-step approach. We always and constantly need to show to the government our safety track record. And based on the data-driven track record, I think the regulation can progress. So short answer to your question is regulation is critical, but it needs also to be step-by-step and sensible.
A few years ago in Guangzhou, South China, I was in a driverless car. At the time, it had a safety driver at the wheel. So I got in. First of all, it was like, oh, this is very new, this is interesting. But I knew there was a safety driver there. Now there's no safety driver. So I don't know how I'd react when I next get into my driverless car. But what is consumer acceptance like? How are people reacting?
Yeah, we actually have done quite a bit of survey and also observation of our riders. So typically, a new rider who probably never ridden autonomous driving vehicles before, he or she may be a bit puzzled, a bit excited for the first maybe 1 or 2 miles of the ride. But after 5 minutes, I think one of the key design principles of our autonomous driving vehicles is not just about safety. It's also about perceived safety, because we use all the human-like driving comfortness, and also use the HMI, so basically the human interface within the vehicle to give the riders, give the passengers a sense of safety. So our experience has been the riders typically after 3-4 minutes, they took the vehicle just as a typical human driving taxi, right? They start taking out the phones, looking at their phone, or take a nap. So I think it's very easy for the riders to get used to it.
James, can we talk about competition in your business at the moment as well? You're, of course, not the only company in the driverless car space at the moment. I want to talk about Tesla for a second, though, because Elon Musk has continuously over the years promised robo-taxis. He says they're coming this year. What are your thoughts? You operate in the US. Do you see that happening?
I think in the US now, at least Tesla is big in the scale, but we haven't seen their large-scale testing yet, but in the U.S., if you on the streets of San Francisco or L.A., you can see Waymo cars has already been quite popular, and you can see it everywhere. I think in San Francisco, it has already been the second most popular ride-hailing apps, just behind Uber, right, overtaking Lyft. So it is coming. It is gradually become just the de facto modes of transportation for the local residents. But overall, I think it's not really because the market size is so huge. It's not really about competition. It's really about how we can work together to push the boundaries of the regulation and then make the riders and the passengers get more familiar with it and they start using it. I think the market potential is so huge that we're all going to have a position at the end, even if the competition becomes fiercer down the road.
James, like every business in the world, you're thinking about geopolitics, about the global economy. When you think about the change in administration in the U.S., has that made business in the U.S. any more difficult at this point?
I think it has always been the cases where the regulations for transportation itself, the regulation for insurance safety are different in each country. So as a company that has a global ambition from the day one that we were founded, I think we have to work with the relevant regulations and the customs of each country. So it's no different wherever we go. We actually started a bit of international expansion. I wouldn't call it expansion per se. It's more like a trial. So we actually launched our first autonomous driving trial in South Korea, in Luxembourg, and we're probably going to come into Singapore as well. Last year, we signed a MOU with ComfortDelGro and trying to get the regulations ready in Singapore as well. So I think, in general, we're going to conform to the local regulations of each country, and there's no different for the U.S. as well. So,
James, let's talk about the future a little bit. You know, we're talking about robo-taxis and cars at this point, but I know you're doing some work in terms of long-haul freight and transportation logistics as well. Where do you see other areas where autonomy is going to be critical and key? And are those a little bit more further away at this point?
Yes. In general, as I said, we are developing a virtual driver. I think autonomy will make our transportation systems safer, more efficient, more accessible. So the passenger vehicles is our first emphasis. I think it's because it's very popular. It's a core for all our daily commutes. But in general, I think all the other modes of transportation, the long-haul truck, buses, the small delivering vehicles, I think everything can be benefited from safer and more efficient virtual drivers. So I think that's why I was saying in the last question that the market itself is so huge that there's definitely a lot of potentials.
You said at the start of our chat, the question now is how to scale. So in your view, what does scaling look like? What is the path to getting autonomous driving? And I assume this is probably going to be first in China for now, as you see it in terms of the approach. But how do you get to a broader scale and adoption?
Yeah, I think now is a critical point for the scaling up because the technology is maturing. The cost of the vehicle is quickly dropping. Last year we signed a deal with GAC, with Toyota, and with BAIC. So we have 3 car manufacturers collaborating with us on manufacturing the autonomous driving vehicles. The cost of those vehicles is dropping to the level where it's less than around 280,000 RMB. So it's a bit 40,000 USD. So it's the price itself is dropped to almost like a regular car. So I think now is really we're at the beginning of a large-scale adoption, and probably in a year or two you will see tens of thousands of vehicles on the road.
Well, that's a nice place to end it, James. I'm glad we finally got to have you on the pod. Thank you.
Thank you.
That's it for this episode. If you want to contact us, email us at beyondthevalley@cnbc.com. Please follow and subscribe to the show, and you can leave us a review. James, thank you very much for joining me.
Thank you, Arjun.
We'll be back soon for another episode of Beyond the Valley. Goodbye. Thank you very much, everyone. Thank you.
Holistic approach. And with AI itself, the key thing is really getting them into the mindset change. Our people, our population. We start from the time they enter into their career, from the pre-employment training and education. That means when they graduate from all the universities, the polytechnics, and the ITEs. So once they get into the workforce, what we do is each one of our Singaporean worker gets enrolled into this career health program. So their CVs, their training, their skill sets all get uploaded, and they have their own personal. So it becomes like their own career gym coach.
So that was Tan See Ling, who is the Minister of Manpower here in Singapore, which brings us to our next subject, and that is, of course, what is going on with manpower. Now, of course, weaving in and out of all the thematics that we've been touching on today, we have been talking a little bit about the future of work and what that looks like in the face of very fast-paced technological advancements. But let's delve into this in more detail, shall we? Because I remember when Julia Boston earlier on today was doing a panel interview on the stage with HP, Cisco, and Microsoft, and Dean Carignan of Microsoft said, look, at the moment, only humans can inspire and motivate. And Julia asked the very pertinent follow-up, which was, of course, but, what about the future? That's for now, but what about in a few years' time from now? So let's continue this conversation, shall we? I would like to now bring up to the stage to talk about the future of work Peter Latimer, President of Mercer Asia, John Hope Bryant, CEO of Operation Hope, and Liz Hart, President of Newmark Leasing. And once again, welcome back to the stage, our very own Julia Boston. Have a great panel.
Thank you so much, Mandy. It seems like every conversation today has come back to this question of what is the future of work going to look like? And today, our three panelists really span all the pieces of this. We have Liz, who's dealing in the physical manifestation of work, the spaces that we all spend our time in. John Hope Bryant, who has been dedicating his career to the workers themselves, upskilling, reskilling, thinking about what it means to be a worker in this digital age. And then Peter Latimer at the end here, you have spent 13 years in Singapore. You understand the region, and you have a wealth of research, which I've been lucky to get to be reading up on, about what's going on with the transforming workforce. So, Liz, I want to start with you. Ground us in the reality of the trends you're seeing in the spaces that Newmark is running. Now, it's worth noting that companies are expected to spend up to $1 trillion on CapEx in power grid, data centers, and hardware equipment upgrades. How is AI changing the landscape?
Well, you started off at the right point, which is data centers. So there's been a huge data center boom across the United States, especially with the availability of power driven by the hyperscalers as number one. But what's interesting is that other functions also need that power. So advanced manufacturing, including robotics, which we've heard about so much today, is another use that's really booming right now and also requires power. On the office side, we are seeing, as people have talked about, that when you have agents as your partners, you might need a few less people in the office, but we are seeing a boom in the amount of new companies that are using AI, and therefore that new business generation is still driving higher demand than what we saw since 2020.
Wow, that's amazing. Especially, I mean, obviously we had the pandemic, but especially given the fact that you would think that the pandemic would have set off a new land of hybrid work where people didn't need as much office space.
I think that was something that definitely we experienced for a 5-year period, but now that we're 5 years past, it's a new chapter for the world, and AI is better in person. The AI companies themselves are one of the segments of the industries that are most in person. Why is that? They believe that they need that global talent to be together solving problems.
John, let's bring you in here. You're CEO of Operation Hope, the largest provider of financial literacy and economic empowerment services in the U.S. You're also CEO of Bryan Group Ventures and founder and principal of the Promise Homes Company, which is the largest minority-controlled owner of single-family rental homes in the U.S. You are focused on the people. What are you seeing right now?
I'm seeing the most important meeting I've been to in 2025 thus far, this one. The Singapore model proves my entire life's work. One of the things that we did that people said couldn't be done in the States was we became my nonprofit became the first nonprofit allowed to operate inside of a bank branch, an FDIC-insured regulated bank branch. And we trained the people up so they were bank qualified. Created $4.5 billion of invested capital and people who are credit worthy, adding to GDP. I've done this in eco centers. Sam Altman and I are co-chair of the AI Ethics Council. Now we're pivoting from financial literacy into artificial intelligence. But here's a country that really had this troubled past and a lot of racial conflict and colonialization and really dark days. And they found the light by focusing on human capital. The founder in the 1960s found the light by saying human capital, they didn't have oil, they didn't have, natural resources. Their natural resources were their people. And this reminds me of America in 1850 to 1910. America was dominated by the horse. I mean, 1 out of 10 jobs was a farrier. He would do horseshoes. And by 1910, a horse was glue. So it was the most important thing in 1850, 1860, 70, but in 1900, here comes these automobile manufacturers, like all these AI companies today. But the one that really emerged was the one that focused on human capital, which was Henry Ford. Created the modern middle class. It takes off, and the rest of it is history. That's what Singapore did. And I think we've got to look at this model again, because the conversation that I heard earlier today, which was brilliant with Marc and Ray Dalio, which was brilliant in many ways, Marc said something very important. He said, it's the how and not just the what. Ray was focusing on what I call the plumbing. Block and tackle, here, just do this. When I was with Sam Altman, he first showed me ChatGPT. It was a model. It was before he launched it. He said, John, tell me what you think. I was in Silicon Valley. Tell me what you think of all the tech leaders here in the Valley. I said, well, they're geniuses. They're technical geniuses, but many of them have a blind spot called people. If you look at Washington, D.C. now, and I've been advisor for 3 presidents, both parties. I'm nonpartisan in my comment. You have basically an administration of wealth. The top 1%, I'm amongst them. But if you don't understand the normal person, how do you possibly create a plan that works? And so you've got these 2 groups, wealth and technology, that have a blind spot called people, where an economy that's 70% driven by consumer spending, the U.S. economy. The same is true in developed nations. Japan, over half is consumer spending. Germany and other places. You look at Singapore and look at all the vibrancy here. It's the people that is the key. And so as we pivot to the future of artificial intelligence, let's not just look at efficiencies and cost savings. Also, you got to say, if you're going to lose all these jobs over here, and these people are unskilled and uneducated, they're not just going quietly into the night. Maya Angelou said, in my last comment, she said, the great poet, people don't remember what you said, what you wrote, what you told them. They remember how you made them feel. And what's obvious to me of being in Singapore this week is Singapore and America are just 2 examples of a country that's actually an idea. And you can make that idea anything you want, but you've got to bring people along with it. That can become your economic driver. And so it's not AI or people. It's AI with people. And that will, I think, cause an economic boom.
And this is a great segue to Peter, who is president of Mercer Asia. You've lived here in Singapore for 13 years. You have so much data on what the companies are doing, how they're thinking about the physical spaces and about the people. What is the biggest trend you're seeing right now?
Well, I think it's hard to answer with one trend because welcome to Asia, which is in fact 11 different markets for many of us that operate completely differently. Some of the markets have access to terrific amount of capacity from a workforce perspective, but on the opposite side, that capacity doesn't necessarily have the skills even for some of the more basic work we've been working on for the past few years. We've got other markets like Singapore, which is very low on capacity, but incredibly high on capability, so the skills exist in a different way. And so looking at Asia and the work that we do advising our clients is really trying to understand who are they trying to serve, who are their clients, and what their strategy is. Because the way you would embrace either AI or the human capital element will completely depend on those factors. I find this a very intellectual exercise listening to the panelists this morning. And when I think about even the conversation right now about AI and the need to reskill in workforces, just a reminder that in places like Japan operates a tenure-based workforce structure. So you are promoted because of the time that you have spent in an organization. They only mandated in 2023 the need to move to what we call a job-based career structure. That is very different. So as Mercer, when we go out and we talk about the importance of a skills-based economy and pay for skills and the need to understand how you move and flow people to skill-based projects, that is not an easy sell or conversation in a market that is literally just moving away from tenure-based. I'm going to promote someone because they've shown me loyalty. We've also seen a great trend with what we're calling going global. Asian multinationals, most of them earn about an average of about 40% of their revenues in markets outside of Asia. There's a terrific ambition to switch that to 60%. And so they're taking a lot of their ways of institution and managing human capital out into the West, Europe, and the US. And those clients are complaining to us about this idea of why is it so different culturally? Because in Asia, the reality is cash is still king, right? I've got my employment contract is determined both on the job title that I will hold and the amount of money that I am making. That employee value proposition looks very different in other markets. So I find it really interesting in terms of how we try and service this human capital need. And, you know, from a view of economic growth, we want as much labor market participation as possible. That is a key driver of economic growth in the way that we traditionally understand it. But we would approach it very differently. And AI is here. So I loved the panel earlier with the big boys talking about the work that they were doing from an innovation perspective and this idea that we need to skill as fast as we innovate. I love that saying. I find it incredibly hard. I've not seen our clients lift their learning spend at all. So we're seeing terrific investment from a CapEx perspective into infrastructure. Human capital is still treated like an OpEx. There is not enough investment going in there, and I just don't know how people can fundamentally pivot their skills on 18-month cycles. And one other trend that's very interesting when we're talking specifically about technical skills is the life cycle of skill relevance is shrinking. So if you are creating a human capital structure that pays for skills, the skill that you think is relevant today is now only relevant for a period of about 2.5 years. That is very, very hard to put systemic change through a business and talk systematically about change. So I love the concepts and the conversations we've been having at an intellectual level. Maybe I'm a little bit more pragmatic about how hard it is to get the workforce to move and what our social responsibility is as we're trying to bring entire workforces with us.
And before we get more into that social responsibility, I want to keep on that pragmatic strain of what this functionally means. How are you hearing employers react to this and plan and invest in real estate when these micro trends are moving so quickly?
Yeah, I mean, I think there's no question that you're right. Compute has been the main driver of investment. And the reason for that is that it's seen as foundational to success in a lot of these technology companies. But with that said, AI's role in teaching us how to upskill, I think there's a lot of potential there. And when we've tried to run experiments both with us and our clients, we see that certain people really adapt to it quite quickly because it's conversational, a lot of it. And so you're able to accelerate change with people who are willing to jump in and go for it. But others that are resistant are really falling behind. And I think that that could accelerate quite quickly for companies who are willing to face forward and go in versus lean back.
But does a rapid pace of change mean companies are not willing to make long-term commitments?
No, I haven't seen that. That still is kind of consistent with their overall business strategy, but not so much specifically tied to learning and skills development.
Yeah. And John, tell us what your perspective is on job elimination. I know this is an area you're focused on, upskilling and reskilling, but how much of a risk do you think job elimination is?
Oh, on a scale of 1 to 10, it's a 12. Look, on the way here, and also the trip before this to Poland, I was in the airport in Amsterdam on an exchange, on a connection. And in Atlanta, you have people, with a high school education who would push the wheelchairs for people who have a support they need. And you see 10 or 12 of them queued up. In Amsterdam, it was automated, robotic, AI technology-driven, wheelchairs. And it even went around me and said, "Excuse me." Okay? That job's gone. Convenience stores, gone. Grocery stores, jobs, gone. Fast food restaurants, you go there and it's a pad. You punch it. This is not the future. This is now. So if you have a high school education and limited relationship capital, and you don't have a government and the private sector that's prioritizing, not in 60 years between 1840 and 1910, but in 5 years, between 2025 and 2030, the world's going to pass you by. And we are not spending nearly enough time focusing on the bottom of the pyramid. Where did wealth come from in the world? People who came from the start at the bottom and worked their way to the top. This is really the first generation that is wealth building on wealth, like money's making money on money. That's not the way the world actually evolved. We got to hyper focus on this. What scares me, I don't know anybody else like me in the world who has an entire infrastructure that's serious, plumbing for economic uplift, financial literacy, and now AI literacy. I have 1,500 offices in the U.S. and want to expand around the world. But there should be 100 of me. Every government should have an army of groups like mine that's helping the bottom to connect with the top. So you're going to have, to answer your question, 30, 40% of job dislocation once AI clicks in. And by the way, I'm a fan of artificial intelligence. I use it myself. In Atlanta, we've decided to turn that negative into a positive. So Georgia State University, their business school, all the HBCUs, historically black college universities, the K through 12 educational system, have all lined up and created the AI LP3, Artificial Intelligence Literacy Pipeline of Prosperity Project. Don't wait for jobs to be destroyed. Let's get these kids focused on artificial intelligence, everything's going to be redone. AI in screens, AI in healthcare, AI in sports, whatever you're looking at, it's going to get reimagined. Why not let these young people be part of that and then sort of pipeline them up, internships, apprenticeships, placement in the corporations, and then, of course, more GDP. So I think we need to flip the script. We've been run out of town, get in front of the crowd, make like a parade. And those who follow the Singapore model, which is really what I'm doing in Atlanta, is what he did here. Or let's say I'm doing what he did.
Yeah.
And I think this is a model for the rest of the world. And I think if you do that right, we just might end up with a nation and nations and the world with peace and prosperity at scale.
Well, or the question is, how does the prosperity drive the peace?
That part.
Yeah. So, Peter, bring us back to your research here. There's a stat that you have that 41% of executives in Asia believe the biggest productivity boost to their business is by investing in artificial intelligence, yet 86% believe that less than half of their workforce can adapt if jobs are changed, eliminated by AI. I mean, this is what John is trying to address, but how do you see the opportunity to fix that disconnect for your clients here in Asia?
Well, frankly, from a Mercer perspective, that is a very good disconnect for us, because the thing that we help our clients do is job redesign and organizational redesign. So we've been spending a lot of time with clients really getting into specific work-related tasks that people are paid to do and thinking about how that is going to be redesigned. My reflection on this new change is, and by the way, I'm not worried about job elimination, because we've seen that over the past few decades of digital transformation. That has been an era of changing the way that we've been doing work. AI is starting to change the way that we think, right? So we're moving from a doing revolution to a thinking revolution. And frankly, we're moving away from something that impacted the blue collar and the lower workforce into a way that is impacting professional services and white collar and leadership at a far faster capability. But in our job redesign work, it is incredibly difficult. Most of the organizations don't have the HR capability. They don't have the infrastructure to deeply think about the work that people are doing today. And we don't have the patience to go and do proper job redesign, to do the interviews and how many hours are spent on each of these components. Our projects are looking at transactional work. There's a huge amount in Asia of a lot of that transactional work still going into traditional offshored models. So just move it to another location that can do it cheaper, better, faster. We're looking at relational skills and thinking about how does AI play a part here to proactively help you stay ahead of your client needs. And then expertise. So if we can get this AI-human teaming correct, we should be able to elevate expertise in the workplace. We've done great projects here at Changi Airport. In fact, we've been working with them on redesigning the way that a lot of the maintenance crews work, the security crews work. So there's what I would say about Singapore and why I've been here for 13 years is the government here is deeply invested in lifelong learning and job redesign. There's a huge amount of dollars flowing to it and support to organizations to do it. And one of the big, so there's two things. We're funding companies to engage consultants to help them on the really hard question around job redesign. And then the second part of it is the government has a big program called the Singapore Skills Future, which is funding ongoing lifelong learning for Singaporeans. So you get an annual subsidy that you can reinvest right now in directed courses. So, you know, I think for me this statistic is, it's an interesting statistic. It's a standard statistic I would expect to see on any form of change, but it presents a huge amount of opportunities, and being in Singapore is a great place to be.
So if someone listening to both of us might say there was a conflict in what she said and what I said. But she's here in Singapore. She's based here. So she's talking about what Singapore is doing, and what I'm talking about is what I'm seeing in the rest of the world not doing. There needs to be tax policy for internships around artificial intelligence, around financial literacy. There should be a tax policy that incentivizes companies to bring you into apprenticeships. In other words, I'm a capitalist. I'm talking about growing GDP. But I'm also seeing, in America, as an example, you have 70% of the economy is GDP. But if you look at the numbers, Julie, over the last 10 years, it's the wealthy that's now half of that consumer spending gut. That's not sustainable. So it used to be the people who are working class and middle class came up the ladder. Now it's the wealthy taking up more of that stack. That's not sustainable. So what I'm saying is we've got to find an intentional, scaled policy and strategies that bring people from the bottom on their own will up the ladder so they're part of this AI revolution. People keep talking about it will work itself out. It'll work itself out. No, it won't work itself out. You got to have leadership that works it out. PhDs are good. PhDs are better.
Liz, I want to bring you back in here to give us perspective on what you're seeing. You know, we've heard so much today about robotics and this question of sort of the partnership between humans and AI and how that can manifest itself in physical space with robots. How is that changing the way your customers, your clients are thinking about real estate and what you're doing for them?
I think there's two different things to talk about here. The first is advanced manufacturing and that need for power. And that demand has continued to persist, particularly in areas like Texas, where they have a great supply of power relative to other areas. But then another one that I think is interesting is life science. So there's a lot going on right now in life science and robots actually being able to perform those experiments for us. What's the impact to real estate? The robot is the same physical size. We saw Ada on stage today. She is about the same size as a human, and she is doing about the same functions.
You even called her a she. So
exactly, I did. Maybe that's right. Maybe it's something else. But I think that's the really interesting thing is that even if you're a person sitting next to a robot, you still would need the same physical space, potentially just with more power than we've seen previously.
And how are all of those different factors affecting the way people think about where they want to be investing? Are you seeing a divergence between cities versus rural areas? Where are people going?
So for the knowledge work are still in the talented same cities we've been seeing for a long time. Same global cities, the fight for talent in those global cities continues to persist. So I think that is going to be a prevalent factor that's not going to change because people are going to be more important than ever in the age of AI. I think we're all saying that. People who are very skilled, who can help upskill others and drive robot or AI in the right direction are going to be really important. What might shift, going back to that life science example, is that the lab may not need to be in that core area right next to the C-suite the way that it presently is. Potentially doing it a couple hours away would be acceptable, which is a much lower cost market because the executives could travel to that market. We have not seen that happening at scale in the knowledge working office side and lab side yet, but I do think in the next 5 years that's something you'd expect.
Are there any other trends in real estate that you expect to accelerate because of this investment in AI, generative AI?
I think the other thing that's continuing is actually the persist for trophy assets because, again, people being in such high demand, how they work. I mean, Singapore has so many fabulous examples of amazing trophy office space. Driving around here is like being in a real estate broker's dream. But I think that's going to continue, and I don't see that changing anytime soon.
Well, this is an opportunity to open up to a Q&A here. I have many more questions, but I want to make sure the audience gets a chance. Any questions? Raise your hand. If not, I have many more to go with. Any questions? Okay, well, I'm going to keep going here. We have 5 minutes left, and I want to end on the pragmatic and also the personal. You represent different angles of this transformation of the way we work, the way companies operate, and the way people are going to fit into this. But I'm curious what your advice is in terms of best practices and where you're hopeful things will go. Peter, let's start with you on the end.
So listen, again, there's no such thing as best practices. It depends on the client, the industry, and the strategy you are trying to pursue. What I think we're not leveraging more is the fact that right now in workplaces there are 5 generations working next to each other that have very different aspirations, ways of learning, expertise. In Asia, in particular, we still operate quite a top-down hierarchical way of working, and what I would love to see is far more mobility and movement of ideas across generations and across grades. So in the space of AI, a lot of that statistic around executives feeling like their workforce can't keep up is because they themselves are pretty disconnected from the younger generation that are operating AI and different technology interfaces at a pace that's far beyond how an organization would try and typically control that. So I would like to see far more job mobility, breaking of this hierarchical trend, flowing people to different sorts of jobs in a quicker capacity. And I also would like to make sure that we are keeping this social component very loud in these conversations, because it is very easy as a US multinational executive to talk about GDP, economic growth, productivity, but the social component is incredibly important, right? Just because we can put technology in play, downsize our real estate, does not necessarily mean that that is the right thing to do for the people and the communities in which we operate.
Yeah. Liz, what about you? How are you deploying AI in your own organization as you run this expanding real estate business? And what would you like to see change?
So we've been doing quite a few experiments in AI, and it really is experiments because the best practices are being written as we go, right?
Yeah,
and there's not really a roadmap for some of these things yet. But we're finding that we can have major advancements in how we can understand data at scale, and that's very exciting. But I think the thing that I am focused on and I'm hopeful about is that there's broader engagement, not just from the technology part of our business, but from everyone who's in every part of our business, from HR to marketing to research. It's important that everybody thinks about how AI can accelerate them, because if not, I joke, it's going to feel like a pothole on a fast road, right? Because you're going to have everyone else going around, and then there'll be a little divot when someone hasn't thought about how to innovate their portion of the business.
Sean, I'm going to give you the last word. You mentioned you're on the AI Council with Sam Altman. Obviously, you've been having a dialogue with him about AI for years now. What's your approach to the risks around AI and the opportunities, and how would you like to see the folks here think about it?
What I love, by the way, thanks CNBC for doing this. This has been brilliant. You've been fantastic, and Casey and everybody here really should be commended. You're a force for good in the world and good capitalism. What I love mostly about Sam is he's a genius, and he's really, really, really smart on these issues. He will often say, I don't know. I just don't know. We'll probably solve cancer in the next 10 years. Somebody in rural Africa or in a rural part of China will be able to have the same medical technology as somebody at Emory University or wherever. But there will be some unintended consequences that might be very bad, and I don't know what those are. I like that honesty. I believe rainbows only follow storms. It's actually a scientific fact. You cannot have a rainbow without a storm first. So I'm actually quite optimistic about the future. I am seeing the problems as opportunities. If we can get people listening to this today to go, I thought social issues were a negative or a loss leader, but John's saying this could be an opportunity for new customers, for economic growth, for GDP. Let me go. There's probably better margins there. Let me go and pursue inclusive economics. I think that if we had that just as an outcome of this conversation, that we saw the people at the bottom of the pyramid, combined with AI literacy, combined with financial literacy, combined with intelligent policy, like they've done here, that you could have a world that blossoms from the inside out. And we have a place in 20 or 30 years from now we're all proud of, and people have a purpose for their lives. People need to wake up every morning with a purpose. And I'm a living example of that. I was born and I was homeless, and look at me today. It's because I'm living proof that these philosophies work, and we can do this at scale, and that's what Singapore has done, and I would encourage everybody here to take with them as a message when they go home.
Well, speaking of Operation Hope, John, that is a perfect note for us to end on. Liz, John, and Peter, thank you so much for joining us here today.
Thank you very much.
Thank you for having us.
Thank you, guys.
Mandy?
Nice. Very nice.
Thank you so much, Julia, and thank you also to our wonderful guests here. That was really a fantastic conversation on the future of work. I took away a few comments from our panelists today. From Liz, of course, talking from a real estate perspective, she was saying that if a person sitting next to a robot, they don't actually need less space. They actually might need either the same amount of space or even more space, but what they also need is more power. I thought that was really interesting. From Peter, of course, springboarding from the earlier conversation this morning between our big titans, Ray Dalio and Marc Benioff, she was saying, people need to skill as fast as we innovate. And then we got this really, gem of a comment from John. I just love this. It's not AI or people, it's AI with people, and that equals an economic boom. Now, before we move on to our next segment, I just want to mention once again that we've put together these incredible experiential zones around the entire top floor here at the Jewel. So please make sure that you do avail yourselves of those. Go and check them out. For example, there's the Road to Happiness down here. Go and get yourself lost in the happiness maze. Come back a much happier, more mindful person. But before we do that, don't run off right now. Maybe go in the next break. Before we get to that, let's turn now to how AI is reshaping the future of transactions, things like payments and also fintech development. I would like to now bring to the stage once again CNBC's Sarah Eisen, along with her guest today, who is Douglas Feagin, the president of Ant Financial. So please, Sarah and Douglas, take the stage. It is all yours.
Thank you. Well, I'm thrilled to be back here for the afternoon session to talk to Doug about the global takeover from Ant Group. And Doug, just maybe if you could just start by telling us how big, size, and scope Ant International is, because you have grown this business and it is pretty dominant.
Yeah, well, thanks for asking. And it's really exciting to be here in Singapore at the CNBC CONVERGE conference. This is the home of Ant Financial, Ant International, and we're very pleased to be here, and it's an exciting time for us. You know, when you ask about our scale and scope, I'll give you an exact answer, but first let me just describe a little bit about what Ant International is relative to Ant Group. Ant Group is the parent company in China that has the Alipay wallet, and so they have a specific wallet to serve their customers. Ant International is a 2B business where we're working with many different e-wallets and many different merchants around the world serving their needs. But we have not introduced our own wallet into individual countries. We're a 2B service. And to answer your question, today we serve 36 e-wallet partners that cover 1.6 billion customers. So that's 1 billion customers that are the Alipay wallet in China, 600 million outside of China. And we serve their payment needs connecting to 90 million merchants around the world. And so those merchants are largely QR code merchants in Asia that accept the QR code from a mobile payment, but many other merchants around the world in different markets. So quite a sizable footprint that we have for our business.
It's huge.
And yeah,
this is why you left your role as banker for Goldman Sachs?
I saw it as a huge opportunity. Actually, I met the people at Ant at the time, including Joe Tsai, who spoke here earlier, yes, and Eric Jing, and they showed me what Alipay could do, and I could see how this could actually revolutionize the world of payment. And over the last 8.5 years, we've taken that knowledge of a kind of mobile payment app and all the things embedded in it that connect payment and commerce and introduced it in all the other countries all over the world. And so we invested in 10 e-wallets in Asia. They're now, many of them, one of the leading wallets in their country. And so it's been a great journey and fascinating expansion.
Where are you in the expansion? So we 1.6 billion customers, and what a billion of that is Chinese consumers traveling abroad?
A billion is the Alipay customer traveling abroad or buying things online. Yeah.
So how big do you want to get?
Well, we want to get much bigger. We think we're still at the early stages of growth in terms of our business. And the reason for this is we're really solving pain points for each of our customers. Let me give you kind of just 3 examples which will help you to see how we're doing it. First is these digital wallets have all grown all over Asia, and digital banking apps are very prevalent as well. Most of those customers, though, could transact within their country, within Thailand, within the Philippines, within Korea. When they try to travel abroad, they couldn't use their wallet. Now today, through Alipay Plus, our cross-border payment service, you can use your e-wallet when you travel to 80 different countries all over the world. And so that's one pain point we solved for our customers. Secondly, we have global merchants who want to reach the customers who don't have a credit card or a bank account. And in Asia, there are millions of those customers. And so think about the big e-commerce companies in the US or Europe, or the big gaming companies or digital goods companies. They want to reach all the Asian consumers. We're helping them to do that through a simple solution. And finally, SMEs. SMEs are the backbone of economic development around the world. And many of these SMEs don't have the tools to be able to transact internationally. And so they have to open a different bank account in every different country and to run their business. That's tough for them to do. And what we did was we bought a company called World First in the UK, and they have one integrated account that can do payment for small businesses around the world. So we're enabling small businesses to now have a more global footprint and to solve that pain point for them as well.
So is the future you see one where there's no cash?
We think we should be able to solve everything without cash. I wouldn't go as far as to say there won't be any cash, but I would say most of the players that we work with, be they individual customers or businesses, are asking to have less and less cash. because it's safer, it's more secure. And the most important thing is, through digital payment, merchants can engage with consumers in a much more comprehensive way.
Is it safer? What about cyber theft and fraud?
It is, if you actually look at the statistics of most of the wallets that we interact with, their fraud loss rates are less than other payment methods. Why is that? Number one, when you're using a mobile payment, you typically biometrically authenticate every transaction, so you know you are you. And then secondly, you have a much more integrated service with many other services you're using. So one of the main things people do to detect if something's stolen or fraud is there's something irregular. And so with a more comprehensive service, we can provide quicker detection of fraudulent situations.
So you said you're in early stages of growth. What markets are most interesting to you that you're most bullish on? And how do you determine what's a good market for you to enter?
Yeah. Well, in Asia, this is our kind of core market, if you will. This is where most of our 600 million individual customers are, and our merchants are really spread around the world. We still see huge growth here in Asia. Just coming out of the pandemic, we saw an increase in tourism and travelers to Japan, to Thailand, were some of the most prominently visited countries. We think that will continue to expand, and the per customer spend will also continue to grow. And so we see an increase in the number of mobile customers, the spend per customer, and the cross-border transactions from those customers in Asia. But it doesn't really stop there. We see a big opportunity to increase mobile payments in the Middle East, in Europe, in Latin America. And my teams are actually working to go to those different markets, work with some of the local players, and figure out how we can introduce new solutions. It may be a mobile wallet similar to here in Asia, maybe a digital banking app. It can be different things in different countries. And we'll tailor that using our technology to adapt to their needs.
Don't they all have their own fintech companies that are trying to do this? So you partner with them? How do you do that?
They do. They do all have their own fintech companies, and they have their own regulations. But, you know, you look at fintech companies growing in Europe, there are a number of digital banks, also a number of digital wallets. We've actually partnered with a lot of them to provide the same kind of service. So we could provide the European wallet customer an opportunity to travel to Asia and use our service, Alipay+.
So that's why they want you, for the traveling and the cross-border.
For the traveling and for the cross-border digital payment.
Right. And can you do that in the U.S. as well?
We are doing it in the U.S. in that we are bringing Asian travelers largely to the U.S. market when they go there to travel. And so we're connected to U.S. merchants. Big cities are like San Francisco, L.A., Las Vegas, you know, places where you see a lot of the Asian travelers. And we also connect the U.S. digital merchants to Asia. And so the big names, like you think of a Google Play Store or big entertainment company or the big airlines, we enable the Asian customer to buy their products and services through our service.
How are you incorporating AI into this future?
Well, it's a big question.
Yeah.
And a lot happening with AI. I feel like almost every week there's some new dramatic innovation. It's not like, you know, small things happening. And this is frankly right up our alley because we have been a technology company using kind of a digital interface to connect with our customers. And AI naturally is enabled in that type of a situation. And so our philosophy on this, our strategy on this, has been to work with all of the different Gen AI companies. So whether it's ChatGPT or Gemini or DeepSeek, we'll use their kind of core Gen AI.
You don't have to only use Alibaba's model.
We can use Alibaba's model as well. So we're not forced to use it. We're open, and so we can use all the different ones that are out there. And what we focus on is more the application layer of how do we use these AI engines to connect then into the merchant or into the wallet, because that's where we have the expertise, where we're connected to the merchant through an acquirer and we have a solution and interface for them, or we're connected to the digital wallet that connects to the end consumer there. And the Gen AI solution really needs to have a method for connecting to that consumer. And we're helping them to do that through standardized APIs and connections to really drive the solution. And so we can see a huge growth here as consumers are more and more demanding, and they're increasingly using these models as opposed to other ways to find the products that they want to purchase, find the services that they want to enjoy, and we can help them to do that in a much quicker and effective way.
So how do you guys primarily make money?
We can generate revenues in a variety of different ways. At the core of it is payment. So we're providing the cross-border payment solution for all of our partners, and so you can make money from doing the cross-border payment solution and the foreign exchange embedded in that. And then we also provide services to these businesses. And so, as I mentioned, small businesses that want to transact around the world. So through a world-first account, we're solving all of their needs and generate opportunities for that. We're trying to go to the next level, too, to provide more digital services to those customers when we interface with them. And so there are all different types of digital services that can build on the payment layer. When you think about it, payment is kind of a core stream of the way economic activity unfolds. And so if you have solutions that meet the core payment needs of your customers, then you can build on all sorts of other things. So the digital commerce solutions, but also financial services. So you can offer a savings account that meets their needs. You can offer lending services that enable both SMEs and individual customers to borrow and to transact more. So there's kind of payment plus commerce plus financial services that can all kind of fit into our overall business model.
You mentioned the economics. So I am curious what you're seeing because, you know, there was a lot of concern specifically about the Chinese traveler, about inter-Asia travel coming out of COVID and whether spending has been soft. What do you see in spending?
Well, what we've seen is I'd say a gradual pickup in terms of the tourist travel over the last 2 to 3 years. Initially, it started with simple travel just to countries that were proximate to where people lived. And so people out of China would travel into Southeast Asia. People would travel a lot within Southeast Asia. But now people are branching out a little bit more, and we see the tourism flows into Japan, into Korea picking up substantially.
From China?
From China and from the rest of Asia. And we also see flows now picking up more and more to Europe. So the Asian traveler is looking to go to Paris and enjoy a week vacation or to go elsewhere. And so those flows are picking up. The U.S. has frankly been a little slower, but we expect that to pick up over time as well because it's the number one tourist destination in the world, and the Asian travelers have historically loved that. So
why has it been so slow? Why are we seeing such a staggered re-entry to travel?
I think it just starts with people's comfort with travel, and they may be a little bit more comfortable just going to something that they feel like they know better. But it also comes down to just two things. One is cost. It costs a lot more to get to the further trans-Pacific destinations. And also, frankly, a lot of the travel infrastructure had eroded. And so airlines did not have the same number of flights. I mean, it was dramatically less number of flights. And that now is coming back. But you can't turn on 50 flights between, Singapore and the U.S. It takes months to get the airplanes, to get the crews to do that. So that's taken some time to come back.
So you see everything. I mean, you see all the spending abroad and travel and cross-border. So what has surprised you in terms of spending habits for people traveling right now?
Well, it's interesting. One interesting thing we saw was actually in Korea.
Korea?
So Korea to be, Korea is a big destination market, and they frankly have a lot of interesting luxury goods there, a lot of luxury good companies, and a lot of the Chinese traveler and also the Southeast Asia travel would go to Korea and purchase a bunch of duty-free goods. And some of them would even purchase duty-free goods in bulk and things like that and take it back. Post-COVID, that had kind of gone away, and we didn't see as much of that. But the Korean traveler market has come back, and one of the biggest things people want to do there is now, what they term health services or beauty services. And so people that want to go and do cosmetic surgery or other things like that, Korea is actually like a world leader in this. And it's picked
Plastic
up.
surgery booming in Korea?
It is booming.
Oh.
And so we see the traveler from all over Asia coming to seek those services and enjoy them. And the Koreans evidently have lots of expert providers. Of that
Bull market and Botox in Korea?
I guess so. There you go.
Yeah, I mean, I think it's interesting that you can watch all these flows and sort of figure out some of the trends. What are some other trends that you see for consumers in the coming years as far as travel?
It's interesting. We do see some of those trends, and the benefit we have is that we're reacting real time to what we see consumers want. And a lot of our consumers are the young population. This is the growing part of Asia and increasingly the digitally enabled. What they're doing increasingly is that they want their own individual experience. And so they are kind of the opposite of the group traveler of before, where you get into a standard thing. They want to pick their own hotel. They want it to be unique and different. They want to go to restaurants that have a local flavor with something a little bit unique in terms of their taste. And they want to shop for things that are different, that meet their own individual needs, not the kind of typical tourist things that someone might buy in a market. And so this highly engaged individual traveler who really wants to curate her experience to what she wants to do when she gets there is something we see as a very big trend and will continue to evolve.
Is there a gender breakdown on your customers? Is it mostly women?
I'd say both men and women are doing it. So not a huge gender breakdown, but they both have that same orientation and looking for different things. I'm not sure the data shows this exactly, but I would say a lot of times, sometimes the men are more focused on some of the experiences, like some of the crazy athletic things you can go do in a different market, rafting in crazy places and this kind of stuff. So we see different things different ways, but it's more based on the individual and the individual country and what people are looking for. People in general also are looking more for experience and than they had historically. And so that's kind of fun. Like the night safari here is attracting more and more people to come to Singapore.
The night safari.
Night safari, yeah, which is a very fun thing here. Where you can go and not only see a normal kind of zoo, but it's an at-night zoo and kind of a cool thing here.
What's the market that they're spending the most in right now?
From what we've seen, our biggest market in terms of tourist destination is Japan. And Japan is fortunate to have...
Weaker currency?
Sorry? Mindy?
A weaker yen? Is that part of it?
A weaker yen has probably facilitated things. But Japan also is a wealth of opportunity for tourists. So they have some of the best restaurants in the world. Now, today, it's the Sakura, or the Cherry Blossom Festival, just started last week. And so you can see the pictures, cherry blossoms everywhere. And the travelers from all over Asia, and indeed all over the world, want to go and enjoy that. And so I think the spending in Japan is actually quite high. Another big market for us here, though, is Thailand, which attracts tourists from all over Asia. And actually, China has been a very big destination market as well, with more and more people going there. And so we expect to see an uptick in terms of tourist volumes there.
Okay. What about crypto? Is that part of the future or hard because you can't do it in China?
We haven't, as a company, and International is not doing anything with crypto. And so...
Because a lot of people think that's going to change the payment space.
Yeah. Well, we continue to monitor it very closely. I would say what I can tell you about that is that we see the things akin to crypto, like blockchain-based finance and also tokenized deposits, as becoming a very big factor in terms of global money transfer. And we're actually working with our partners around the world, including JP Morgan, Standard Chartered, Citibank, HSBC, and doing tokenized deposit solutions to move money and increase the efficiency quite dramatically. And so we see these kind of solutions, largely kind of blockchain-based solutions, as improving the world of the efficiency of money transfer. And we'll see, how crypto evolves into that in the long run. Yeah.
All right, last one. So we all remember that Ant Group was going to go public in 2020, and it had to pull the listing in very dramatic fashion 48 hours before. Now that you're a separate company, Ant International, are you going to go public?
Well, we as a company, I was an investment banker for 26 years. So the one thing I can tell you, a lot of companies consider going public, never know when the exact right time is. I used to tell them, focus on your core business, drive it, make it as best as it can be, and when the time is right, you'll have the opportunity. And that's what I'm doing now on this side of the table, driving our business to increase the number of customers we have, drive the transactions that we can do with them, and increase the number of partners we have and geographies we can cover. And with that, you'll have a solid financial picture and grow, and then when the time is right, we'll be able to pursue the IPO. So wait to see when the time is right.
Okay. Spoken like a former investment banker, now running a company. Thank you very much. It was very interesting.
Thank you very much, Sarah. Pleasure. Glad to be here.
Thank you.
Thank you very much to CNBC's Sarah Eisen. We'll see you again over the course of the next couple of days. And thank you also to Ant International's Douglas Feagin. Remember we used to say cash is king, but listening to Douglas, I feel like cash is being demoted maybe to a knave, a humble knight, maybe even just a joker. Because did you pick up on that when Douglas said that we should be able to solve everything without cash? Just think about for a second what that actually would imply. But talking of cash, we're going to take a break right now. Make sure you take your belongings just in case you have your wallet in there. No one, of course, wants to lose their wallet or anything else that might be in their bag. Do take a break. We've got about 20 minutes for you to go and network, go and have a look around the various experiential zones, maybe grab a cup of coffee or tea to sort of recaffeinate for the rest of the afternoon. But like I say, just remember to take your belongings with you. When we come back in 20 minutes' time, we are going to be sitting down with Josephine Teo. She is the Singapore Minister for Digital Development and Information and also Minister in charge of Smart Nation and Cybersecurity. It should be a really amazing sit-down interview. You don't want to miss it, so please do come back and we'll see you right here at Main Stage in 20 minutes' time. Enjoy your break. Thank you.
Please take your seats. We are about to begin. Welcome to CONVERGE Live. Please take your seats and put your mobile phones on silent. We are about to begin.
Ah, the world. Lately it's as though everything's been turned upside down. Not here, though. Here in Singapore, you'll find a safe space for all kinds of ambitious risk-taking. Our clockwork precision, it leads to some radical innovations. And because we're oh so predictable, you can confidently venture into the exciting unknown. Because nothing today thrives without trust, stability, and safety to make your next bold move. Was that bold enough? Good. Your business needs Singapore.
Singapore is getting into artificial intelligence and developing its digital economy. From healthcare and education to banking and public services, AI is driving significant progress across the nation. Singapore's digital economy has contributed 17.7% to the GDP in 2023, as well as ranking third globally in 2024 by the UN e-Government Survey for Leadership in Digital Governance. As part of its National AI Strategy 2.0, the country is investing over $700 million to strengthen its AI ecosystem, support talent development, and create a secure environment for cutting-edge innovation. Google, Amazon, and OpenAI are partnering with Singapore to accelerate AI adoption. To further explore how the country is leading the charge in AI, please welcome to the stage CNBC's senior technology reporter, Arjun Karpal, along with Singapore's Minister for Digital Development and Information and Minister in charge of Smart Nation and Cybersecurity, Josephine Teo.
Thank you.
Great. Thank you all for joining us for this afternoon session. This is a live recording of Beyond the Valley podcast that I co-host. So just be mindful of your phones and talking. And if you want to listen to the podcast, you can find it by searching CNBC Beyond the Valley wherever you get your podcasts. Are you ready?
Of course, whenever you are.
Let's go. Singapore has sought to establish itself as a central technology hub in Asia and the wider world through regulatory clarity in many areas to fostering a startup culture. But with technology rapidly advancing with a focus on artificial intelligence, can Singapore compete with the US, China, and countries in Europe, which are all vying to become leaders? Thankfully, I've got Josephine Teo here to talk about this. Josephine is Singapore's Minister for Digital Development and Information. Thanks for joining me today on this special episode of Beyond the Valley recording in front of a live audience here at CONVERGE Live in Singapore.
Happy to be here, Arjun.
Josephine, can we just talk about AI, of course, and from a perspective of yourself, from a government minister, what's the biggest opportunities right now in AI for Singapore and for the rest of the world?
Well, the fundamental duty of any government is to its citizens. And in our case, it's a question of how we create more opportunities for our people and for our businesses. So that is very much top of our list of priorities. So when you have a technology like AI that is potentially so transformative, the key question is how can you take full advantage of it? And the starting point has to be, what are your people doing in terms of jobs, in terms of careers? What kinds of businesses are already here? And can AI help them to individually, as well as the enterprise level, achieve new peaks of excellence? That's really how we're thinking about it. So the idea that AI serves the public good for Singapore and the world starts from this point. You want people to have skills so that they can contribute even more to their own businesses as well as to their employers. You want businesses that certainly have to compete very intensely in a global market to find that Singapore gives them an edge. And that's really where all of our efforts are directed towards. Building up the skills, building up the enterprise capabilities, so that both at the individual, the workforce, as well as the economy level, we can be more competitive together.
We'll dig into skills and safety as part of this discussion, but let's start with Singapore first, Minister, because we talk about AI in the world. A lot of the conversation always centers around the US, around China, and the capabilities and companies those two nations have. A lot of smaller nations are left out of that conversation. Even big regions like Europe are left out of that conversation. So when we think about Singapore, how would you assess Singapore's position here in some of these key technologies?
You know, it's a really interesting question, and one that we grappled with around about 2022, 2023, when we were trying to have a rethink of our national AI strategy. The analogy I'd like to draw is if you think about our Changi Air Hub, where you are right now, and you think about the fact that we serve close to 40 million passengers a year now, out of a population of not more than, well, not even 6 million, just around that. How is it possible? How is it possible that you don't even own aircraft technology? There are commercial aircraft manufacturers, Boeing and Airbus. They are not Singapore companies, but it doesn't prevent us from conceiving of an air hub. You would want to have your own champions, and I think over the years we were very fortunate that there were some really excellent people, outstanding efforts to build up a world-class airline like Singapore Airlines. We've got very good maintenance, repair, and overhaul companies based here. We've also got aircraft, manufacturing. Aerospace industry is very significant. None of these were built up on the basis of Singapore owning aircraft technology. They were built up on the basis of identifying areas where the value add could be contributed out of Singapore that made sense commercially to these companies. I think if you adopted that sort of a mindset, the same could apply to AI too. The most sophisticated, the highest end large language models may not be developed here, but it doesn't prevent us from working in partnership with these kinds of inventions, these kinds of tools, and create a value proposition that is relevant in our context and also useful to commercial entities.
So many people are looking at AI and how foundational it is, and resiliency is a key word that's bandied about when we talk about some of these technologies like AI, like semiconductors, and the need to have a trustful, a secure supply chain. And there are many countries in the world right now saying that means we need to try to either reshore or own a lot of that supply chain. So from Singapore's point of view, you've got a different perspective here. You're happy to work with a lot of these global partners.
I think you're spot on in saying that at the heart of it, the desire is not always to have things that are created and maintained by yourself. At the heart of it, your main objective is to be able to achieve resilience. In other words, you want to have choice. You want to have options in case something happens that is not favorable. And if you want to achieve resilience, there are different ways of doing so. Achieving diversity in terms of how your supplies are obtained, achieving diversity in terms of the technologies that are being deployed, achieving diversity in terms of even the design of various systems that you put in place. Those are all contributing towards resilience. And that's how we think about it. It's not always the case that you have the luxury of owning the entire supply chain or even the most critical components. You've got to be able to look at it and say what is sensible for you yourself to be able to produce, manufacture, or store at least, but what is sensible for you to diversify in terms of getting the supplies. So that's the way we think about it.
It's hard to have a conversation this year about AI without mentioning DeepSeek because of the ripples it had through global markets, but also through the technology sector as well. But what it did show, I think, was the importance of open source and the development of open source technology, which may give smaller nations as well as smaller companies the ability to create real applications. One of the conversations I've been having over the past few months was that actually a lot of people in tech think, the models are going to be commoditized, and the real value really is in the applications there. And almost what DeepSeek and other open source models are giving is a chance for companies and countries to create valuable applications. So how do you view kind of what's happening in open source right now and what it means for the development of say, some of these AI applications within Singapore?
One of the concerns we had, 2 to 3 years ago was to what extent the AI hype would actually translate into real benefits in the business context. And as we interacted with a whole range of industries, as well as companies of different sizes, operating in different sectors, facing different challenges, one very common theme was AI is still super expensive to use. So if we did the cost-benefit analysis, yes, we're very interested in the potential that AI can bring, but the amount of money that we have to put into developing the use of these AI tools, because it's not just always so easy to buy off the shelf and you can implement it. You may have to make some adjustments within your own organizations. The companies told us that it was still very costly for them to do so. What's consistently the feedback in today's context with the introduction of DeepSeek is that now the cost considerations have become quite different. And from that perspective, in terms of being able to promote AI adoption and boost the development of AI ecosystems in many more different contexts, I think it's very exciting. And we see this happening not just within the government in terms of how we are hoping to use AI tools to improve public service delivery. We see this amongst the various industries that are operating here, whether it is in finance, it is in healthcare, it's in transport, logistics. The enthusiasm, I think, just went up because the cost considerations have become more favorable.
And that brings me on to infrastructure. I think, $500 billion Stargate project in the US. Recently we heard France with a roughly 100 billion euro investment in infrastructure as well. Are these countries spending too much then?
It depends on what time frame you ask.
Yeah.
I think if you fast forward 100 years and you say what's happening today, I think it's very hard to say that it will be too much. Okay, but these things, they happen in cycles, and certain points in time you may have gone ahead of the demand and find yourself with overcapacity. This happens in many other industries and sectors too. So I wouldn't be overly surprised if it happens. But the long-term trajectory does suggest that the needs are going to grow. And if you look at the Singapore context, in terms of our data center capacity, relative to our GDP, relative to our population, is already one of the most dense in the whole of Asia. And even with that sort of build-up, we're still looking at creating more headroom. Because if you want to be able to host the most sophisticated users of AI, latency does matter. Some of the AI workloads cannot be so easily configured out of the geographical location. So even if you developed a very robust and extensive network of data centers in our part of the world, where the activity is most concentrated, you will still need to have the compute capacity.
So does Singapore also need to spend $500 billion on AI infrastructure?
I can tell you that a lot of companies are spending that money. I think I was with the former U.S. Secretary of Commerce, Ms. Gina Raimondo, when she was here. I'm thinking it's maybe September or October last year, and we were trying to put together what the investments were like. Just in digital infrastructure and utilities, investments by U.S. companies, not including other companies. I think it came to about $50 billion US dollars in Singapore alone. That's the kind of scale they are looking at. But I think actually, if you look at the numbers elsewhere in the region, they are even bigger because the gap is wider, and so there is a build-up that is necessary to try and close the gap.
Yeah, and there's other things to think about, right, in terms of infrastructure with AI. It's energy,
water,
cooling, water. How do you address some of those challenges?
We face up to these challenges. So we say that for data centers, we have a green DC roadmap. There are essentially two strategies. One, you use less energy. Two, you use green energy. And both are necessary. So in terms of how we use less energy, one very practical thing is that what are the standards for operating data centers in a tropical setting? Do you need it to be cool to such a great extent, or the standards can accommodate tropical weather? So that's one of the things that we're doing, but we're not stopping there. We think that even at the algorithmic level, there must be ways of writing them in a more green manner. So we are also putting in some research resources to try and make this happen.
Yeah, interesting. You were recently at the AI Action Summit in France, in Paris. I was there too. We didn't cross paths, but a big focus of that, of course, was around safety and regulation as AI continues to develop as well. What would you say yourselves and other global leaders' concerns at the moment around the development of AI? Because I've heard warnings around AI getting out of control, outside of human control, AI being incredible biases written in to some of the algorithms and the models as well. What are some of the concerns that you share with the global community?
Well, it's really interesting because before we had the AI Action Summit in Paris, there was the AI Safety Summit in Korea, in Seoul, and before that, the origination was in Bletchley. This was the AI Safety Summit. And the conversation has actually shifted quite a bit because in Bletchley, we were really talking about extreme risks. what happens when the AI is able to operate entirely autonomously and there's no longer humans in the loop? Existential risks were also on the table. The conversation shifted so significantly. I think in Paris, it was centered a lot more around AI adoption. And with AI adoption, it doesn't mean that there are no risks. Near-term risks include risks of discrimination. What if you have generative AI models that are not only inaccurate, they reproduce biases that we already observe in society? There are other kinds of risks. For example, the cybersecurity risk of AI. The AI models itself can be susceptible to attacks. That's one type of risk. The other type of risk associated with security is AI being used to develop even more sophisticated tactics that can infiltrate systems, apart from, social engineering and implementing scams. So these kinds of near-term risks, I think, also deserve a lot of attention. It doesn't mean at all that we forget about the longer-term risks. Some would argue that they are not so long-term. I think we keep a very close watch, but at the same time, our citizens want us to give them the reassurance that you are also dealing with near-term risk. So the approach we take in Singapore is that we look at the kinds of legislation we already have, and we ask ourselves to what extent they already address the kinds of risks that you will see with the proliferation in the use of AI. For example, child sexual abuse materials. If you use AI, it's very damaging to the families involved. And even without AI, we already have laws against it. It's a matter of updating what we already have in law to say that if you use AI, the law covers it as well. But there will be occasions where the law does not adequately address the risk. So in the context of elections, for example, if AI-generated images or AI-generated audio are being used to confuse the public, and our democratic institutions come under great assault because of that, then you perhaps need to put in place new laws. And that's exactly what we did last year. We put in place a new law to address the specific risk of AI-generated content being used during election periods.
So is that the approach in Singapore to regulation then? Because we've seen in the European Union the EU AI Act, and that's looking at a risk-based approach and use of AI. In China, they've gone also for quite specific laws targeting the use of AI in contexts such as deepfakes, for example. Will Singapore be looking into a broad sweeping AI piece of regulation or more targeted, smaller pieces of legislation?
At the moment, I think the approach we prefer to take is to see how the risks materialize. And the environment we have in Singapore supports lawmaking. If you look at the way in which Parliament debates bills, I think credit to all the members. It's on very solid basis, mostly evidence-based, as best as you can get. So which means that if you put forward a reasonable proposition to members of Parliament, you have the prospect of actually getting the bills passed. And that's what we've continued to do. We assess the risk and very quickly try and come up with the legislative response to that, go to Parliament, explain to our legislators why this is so important. It sometimes results in what may appear to be a patchwork of different laws and regulations. But the trade-off is that they are much more targeted and they are much more specific. I would say that in time to come, there may be a need for us to reorganize some of the bills and the acts that have already been implemented. But at this stage, we are prioritizing speed of response and being targeted in terms of the legislative measures that address the problems that arise with digital development and of course, AI implementation too.
You mentioned the sort of 3 AI summits that have happened and how the conversation slightly moved on. But the whole point of them was to try to bring together countries to discuss frameworks and legislation in a global manner. There was a a letter that was signed by many of the attendees, except for the US, apart from the UK as well. And it felt to me that as this conversation towards global frameworks continues, there are so many divisions yet. So how do you go about, one for you, how important is a global framework around AI safety? And secondly, how do you go about getting that when there feels to be a lot of competition and tension right now between nations?
Well, you know, the way with these meetings, I wouldn't be overly perturbed, you know, if a declaration didn't have all the signatures of everyone who attended. The reason is quite straightforward. In your organizations, if there is a commitment you have to make publicly, then there will need to be an internal process to see whether you are able to live up to those commitments. And there will be countries who look at it and say that there's too little time. We need to talk to our capital. We need to talk to all the different agencies. So from that perspective, I completely understand why there are occasions where a declaration, you know, did not get signed. It all partially depends on, you know, when this draft was surfaced. So I wouldn't be too concerned about that. Having said that, I think at some point, global frameworks are going to be critical. If you talk to businesses operating, you know, in multiple jurisdictions, and in the digital domain, the porosity means that you are in many markets, and to have to deal with a different set of rules each market that you go to, the lack of interoperability is a great impediment to business expansion. It is also difficult to ensure that the citizens of each of these jurisdictions are protected to a comparable degree. And I think over time, these frameworks are going to be increasingly important. The difficulty is that the more you want people to sign on to it, the tendency is that it becomes more bland. It becomes, you know, where it's not perhaps at the right level of ambition, because it has to satisfy everyone's, you know, sense of what's right and what's wrong. So this is, I think, an ongoing conversation. I don't expect that it will come to any conclusion anytime soon. However, I am very hopeful and I'm optimistic that there are like-minded countries that are very keen to continue to move forward together, particularly in the area of AI safety. Just because we want to advance AI adoption and the build-up of AI ecosystems in all of our countries doesn't mean that we throw caution to the wind, doesn't mean that we no longer care about AI safety. If you want this to be truly transformative, we have to give our citizens the assurance that it's being implemented with great sense of responsibility and also safety.
Minister, it's hard to talk about technology without talking about the rapidly changing global political landscape, regulatory landscape as well. I was at a Mobile World Congress very recently on stage with the CEO of Mistral AI, one of Europe's leaders in large language models. Arthur. And he vocalized something that's kind of been bubbling under the surface for a long time in Europe. And he said, we think that it's time for European companies to look to reduce their reliance on American technology, which is a discussion that's been being had in the background, but the first time I'd heard it publicly vocalized by a European tech company. And it comes at a time, of course, where it looks like the US is going US first when it comes to technology and many other areas as well. How do you navigate that landscape, particularly as it relates to what you were talking about at the start of the conversation around resiliency?
You know, this idea of over-reliance is not new at all. Even as an economy that was developing through the 70s, the 80s, and the 90s, we looked at Singapore and say that, you know, are we relying too much on a particular sector? And how do we diversify our economy? I believe the first recession that we had post-independence was in 85, 86. And it was very prominent in our minds that, look, you know, if you're only depending on a few engines, then when the chips are down, you may not, you know, have enough to keep going. So the idea that we would diversify your economy, you would diversify the kind of activities that people were engaged in, and within each of those activities, industries, you would want to have a diversity of players in those domains. I think that is quite, you know, embedded in our way of thinking. So that's not new in any way. Having said that, I think you also have to recognize that some countries are very advanced in the areas of excellence that they have. AI is one of them. Quantum will be another one. We will certainly try to build up our own capabilities, but it is not at all realistic for Singapore to say that, you want complete independence and, you want to be self-sufficient. We decided a long time ago that that was not an idea that was going to work for us, and we continue to try and engage with all of our partners. It doesn't matter where they come from, at the enterprise level and in many different ways. We look primarily for a combination of performance and also security as well as resilience, and that remains the fundamentals that will drive decision making.
Minister, we've got a few minutes left, so I just wanted to talk about the future and in this age of AI, how you're thinking about fostering the next generation of tech leaders and things like reskilling as well, which are becoming increasingly important. I think I saw a story in the last couple of days that schools in Beijing will introduce AI courses in primary and secondary school as countries around the world think about education, think about reskilling as well. What are you doing at this point when you're thinking about the younger generation here and how to build them up into a nation of tech forward and forward-thinking people?
We think not just of the younger generation, we think of every generation, because they are going to be part of our workforce for a lot longer. So we've paid attention to what we call pre-employment training. So, universities, polytechnics, institutes of technical education, those are very important to us. But continuing education training is probably going to be even more important. The ability of a young mind to absorb what's of current relevance is very strong. So we don't need to do a lot, to encourage young people to be savvy in the digital sense. We don't need to do a lot to persuade them that it's kind of useful to learn coding. And even if you were not able to do the most sophisticated kind of coding, simple stuff, block coding is not that difficult, and they pick it up. So I don't have a great big worry there. I also think that our educational system has been tried and tested over many years. We've got teachers who are very invested in helping their students prepare for what we call 21st century competencies. What we did interestingly decide was that instead of us trying to impress upon these educators what's relevant in this new era, it's easier for us to invite them to a setting like this and listen to people talk about how technology is changing the world. The educators themselves bring it back and redesign the curriculum accordingly. So we have a program that we call the Smart Nation Fellows to do just that. In other words, don't attempt to, as a expert in curriculum design, change curriculum. You need the curriculum designers to be imbibed by it, embrace it, and change it for themselves. But I wanted to shift a little bit of attention on to continuing education and training. People, after they leave their workforce, if we think that what they left school with is going to last them their entire working lives, I think that's not realistic. I think in their 40, 50 years active in the workforce, they might well have to pivot 3, 4, 5, 6 times, maybe even more. Who's to tell? But the idea is to give them the support and an infrastructure that makes it possible for them to make this pivot. One program, for example, that I'm particularly happy about is that once you reach the age of 40 in Singapore, and you decide that you have to go all the way back to school and acquire qualifications, formal qualifications all over again, we now have a scheme that can support you going back to school for 2 years, up to 2 years. You can do it on a full-time basis, you can do it on a part-time basis. What the state decides to do is that your financial commitments, we will help you fulfill them. Meaning that not only when you go back to school, there are, subsidies for course fees, there's training allowance that goes to you. It's in Singapore dollars, it's $3,000 a month. So if you take 2 years for this program, that's $72,000 for you to reskill, retool, and be ready for the future. That's how we're looking at it.
That's a great point to leave it on. Thank you for all your insight, Minister.
Thank you, Arjun.
Thanks for joining me on the podcast today.
Thank you.
That's it for this episode. If you want to contact us, email us at beyondthevalley@cnbc.com. Please follow and subscribe to the show, and you can leave us a review. We'll be back soon for another episode of Beyond the Valley. Goodbye. Round of applause.
Thank you.
Thank you very much.
Thank you so much to Minister Teo and also to CNBC's Arjun Kapil. For that was a really enlightening conversation on how Singapore is really pushing into a digital-first future. But actually listening to the minister, I feel like it was not just a digital-first future, it was also a people-first future. Because I don't know whether you heard the minister right at the top of that podcast. She set the tone by saying, the idea that AI serves the public good, that starts right now. It starts from this point, and that is where all of Singapore's efforts are focused. So, Minister, thank you very much for that effort. It certainly is a very valuable one. Before we move on to the next segment, though, I would like to once again just remind everybody to make sure that you take advantage of all the wonderful experiential zones around the top floor here at Singapore's Jewel. There's the wellness zone, of course, and there's the road to happiness, and there's various other areas where you can interact with technology and AI. So let's move on, shall we? Because energy consumption and sustainability are two other key issues that Singapore is grappling with as it tries to navigate its way through the next 30 years. There is one man who knows a lot about what is going on with sustainability and cares a lot about a sustainable future for our planet. So let me introduce now, and come on up to the stage, sir. We have Jean-Pascal Tricoire, who is the chairman of Schneider Electric, and joined by the one and only CNBC's Steve Sedgwick. Over to the stage.
Thank you.
Thank you.
Thanks, you, Mandy. Right, let's get straight into this. I have had the honor, and I mean this, we've joked around a lot over years, but I've had the honor and privilege of knowing you for a long time. And I know a lot more about Schneider now than I certainly did when I first started meeting you.
I see you can do the questions and the answers.
Well, I can do some of the answers, absolutely. But look, I know you also as someone who has not only taught the talk, but also walked the walk as well. And a lot of people think that being successful as a business, being profitable as a business, being one of the most important performers in European stocks, and take a look at Schneider over the last couple of years, by the way, can't be sustainable at the same time. Well, this man has proved that you can. And although this panel is AI solutions for a sustainable future, what I really want to get across to you is that you can be sustainable, you can adopt new technology, you can digitize, you can come up with solutions for a net zero world, and you can be bloody successful as well, which is something that a lot of detractors out there don't believe can be the case. So I'm going to call this session Myth-Busting with Jean-Pascal Tricoire as well. Before we speak specifically about AI, tell me about your 20-year journey very briefly as well, because 20 years ago, you started on an odyssey of saying we can be successful, we can be profitable, and we can digitize, and we can be sustainable as well. So that's kind of a journey that the naysayers should pay attention to.
Well, first, it's always good to see you. And if you say we know each other for a long time, that means we are not young anymore, unfortunately. But we are experienced, right? So let's speak about what we've done briefly. We at Schneider, our company specialized in energy management and digital. And we somewhere support our customers on two of their key agendas. The first one is digitization, and the second one is sustainability. So 20 years ago, the big question was some people were opposing sustainability and profitability. And we were convinced, and I was convinced, that it should be the contrary, that if you could align your company with sustainable objectives, then you'll be in the perfect tailwinds for any business. And you could bring really important solutions to your customers.
And then rewind 20 years, that was the beginning of the Internet of Things. So applying digital to things around us, building infrastructure, industries, cities, and so on. That was just the beginning. And going from IoT to big data, that would come in the next following 10 years. And then from big data, going to AI for optimization. So that was the first technological revolution. And at the same time, the world, and is still today, largely dominated by fossil fuel, and we need fossil fuel, and was only less than 20% electrical. And there was that convergence of new renewable energies, storage coming up, microgrids, so that you could think of producing electricity in a new manner, in a renewable manner, in a low-carbon manner. So we decided to specialize Schneider in being the partner of our customers for more efficiency, means profit, and sustainability, means being competitive, by combining digitization for more efficiency, and by combining electrification to eliminate carbon. And today, well, we've multiplied our size by 5, and digital is more than 50% of our business, actually close to 60% of our business. And we participate to most of the smart buildings, smart cities, data centers, smart manufacturing projects around the world. So this is how, when you line the two, actually, they don't contradict each other. And what we do is good for the planet, but it's good for our customers' wallet too.
But AI, which is, again, part of the title of this panel as well, surely the enormous consumption of energy which AI is going to consume. I think stateside, we've already heard today about this 60 gigawatt level that is needed for the data centers, the hyperscalers as well. That surely is the end of the marriage between technological innovation, digitization, and indeed sustainability, because that energy can't just come from renewables, can it?
Yeah, I think you have to put that in perspective, right? If you apply AI to anything around us, this building, a city, transportation, and so on, you can really get energy efficiency gains. And what we prove every day at Schneider, you connect, you gather the data, you get the data, you apply AI, you can gain probably 30% on anything around you in terms of gains. That's applied to 70% of the world energy consumption. So I don't want to bore you with the math at nap time, but 70 by 30% makes 20% of energy savings. Now you take AI, and AI is a huge surge of power consumption for data centers. But today AI is only 0.5%, actually data centers are actually 0.5% of the world total consumption. It's going to double in the next coming 5 years. It's going to make another 0.5. So plus 0.5, minus 20%. And this is what we are facing. The second point also, people speak about that surge in electrical consumption coming from AI. But we have to realize that the world of tomorrow will be more electric. It's not the only surge of electricity coming up. So you've got AI on all technologies powered by electricity. Then you've got the transition of mobility from fossil fuel cars to electric cars. Then you've got buildings in the northern hemisphere going from gas boilers to heat pumps. And then we've got 3 billion people in the next coming 20 years in emerging countries to whom we must supply electricity. So the whole equation of electrification is the future of the world, but it needs to be done in a different manner, because otherwise we're going to be choking with pollution, climate change, and everything. And this is what we are working on, right? So you have to be much more efficient than what we use today. And today many things are not efficient and not digitized. And at the same thing, we have to create the space for a world which is not like today, only 20% electrical, but tomorrow 30 to 50% electrical.
In terms of the message, there is a lot of noise coming out of various parts of the world, and certain politicians who say that the green and net zero and sustainability isn't a way to become more efficient and more profitable as well. When you are selling product to the states in the United States, to the companies in the United States and elsewhere as well, you don't say to them, I'm going to make you greener, I'm going to make you more sustainable. You tell them you're going to cut costs, don't you? Isn't that the language that actually the customer understands?
Yeah, look people understand both languages. Many companies actually today, as we speak, 10,000 companies have taken commitments to carbon neutrality, certified by SBTi. So if you take Schneider, for instance, 99% of our carbon footprint is going with our suppliers and customers. That means we partner every day with them to work together on progress together. Now, as you said before, we are also business people, and we propose solutions that make sense financially, which have an economic return. If you look at our sector, saving energy is actually very good for your P&L, especially in a world where you don't know the price of energy and the availability of energy in the future. So what we make sure is that the return on investment on anything you do to migrate your energy to something more efficient and something more sustainable have a quick payback. So when we speak to some of our customers, to all of our customers, we speak about payback. And we speak about what is investment and what is a return. But like energy efficiency is like quitting smoking, right? Not only you are healthier, but at the same time you get richer. Because for anybody who smoked, it's a lot of money at the end if you pile up all of those. So this is what we propose with, to the companies around.
But energy is the bottleneck for AI, isn't it? That is the big problem, that there is not enough energy for AI as well. What kind of solutions are you proposing? Because this isn't just a one-size-fits-all, is it? It could be microgrids, it could be working with a national infrastructure as well. There are many, many different ways to get to market and providing the energy for AI, isn't there?
Yeah, look, I think we have all realized in the past years that energy is a bottleneck for many things. Number one, for anybody who's lived in new economies, in emerging countries, and I've done that for many years of my life, you know that access to energy is your passport to a decent life. And you've got still today 1 billion people who don't have access at all to energy, 2 billion who have a poor access to energy, and there are 2 more billion joining us in poor parts of the world that will need access to energy. So 5 billion people more need that access to energy. Then we've seen with the crisis in Europe that energy was not for granted. There are parts of the world that was considering energy as something for granted. We've all realized that, number one, it's not granted, so energy security is important. And energy affordability is also important because otherwise you can't run competitively with your customers. So now AI, yes, energy is today one of the big bottlenecks for AI because all of those data centers, which used to be relatively small things, are now have turned to very large things, represent the power consumption of a city, sometimes of several cities. So what are we doing? The whole industry, from chips to power, like we do, is working to make it much more efficient. And we work on cooling those data centers, powering those data centers so that we can get the same computing for much less power. The second thing, as I said before, you can save so much in buildings, which won't change anything. You can save so much in industry and redirect that energy to data centers and use those data centers to keep working on the efficiency that the net balance is positive, right? So, but for that, we need, number one, buildings to be smart, manufacturing to be smart, cities to be smart. We need the grid to be smart. And what we see more and more, and this makes me very excited. I've been 40 years in the world of energy. And traditionally, when you are in the world of energy, you turn to energy companies. Like you turn to large oil and gas companies, you turn to large utilities and electrical companies. I personally, as an entrepreneur, I believe in personal responsibility. And when I look at the future of energy, it's going to be more energy efficiency that you can control as a consumer. You can save because you digitize your installation. But now you see more and more customers asking us to do a microgrid. So producing their energy at the bottom of their building on campus At least I've got 2 examples here in Singapore of manufacturing plants which are energy positive. They consume less than they produce, and they make money of that technology. And that means that tomorrow the relationship of us to energy is changing. Not only we are becoming educated consumer, because everything is metered, and thanks to analytics and AI, you know how to optimize, but we are becoming energy producers. Bring it to your house. It can be rooftop solar, right? But bring it to a company, to a plant, to a building. You can have a microgrid, and then restitute a part of that energy generation to the grid.
Personal responsibility, personal consumption, it's one of the biggest changes you've seen in your 40-year career in energy. But there can be big solutions as well. I mean, China is a great example of a country that has a very organized approach to the grid, whereas, dare I say it, there are other countries that have a more of a chaotic version of providing their 21st century energy needs. I'm not here to do trans-Pacific comparisons, but there are 2 models out there. There's the micro, everyone looking after their own solutions and feeding into small grids or into the wider grid, and then there's the Chinese solution, isn't there?
Yeah, there is. Actually, sometimes the energy system can be a reflection of the culture of the organization of a country. But you cited China on the US. It's relatively common at the moment to compare the 2 models. I think 2 models are going through a transition. China has been, from the beginning, quite organized, a big national grid on very large power plants. They are doing a lot of nuclear projects at the moment, but they're also big in renewable. They are mixing that grid with microgrids. The model that we see in other countries like the US is much more reliant on the local initiative of companies.
But that can be okay as well, can't
and that's
it's
okay.
This isn't a US bashing conversation.
Absolutely.
And JFK is a great example, isn't it?
And you know what? We serve both transitions, right?
Yeah.
What is important is to realize the transition and to know that this transition is going to happen. And when I was saying about this change, or speaking about this change of the energy landscape, energy transition, like the one we have to accomplish towards more digitized and efficient, and electrical and decarbonized, doesn't happen through the supply. It happens through the transition of the demand. So we're going to be more electrical if you guys transition to an electric car. We're going to be more electrical if factories run on electrical process and not fossil fuel process. And then that's back to my point before, is that the energy question is less and less a story of centralized organization, but it's a question of empowering all of us, companies and individuals, to drive this transition by our own initiative, decisions, and actions.
Look, I'm privileged to be here in Singapore with you all as well, and looking at the dynamism of the region, it makes me realize, well, I knew anyway why you live in this part of the world anyway, but is there something that, dare I say, those of us who come from slower moving geographic jurisdictions, I'm talking about Europe here, of course, is there something that we can do actually at an institutional level, at a country level, at an EU level, that it could really kickstart the energy transformation that Europe so badly needs? Because one of the reasons why all those amazing German companies have said we're struggling is because of our energy costs, because of our lack of grids. Is there something that actually is an example in this part of the world that Europe can take back and say, we can do that?
Okay, there are several things here. Number one, the energy landscape is very slow to move, because the reality is that you don't move the energy landscape by rebuilding everything. Only a very small fraction of existing buildings, existing factories, existing infrastructure get built every year. It's less than 0.5%. So by nature, if you consider that the energy landscape is fixed by the way we consume energy, it's very, very slow moving. What is needed is to change technology and especially move to digital, because with digital, you can get in efficiency the same result, but with 10 times faster, 10 times cheaper than doing what was used before. But now, if you speak about, I would say, places where the legacy is very heavy and slow moving, it's always back to the same thing. It's making people understand that things have changed, right? You don't ask yourself the question, how you place a phone call today with your phone. It's going to be IP-based. You are not using analog lines anymore. In the field of energy, we should have the same thinking. How can I get much more with less cost and in a much more profitable way, leveraging new technology? Number one. Number two, regulations, and you were referring to Europe, are so heavy and so directed to protecting the past landscape that we need to move that. Because in Europe, it takes so much time to get a permit for something renewable or for retrofitting things. It's far too slow. We are facing, they say, a climate emergency. Let's go for emergency models. And that's one of the problems. And the third problem is about people. We human beings, we take far too much time to embrace change. And we don't have enough people trained to those new business of renewable energies, home automation, smart buildings, smart cities. Architects are very often not trained. They are very good in materials, but not as good in electronics, software, and AI.
We're training people the wrong way. We're not building the right kind of people that Schneider and others can use to bring about this revolution.
Look, AI applied to physical infrastructure is probably only a few years old. So this is new technology. People who are designing today have not been trained to those frontier innovations. So what we need is, we have a responsibility as a company like Schneider, right? We need to train people to those new disciplines. We need to bring in teachers, courses, universities inside our ecosystem so that they keep training and keep evolving.
You've just done something pretty amazing, and I've got to ask you one more question, maybe. You've done something pretty amazing, which I've been asking the question for about 5 years, where are the AI jobs? And I haven't had a decent answer up until now, and I didn't know I was going to get that. But yeah, there is an adaptation of the current set of jobs that are out there to actually incorporate AI knowledge as well, including those designers of buildings as well. I've got to ask you one more question. On the day of the DeepSeek announcement, Schneider Electric shares, like a lot of companies, they fell because they thought, okay, there's going to be a lot less energy needed, a lot less infrastructure needed for the development of AI going forward as well. But add that to the fact that you just said we can get 10 times faster, we can get 10 times cheaper as well. Is there a more meaningful long-term reaction from the DeepSeek moment that is actually going to transform your world?
I think it's actually good news. We need AI at every level. We need AI very close to the application in a building, in a shop floor and everything. We need AI at the level of the whole building, at the level of the whole factory. We need AI to optimize your whole enterprise at all levels so that you can buy better, consume better, decide better, source better. And to do all of this, we need models who operate on a smaller scale. And for us at Schneider, we operate very close to your life. So we need low latency, fast time of response. We need to help people on the spot. We cannot rely on the long time of response with the cloud. So the fact that companies like DeepSeek show, number one, that you can achieve the same results with smaller models, will actually spread AI at all levels of the architectures much faster. It will democratize AI. It will make our life easier to operate. And we spoke about energy efficiency and everything. I'm thinking we at Schneider, as a company, we have 150,000 people. My first concern is their safety, is the way they operate, and deploying AI for them to operate on dangerous equipment is fantastic for all this. So put safety, reliability on everything. The spread of AI models at every level of what we do is actually very good news.
Final. Mandy's standing up, so I've got to be ready. I've been talking to you about IoT for a long time. You were just having a conversation with another big tech company off the camera about how long IoT's been around. Are you surprised at how slowly or how quickly we've changed talking about just IoT to IoT, digitization, and AI? Because we were talking about AI, something that was almost in the cloud a couple of years ago. Now we talk about it as an economic reality. Are you surprised at how long it took or how quickly it's come?
I'm super excited, right? I said it long time in the industry. I think we've never been at such a tipping point because IoT, if you don't have AI, doesn't give sense to where you are connected. On AI, without the possibility to act directly on the environment, is very difficult to use. So that magic combination that comes at maturity at the same time, which is pervasive IoT. Think about 5G, wireless communication, real-time communication, combined with big data, with a cloud repositioning of all your data, combined with AI, pervasive and cheaper and cheaper. And I didn't even mention the digital twin, the fact that you can reproduce a digital twin of things that you operate, are the magic combination to act in real time on the environment and at the same time make it accessible to everybody. So it's exciting time.
Yeah, it's nice to see you so enthused after all these years as well. This man gets younger and younger and more excited. I'm afraid, sir, there's no questions today. I've eaten up all the time, but thank you very much indeed for putting your hand up. Jean-Pascal Tricoire. Thank you so much.
Thank you so much to Steve Sedgwick of CNBC and, of course, Jean-Pascal Tricoire. Before you go, guys, Jean-Pascal, I don't want to take away from the gravitas or importance of what was said up here on stage today, because it really was a great conversation. I had a lot of takeaways that I'll bring up in a moment's time, but did you guys coordinate on your outfits?
Always.
Because you look like Wonder Twins up here. Did anyone else notice that?
No, I'll let you into a little secret. Jean-Pascal said, do I need a tie? And yet no one at Schneider owns a tie.
He wears a tie just to make me look bad, right? Every time.
Well, I'm certainly not going to ask the audience who wore it better.
No, we are digital twins. That's what he meant.
You're digital twins. Wonderful. Thank you so much.
He's the elegant one, that's all.
Oh, no, you're both elegant. There's no competition here.
Thank you, Mandy.
Thank you so much for joining us today. Jean-Pascal Tricoire, the chairman of Schneider Electric, and, of course, CNBC's Steve Sedgwick, always one who's up for a little bit of fun. But I did want to just say my key takeaway, or one of my key takeaways from that conversation was Jean-Pascal saying that when it comes to energy, we really need to think about personal responsibility, personal consumption, and personal production as well. So that's something that I'm going to think about. But without further ado, let's move things along, because Emma Crosby is waiting here in the wings and she's champing at the bit to come back up on stage. So let's give a big warm welcome once again to CNBC Catalyst's Emma Crosby. Emma.
Thank you very much. A very good afternoon. A very good afternoon to you, ladies and gentlemen. It's really great to see you again. We've had such great content already this afternoon. I don't know about you, but I really enjoyed listening to Minister Teo just a few minutes ago about how Singapore is being known world over as a growing international hub for innovation and entrepreneurship, particularly when it comes to technology. Now, one area of innovation that's getting more and more attention is Singapore's quiet rise in the global deep tech race. That's a sector that's expected to more than double in size in the next 10 years alone. So to tell us how Singapore is positioning itself to reap the benefits of deep tech, it gives me great pleasure to welcome onto the stage now a gentleman who knows all about it, Lee Chuan Teck, chairman of Enterprise Singapore. A big round of applause, please, for Chuan Teck. Come on up, sir. Take a seat. Lovely to see you. How are you?
Thank you for having me.
The old, there we go, the seat there. It's lovely to see you. How are you doing?
I'm very good, thank you.
The waterfall is running for you.
Beautiful, isn't it?
It's absolutely beautiful. Can we start, please, Chuan Teck, by trying to demystify what exactly deep tech is and how you see it transforming some of the world's most complicated issues when it comes to health and technology and climate change?
Sure. Well, the general definition of a deep tech business is a venture that is built around some scientific pattern. But within that definition, we have a broad spectrum of companies. On the one hand, you have companies that are just tinkering around with fairly mature technologies. And on the other hand, you have companies working on really frontier scientific breakthroughs. But to me, the most exciting part about deep tech is how people are coming up with solutions to address some of the most important challenges confronting humanity. You know, how to find enough cheap and green energy to power the world, how to deal with the diseases and frailties of a rapidly aging population, how to find enough clean water and food to feed potentially 10 billion people by 2050, how to fill the gap in a shrinking global labor force. If you look at Singapore, those challenges are very pertinent to us because we are so small. and so resource constraints. So we have roughly about 47,000 researchers now in Singapore working on various aspects of those challenges.
So that's a decent-sized number, isn't it? And as you say, addressing like the issues for humanity for today, big issues. So what are you most excited about when you look at the innovations you're seeing amongst those companies currently based here in Singapore?
Well, the healthcare space is doing very well. We have companies that are looking at essentially what we call non-communicable diseases, cancer, mental diseases, Parkinson's, Alzheimer's. And they are making breakthroughs in both diagnostics as well as therapeutics. And what's most exciting about them is that they are applying AI technologies into the discovery of new treatments, and they are making rapid progress in these fields.
So if we look at a 10 or 15-year progress or period, what kind of developments could we see when it comes to cancer or communicable diseases?
Yeah, let me give you an example. There's a Singapore company called Lucence. Their product is, I think, being exhibited today. They are the first Asian-based biotech company to receive approval from US Medicare for insurance coverage. They develop ultra-sensitive liquid biopsy to help detect lung cancer at a very, very early stage, where its treatment is almost 100%. So they are able to do that. We have also folks who are looking at crunching huge amounts of data. This firm called Mesh Bio that is able to detect early mental degeneration so that, again, you can treat them before the onset of Alzheimer's.
And if they can do that now, can I only imagine what they can do in 10 to 15 years' time. It's truly revolutionizing. And it's not just healthcare as well. I know that you've got some very high-profile figures who are backing deep tech here in Singapore, namely Bill Gates.
Yes.
He has said that he believes some of the solutions to some of the hardest climate change issues could be solved here. Is he right?
He is. I hope he is right. Because climate change is one of the biggest challenges facing humanity.
And this region in particular, in the ASEAN region.
In this region, I think compared to Europe and the US, we have made less progress towards decarbonization. And because in this region, we are actually divided by big expanse of water, unlike, say, continental Europe or the US. Many of the solutions that are applicable in the US and Europe are actually not quite applicable here. So, for example, we need to find good ways to transport energy across water or for air transport. So, you mentioned Bill Gates. There is a company that's under the Gates Foundation called Breakthrough Energy. And last year, Enterprise Singapore, Breakthrough Energy, and Temasek came together, and we formed a partnership. And the essence of the partnership is that we started what we call a Southeast Asian Fellows Program, whereby we identify promising startups in the climate tech space. And then we, of course, invest in them. But more than investing in them, we also give them access to all our global networks of scientists, of businesses, and help groom them and nurture them into real solution providers for the world.
You mentioned partnerships.
Yes.
It is all about successful partnerships. So let's talk about your role. You, of course, are chairman of Enterprise Singapore, the government agency that's tasked with championing enterprise growth. So what are you doing then? What is your office doing to position Singapore as a leading hub when it comes to deep tech?
Yeah. So there are two parts to this. One, of course, we need to continue to grow the body of science. Like I said, we already have 47,000 researchers working on it. So that body of science is growing. To add to that, actually, we have more and more researchers and scientists from all over the world coming here because of our IP protection regime, because of our access to global talent and global markets. They are coming here and adapting that technology for use around the region. So the body of science is growing. But the second part, that's where Enterprise Singapore comes in, is really also to grow the ecosystem so that we can bring the science from the lab to the real world. I simplify down to 3 C's. The first one is capital. And it's not just a question of financing. It's about how we can bring the right investors here, investors who actually know the science. Because the journey from the lab to the real world is actually quite a treacherous one. And we want investors who know the business, who know the pitfalls, who are able to nurture the companies and grow the companies. So for example, last year, we brought in Flagship Pioneering. You may know them. They're an outfit. The founder is Nubar Arifan. They're the people who started Moderna. So they came here, and they are looking for good biotech startups to help groom to be the next unicorns. The second C is actually connectivity. We need to build bridges to connect the Singapore ecosystem with all the deep tech ecosystems around the world. Because when scientists work together, when businesses work together,
jobs easier. And that's what we are trying that's the message we're pushing across.
Let me throw another question to my panelists. The idea of balancing profit with purpose should be the focus for next generation leadership. Now, the question is, what does this mean in terms of decision making? What are the trade-offs? Kevin?
Well, definitely there are trade-offs, no? Both financially, of course. It does cost more to be more responsible, to apply an ESG program into your company. It does cost more money. But there's also an emotional cost because, remember, you're asking people to get out of their comfort zone, especially people who have been working in the company for a very long time, old-time executives, for example. It does take a lot for them to accept the reality of the world today and the need to be responsible citizens. And so that also does take a toll in your company.
Timothy?
So on one hand, we're lucky. We're 100% family-owned, fully private. So we can afford to take decisions based on what we think is the best for the business in the long term. We don't look so much at what the results are this month, this quarter, this year. We really look at long term. So that I see it as a big privilege that we have, and that allows us to really look at things in the long term. And if that means not having a fantastic profit this year, so be it. However, I think it's very highly correlated to how you handle people and performance assessment with people, because then suddenly you shift the focus towards something else, which is not necessarily money and profit. And so you have to provide clarity to your people on, okay, what is the purpose? What is it that we are trying to achieve? And how do we measure it? How do we measure if we're doing well or not?
Are there certain businesses within your portfolio, because of this vision, that you want to get out of?
No, not that I want to get out of, but that I want to shape in a way so that I can stay in it.
Tapani, when you look at AI, how is it that balancing profit and purpose, where do you sit on this issue? What are some of the challenges you face?
For AI and for profit and purpose, I think for the questions of profit and purpose, I think I involve everyone to think of making profit with purpose, or making the purpose, achieving the purpose on the belief that it will become the profit, in the sense very similar to the long-term view of the business. What we involve everyone to think the same. I think it supports the sustainability, the CSR causes. For example, like in our retail business, we have the AI involved in helping the data system for the moms and pops. What we have as hypermarkets, and we sell products to the moms and pop shops around in Thailand, like 400,000 stores. And when we have convenience stores coming up, for them to survive, and we think that it is also our CSR project, helping them on the system, on the setting up of the stores, on the inventory, on the promotion ideas, and many more. And once we create this trust and also the help with purpose, and they in return buying the products from our stores, the reputation increase, and we feel proud and we feel a part of the community. So overall, I think it's to invite us, the team and the company, to think of making profit with purpose, or if setting up the purpose, just believe that it comes a little longer term, definitely return in profit.
Anthony, profit and purpose, where do you stand on this issue?
I totally agree with Kuntapani. I'll give you one example where we didn't have to make a trade-off, and one example that we had to make a trade-off. So, for example, I have friends here in food delivery. They understand this very well. You can use technology to change the frontier curve. So what does that mean? It means you could increase batching, and if you increase batching, you actually reduce the environmental carbon footprint on a per-trip basis. You can actually save costs. You can actually reduce your costs for every trip, and you can actually pass the savings on to the customer. And the customer is happy. You reduce costs for the company, you increase profitability, and yet you reduce carbon footprint. Everybody, win, win, win. But not every situation can be in that paradigm. I'll give you an example where in Malaysia, I remember where we had to beg, and then literally, I'm very thankful for Minister Anthony Lok of Malaysia, Transport Minister, with him on stage, and I cried.
You cried?
Yeah, I cried while talking to, because the previous administration did not allow for persons with disabilities to drive on Grab, and that many thousands of people would be unemployed. So I appealed, and I said Grab would be the first to start. We'll give 0% commission. That means we'll lose money, but it was the right thing to do, and the government reciprocated, and now we are one of the largest enablers for persons with disabilities in Malaysia. Person who was deaf, who are handicapped, can now drive on Grab, and they actually have the highest 5-star ratings.
So that trade-off paid off in the end?
In the end, I guess it did in the longer term.
In response to this rapidly changing environment, do you feel that your approach to leadership has to change?
I think, as I said, we have to continually adapt to the new realities. We're living in a very different world now. There's this deglobalization, and of course, there's like where we're coming from, the Philippines, we have a lot of these territorial disputes, which puts us at times at odds with our neighbors. I think leadership, the leadership that you need to have here is the type that you can be very agile and very flexible, and you have to really keep up with the times. There's really a lot of uncertainty, and I think it's how to motivate your entire organization to factor in all these uncertainties and move forward.
Timothy, do you think your approach to leadership has to change?
Not necessarily. I think we need to adapt. Indeed, as you mentioned, things are changing. The world is changing very fast, and I think it is our responsibility to adapt. However, I think it is also important not to compromise on your values, particularly if you have a company that is really value-driven. Then it is quite important to have that North Star clear and not to compromise on it. In our company, we say to be strict on values and loose on opinions, and so being open to changing your mind and changing your opinions, but being quite strict on your values.
Kuntapani, your approach to leadership?
I use the leadership style and would like also to have my team in the company or my friends to believe so. I think it's the style of working with the team, being with the team, learning from the team, and learning with the team. So I think with the changing any conditions of the business or any challenges, just being with the team, then you learn with them and you try to be adapt and get the changing all the time, and being fast, being receptive, listening a lot more. I think then it would feel very fulfilling, and we can achieve together. For the company of the size of the employees, we have about 60,000 employees. So I want to get it very personal, to get it on the coaching on one-on-one, or to be in the one team together. That is the style that I also have my colleagues and my friends to be the leadership of their own and to pass on.
A little bit more inclusive.
Yes.
Anthony, what about yours? Are you changing your leadership style? Has it evolved over the years?
Totally evolved. 13 years ago, I would be right here in Changi, not sitting on the stage. I'll be downstairs at the airport, knocking on windows and signing up driver by driver. 13 years now, I'm on the stage, very different. I spend my time dramatically different by, for example, spending time really not just spending time with heads of state, which is extremely important because my business is regulated, but more importantly, ensuring that we build a culture that can stand the test of time, even when I'm not there. So I spend a lot of time on culture. I spend a lot of time on leadership DNA. I spend a lot of time on, now actually, you know, I actually enjoy those rare moments that I get to go down back to the ground and be a Grab driver. So don't be surprised if I come and pick one of you up or deliver Grab food to your house. But those are more rare moments, and I wish I could do a lot more of that. But the philosophy of ground truths, again, I do it not because I love it, I do, but more to display a ground truth culture that continues to persist throughout myself and all throughout the leadership.
How many of you want Anthony to be a Grab driver? Show of hands. Please take notes. You have to service all these people when you get off the panel, okay?
I've already sent you Grab promo codes.
The leadership journey, getting there, always fraught with mistakes. What have you failed at, and what's the biggest lesson learned? I'm looking at Timothy because I know he wants to answer this question. What have you failed at? What's the biggest lesson learned?
So there's a very long list of failures. I think it would take more than the 8 minutes that we have to go through it. But for me, it's very much related to the difference between a failure and a mistake, and then how your message to the organization revolves around that. A failure being a mistake you make trying something new. You use all the information that you have available, and still you fail. And that is very much at the essence of innovation, and that is something that I'm okay with. And as a leader of the organization, my message to my colleagues has to be that it's okay, as long as it's not a fatal failure, but it's okay. What is not okay is a mistake that you make because you didn't use all the information you had, or because you didn't build on the learnings that you had in the past. That is not okay. So I think it's important for me to be a role model for that concept with my colleagues, and accept and even welcome the first type of failure, and be a little bit stricter on mistakes.
Kevin?
Well, I was younger. I guess I was a bit more difficult to work with, a bit of a micromanager, very opinionated.
Are you still a micromanager?
Not anymore. I've learned to empower people more. But I think what I've learned is through everything, we should never really forget core values. And like in our company, in our group, our biggest core value is really integrity. Integrity is such an important thing, and everything else fails, that has to be maintained. We practice that in everything that we do, the way we treat each other inside the company, the way we treat our customers, and the way we treat all of our stakeholders, our communities, and of course, the broader nation. So that's how we apply ourselves in our
Company, biggest lesson learned? What have you failed at?
I think failure or setbacks or challenges, we can think of it in a different way. So I usually discuss every day, trying to get the determination in place, try not to give up or not to even give in to the conditions of the challenges around. So it's just, I feel like I'm facing so many to say maybe failures, but it is what I then recognize it again. It's just the challenges that we just keep on working on it and trying to learn from the competitors that are so much ahead. We can learn so much more, and being great of being the number 2, then we have the big boy and the big guy in the front that we can have many lessons to learn from.
Anthony, biggest lesson learned for you?
As Tim shared, many failures. I'll talk about 2 that really taught us resilience. One was in finance. We many years ago, we nearly ran out of money. Some grabbers actually know this. And it was extremely hard to raise capital being in Southeast Asia. And we were much smaller then, facing much larger competitors. And we couldn't raise money. And we nearly went broke. So I'll never let that happen again to the company. It's tremendously resilient now. We have a $6 billion balance sheet now. I'll never let that happen again. The second is technologically. We went down. We went down for a long time. And I remember some of the grabbers also remember here. I remember buying, because I don't code, I could just go check out which stores were open. There was only a pizza store and a dim sum store. And I went to buy char siu bao and pizzas to bring to the coders. And I stayed with them all night long to make sure they could stay on coding and fixing the stability issues we faced many years ago. Today, our system is much stronger, much more resilient, and something we continue to emphasize on.
And finally, we're running a little bit out of time. And finally, I want to ask you, what's the one piece of advice you would give to future leaders in this audience that they should know about building a successful business? Tapani, let's start with you.
The learning that I have for the successful business, I also think that it's to keep on learning. It's to keep on and never be satisfied with just today's outcome. So build up a bigger challenge, set up a higher target, and happy with the learning along the way with the team, with the competitors, with the customers, then we will find a way.
Kevin, one piece of advice to this audience. Future leaders, what would it be?
Yeah, I think it helps to not just look at your business as to what it can do for you, but also what it can do for your country. I come from the Philippines, and compared to Singapore, we're very much still a developing country. We still have a lot to catch up to. So whatever decision we make as a company, believe it or not, we always keep in our mind what good can this do for our country as well. So when we expand into the countryside, when we build our townships outside the national capital region, our goal is to create economic activities in places that need economic activities and create jobs in places where they need more jobs. No? And so that's why we're also into hospitality and tourism, because we think that the Philippines has so much to offer, and we still have such a tremendous upside in this, and it's such a tremendous job creator for our country. So it's really having a higher purpose, really, more than just, as you mentioned, just more than just profit, but always having a purpose.
So having improving livelihoods.
Improving livelihood.
Create more social impact.
That's right.
Tim?
Well, I was going to say keep learning, but Kuntapani stole it from me, so I will come up with another one. And it's I think it is to focus on your values, personal values, and make sure that those values, first of all, that you're quite strict on them, but also they are aligned with the company's values, because that is really how you make it sustainable in the longer term.
Anthony?
Well, I've learned a lot just by being here today from these are family businesses that has lasted generations, clearly. So I think number one is how do you think long-term like their families have? That's something we need to keep pushing ourselves to think in decades and not in quarters. I guess if there was something I would just share for the next generation leaders is really doing good for business and society are not mutually exclusive. We've shown that we now help move the GDP. We now help unemployment rate dramatically in every city we serve. Yet we registered our first full year of profitability last year with $313 million of EBITDA. So I think the next generation leaders, you can do much better than myself, 100x. My ask is please stay true to purpose. As Kevin said, do good and do good for business as well.
What an insightful conversation. A big thank you to my panelists for being with me today. Ladies and gentlemen, can we give a round of applause to my rising next generation leaders? Mandy, it's back to you.
Well, thank you so much for that, Christine, and thank you also to the panel for that really candid and honest conversation. I learned a lot from that, so thank you very much to all of you. And also, you heard it here first from Anthony Tan here, the Grab CEO, saying that humans that don't embrace AI will be replaced. The same will go for companies, although Anthony himself is going to have a very busy night by the sounds of it. We're going to move on now to the final panel of the day. Yes, we finally got here, folks. And this is going to be a great one, because we've been talking a lot about the double-edged sword of AI. So yes, of course, it's accelerated things like productivity and industry development. But as we've just been talking about up here on the stage, it's also accelerated the uncertainty in the workplace as well. So for this conversation, let's bring in two guests. We have Faridun Doziwala, who's the Master Expert Partner, Lead Human Capital Practice Asia at McKinsey, and Tan Su Shan, Deputy CEO at DBS. And to host this conversation, we have CNBC's Tanya Breyer, who I'm sure is well known by many of you here in the audience and loved by many of you here in the audience already. So Tanya,
thank you.
Over to you.
Mandy, thank you so much. Thank you for that wonderful introduction. It's fantastic to be here at CONVERGE Live in Singapore. Welcome to all of you, and welcome to my fantastic panelists, Faridun and Su Shan.
Thank you.
Thank you.
What a great venue. Isn't this fantastic? Right. Corporate leadership in a disrupted world. Su Shan, I'm going to start with you. With all the geopolitical uncertainty, with the economic risks, leadership is really in the spotlight. As the deputy CEO of DBS and the incoming CEO in a couple of weeks. Congratulations.
Thank you.
Of DBS.
Thank you. So kind.
How are you facing those challenges?
So, you know, in the new year, I did a New Year message to our staff, to our teams, and it's challenging. There's a lot of geopolitical headwinds, tailwinds. You wake up and there's like new news. One day it's U.S. American exceptionalism, another it's we're heading to a recession. So I talk about the 4 R's a lot, Tanya. And the first R is resilience. I mean, as a leader, being resilient is key because you're at the coalface. Your teams are looking at you. Your customers and your stakeholders, your shareholders are looking at you. I think it behoves us to, be that voice of reason and to not be swayed by, overnight volatilities or short-termism or, an administration that might have a different agenda. It's a 4-year administration. So if you've made long-term plans, you might have to pivot, but being resilient and being able to face whatever comes your way is key. And then being responsible, my second R. I do think now more than ever, leadership is about being responsible, whether it's, not saying one thing and doing another, but being true to your long-term values, right? So, for example, DEI or, ESG, if you've committed your organization to reducing your carbon footprint, and you can, and it's financially viable, then stick to your commitment, right? Don't chop and change because you're trying to ingratiate yourself with another administration.
So, and being responsible in what you do, whether it's in AI, generative AI, you've got a lot of data of your customers, and making sure it's safe is also crucial. My third R is really about being relevant both to your customers and to your stakeholders and to your employees and to your colleagues. And staying relevant means learning new stuff, because the world's changing at a pace that we've not experienced. Yes. And how do you stay relevant? You stay relevant by learning, you stay relevant by experimenting, and you stay relevant by making it okay for people to unlearn and relearn new skills. And last but not least, the fourth R I have is to reinvent yourself, to not be scared to say, okay, what I knew yesterday may not be relevant today, so reinvent, relearn what I know, take a refresh, and make it okay to do so.
Thank you, Su Shan. And Feagin, of course, being a partner at McKinsey & Company, what's so interesting that you've said that there's a high percentage of leaders who think they're unprepared for their new roles. So how will they navigate this current environment?
Absolutely. So if I just build on what Su Shan said, right? The pace of change is overwhelming, and we all know that, so I won't belabor that. But there's a phrase that I heard somewhere, which is, welcome to the slowest day of your life, right? So this today is going to be the slowest day. It's the 10th of March, I guess. Yeah, 11th, sorry, or 12th. It's going to be the slowest day in all our lives. So how do we prepare for that? Now, obviously, you need amazing leadership to navigate all this. And organizations that do have top quartile leadership return almost 3.5 times more returns to shareholders. But at the same time, we find almost 70 to 80% of leaders feel unprepared for the roles that they are in. And the reason for that is the need to now embody or to be able to embed a full range of skills or types of being which were not previously needed. So for example, in the past, you could say that I'm either analytical or I'm intuitive, or somebody is very humble or they're very bold. But now the same person has to be both. You know, you need to be humble and direct. You need to be analytical and intuitive. You need to be kind of empathetic and be tough. And it's like having a microscope and telescope in each eye. And when you do that, you get a massive headache. So it's really quite hard.
So you have to be ambidextrous.
You have to be ambidextrous.
And does this reflect? Yeah. Does this actually resonate with you?
Sometimes I feel schizophrenic. But yeah, you have to be ambidextrous, right? You got to think long term, think short term, and yeah.
And you've collaborated together. What have you heard from Feagin that's reflecting in your own leadership?
So it's been a journey, Tanya, and I'll say that I've evolved over the years. I have learned to listen more because, you know, you sometimes as you get older, you have to listen to people a lot younger than you and see things from their perspective. But as a leader, often your job isn't to tell people what to do. It's to listen and then empower and enable their success, right? And the way you can empower and enable their success is to create the tools and the environment and join the dots. Today, more than ever, a good leader, I think, is able to look at the big picture and join the dots, right? And they may not know everything about technology or about data or about machine learning or about industry, but they find great people who do have that domain knowledge. They make sure the team works well together. They build trust with each other. And we have an overarching vision that we're all sort of energized to go towards. And, you know, we orchestrate, enable, and empower the team to go forth and conquer.
Feagin, would you agree with that? And what have you found in your research? Because, of course, we've got to talk about the impact of AI, but yet your research has showed you that humans are still relevant.
Yes. So, and this is actually a book that we came up with recently, but it's based on interviews and spending time with 500 CEOs around the world. And the interesting thing we found was that what's most important in a way is to unlearn management and relearn being human. Now, that's a very interesting thing to say, especially in the context when you're talking about technology and AI and so on and so forth. And therefore, the successful leaders will be one who, of course, understand the latest and greatest, but are able to actually embody what I might almost call age-old human qualities. So, for example, the quality of courage, the quality of vulnerability, the quality of empowerment, realizing that illusion is just a control. And there are 12 such qualities. In fact, as we were speaking beforehand, on the way here, I was looking up Aristotle's virtues, which Aristotle came up in 300 BC. And if you look at those, they all still hold true today, right? So I think it's really about higher self-awareness, starting with yourself, and then kind of learning how to lead others. And the point Sushan made is really important, because if you think of decision-making, which is one of the most important things leaders do, in the past, we made decisions either by pattern recognition, which is we knew we had made those decisions before, or by gut instinct. Today, neither of those really works. Neither of those have failed because things are changing so fast. So you need to be able to take into account of different views with different people and come up with something. Because even if I became 1,000 times smarter than I am, I would still not be able to deal with what I need to.
Sushan, you, of course, are going to be the first female CEO of DBS, one of the very few women leaders within the financial industry in this region. What has it taken for you, do you think, to get there?
Oh, I don't know, actually. I think I've been able to take a step back in my career many times. I think that willingness to step back has helped me to move 2 steps forward in my career. And that willingness to step back is because I'm not driven by power or titles. I mean, you know, it's well known in DBS that when I first joined the bank in 2010, I actually put my hand up for a demotion.
Yeah. That's very
Which
unusual.
is quite unorthodox. I know. My CEO was like, what the hell? Why do you want to do that? And I said, because it's the only way it's going to work. For me and the team to succeed, I had to report to somebody else in order that we could create a much bigger, better organization under his domain and under his care than if I competed with him. Yeah. So in order for it to work, I'll demote me. I'll report to him, not the CEO. And honestly, it worked really well, Tanya. And so when you have an organization that rewards that kind of behavior, and I think I did well because I'm with an organization that recognizes that kind of behavior, is bounded by a culture of trust and purpose. And a forward-looking transformational team and leadership that just wants to do the right thing, but also wants to try new things, and we're future forward. So there's a heck of a lot of energy and energy and transformation at the forefront, innovation at the forefront, but underpinned by values of purpose and integrity and trust, which I think is very powerful when you put it together. And so I've been lucky. I think the board and the CEO and my colleagues have been supportive, and hence I've been lucky to be given this great honor.
Do you feel a great responsibility to be in that role? And you've shared a lot of your own challenges. I mean, I was interested to read that actually there was a time when you didn't have a home. You'd left Bearings, and you had nowhere to live.
Okay, yeah. This was, I used to work for Bearings, and Bearings, as you know, went bust. And that weekend, my landlady tossed me out because I couldn't renew the rent. And that was a dark time in my life as well, personally as well. I was living in Hong Kong. But I think that's what made me stronger as a person. I think having been through, tough times where your personal life is in a disarray, your professional life is in disarray. But you know what? I learned to meditate, and I learned to look at my own life through a third party, more sort of more detached way. And I realized, hey, heck, you got your health, you got your family, you got your friends, and you've got youth. I was in my 20s, and it's not all bad. You know, and that's what I mean by resiliency, Tanya. I went through that in my 20s, and so I guess I picked up resiliency early on then in my career and in my life, my personal life, and I can't reiterate how important it is today, because in today's world, the young people today are bombarded by so much stuff, right? Social media, having to keep up with each other, change, volatility, it's nonstop. But being able to take yourself out of that sort of noisy headspace to find inner peace and look at things critically from an outside-in perspective and sort of stay calm and make those, you know, longer-term decisions that you need to with a clear head. It's so important, especially now.
Especially now. And Feagin, what advice are you giving to CEOs and corporations in this time of volatility?
So, of course, there's a lot of advice on the business side, but I'll talk about from a personal perspective in their own leadership styles. And I think the interesting thing is, and let me just take a little bit of an aside there, which is when we spend time with CEOs in multiple forums or even one-on-one, the problems that they bring most often in these discussions are much more personal. So, for example, I have someone on my team who is not pulling their weight. How do I deal with that person? Or I'm the CEO, but I still have an imposter syndrome. I don't feel that I can do something. And then that's when you realize that at the heart of all of this is these deeply human behaviors. So the advice, of course, is to really self-reflect and do a little bit of self-exploration in terms of what are the things that give someone energy and really give someone, you know, can do really well as what are some of the unlocks that they need to be aware of and can overcome them. The other advice the other thing that I try and do myself is, just like an organization has an operating model, each of us has our own personal operating model. And if we have not revised that operating model from year to year, it's like trying to run, I don't know, the iPhone 5 software on my iPhone, which won't work. And that operating model consists of 4 dimensions, really, which is what exactly am I going to do? So what am I really going to focus on? The top 2 or 3 things I'm really going to drive versus all the other things I'm going to manage. How do I spend my time? So how do I spend my time? What meetings do I go to, not go to? How do I leverage the people that I have? So how do I build a team? And how do I manage my energy? You know, as they say, managing energy is more important than managing time.
So true.
And Su-Shan, how do you manage people's concerns? Of course, we're seeing the tariffs being raised by President Trump's administration. How are you navigating that?
So we've changed the way we organize from being very vertical, which most organizations are vertical, to more horizontal. And that makes you a lot more agile, because then you can move quicker when things happen. You know, rates go up, rates go down, human behavior, client behavior changes, there's war, there's no war, markets are up, markets are down. If you organize in a more agile manner, that means all the people who are important in that customer journey, be it a trade or a credit journey or whatever it is, then, and you manage with data. In as much as you can have live data. If you can't, then the next best data is fine. But managing through data and creating that constant feedback loop so that your data is instructive and you can know what are your levers, what are your drivers, what's working, what's not. Then managing through journeys, managing horizontally, having dashboards is incredibly helpful in this day and age. And then having this constant huddle. You don't need to have a 3-hour meeting, you know, every day. But having that quick, okay, guys, this thing just happened, quick huddle, and bring everyone that you need to bring into that huddle. We call these like the morning stand-ups. Sometimes it's just everyone standing around and discussing and deciding, and off we go. Or it could be something where you have to make big decisions quickly. Then you have a war room scenario. Right? And I know some companies have war rooms because of what's happening in the US. I don't think we're there yet, but we certainly will have war rooms if something very big happened in terms of the geopolitics or in terms of technology or whatever it is. So being able to react, to diagnose, to react fast, have all the right people quickly on call, and the data to help you make those decisions, that's crucial.
How concerned are you, though, with what you're seeing, this volatility?
You know, I think we've learned to manage. I was trying to look back at the 40 years market volatility, and it's fair to say interest rate volatility, it's never been this high, I think, in 40 years. The last 2 years, we've had the highest in interest rate volatility. But I don't think we're not used to the market volatility. We've had the GFC, we've had 2 wars, we've had, you know, a lot of, China's had a lot of volatility. So I think we're kind of used to this now. But I think it's just being able to digest the knowledge quickly and have your bear case, your base case, and your bull case. Because sometimes the volatility is actually not a bad thing, Tanya. Like, you know, this move out of the US into Asia is actually quite good for us. So, okay, how do you turn this volatility to our favor? How do you pivot the money flows from the US to Asia? We're an Asian bank. Hey, this is our game to win. So how do you pivot to make sure you're there at the receiving end? If the technology's changed, are you ahead of it? How are you positioned with your clients? So, you know, turning this volatility to an advantage is also not a bad thing.
Looking at the opportunities. And Feagin, of course, we're talking about the impact of AI. How concerned are the people that you're talking to about their jobs?
So I think people are concerned, but people always feel that their job is safe. So they're more concerned about other people's jobs. So I'm sure people are concerned, but I personally haven't met that many people that are that concerned. But people are certainly concerned about the impact it'll have on their organization and on the way that business works. One of the things that we found is important when we think about leadership and AI is that AI tends to give you deterministic answers quite fast. And in fact, we just published a paper on that. And the human brain loves certainty. So the human brain loves certainty. So when you give someone something very certain, it's very easy to lap it up. And the danger, of course, is you can miss out on a lot of nuance because you're getting this certainty. So to effectively use AI, one needs to really adopt a few practices, like a little more self-awareness, taking a bit of a balcony view, discussing with many more people, and getting multiple perspectives in. But AI certainly is going to, and I'm no expert on it, but AI is certainly going to change the way work happens over the next few years. There's just no doubt about it.
But you can also ask the AI to ruminate, right? You can say, hey, are you sure?
Yeah.
I found out that if you question the AI, it actually goes, oh, okay, maybe I should rethink. So whilst you're right, it sounds deterministic because its English is so perfect.
Right. Yeah.
Actually, if you ask it to rethink or get another operating model to test the answers, you can see two sides as well.
Yeah. Sushan, in February, the bank did announce a cut to 4,000 temporary jobs over the next 3 years as AI is increasingly used, but also with 1,000 new positions being created in AI in the company. How do you reassure your employees?
Okay, so we have a natural attrition of 10% or so. That can be just people retiring, people resigning. And so the temporary attrition, if you don't replace, say, half of it, we'll take care of most of it, to be honest. And also, I think it's important to reflect that a lot of these jobs are not DBS permanent employees. They're contractors or they're temporary. They're there to fulfill a job. They might work for a third-party company, but they're in to help us to fulfill an integration work or temporary piece of work. And once that work is done, they're no longer working on a contract with us. And that's, we've got some 8,000-9,000 people there. So again, it's contract workers, it's people who retire, people who resign. And I think the natural attrition will take care of it. But what's important is your permanent staff, and we are certainly not planning to do anything with the permanent staff. We want to make them relevant. And the relevance will come from retraining them and reskilling them. And that's the not so easy bit, and that's the harder bit, but we're investing in people. And I always say hire for attitude. right? Because knowledge is ubiquitous and it's been democratized. You hire for people who have great attitude. Because why? If your job today is gone tomorrow, if you have a great attitude, you'll be flexible, you'll be agile, you'll be like, okay, bring on my new job, I'm happy to learn. I'm happy to take that step back, to take 2 steps forward. And I'll give you an example. We're piloting a situation now where our business center, which are all the service people, we're taking about quite a few of them, probably a fifth, and asking them to learn a new role of becoming relationship managers. Right? They're so used to being service center CSOs, we call them service center operators. But we're saying, hey, guys, we're going to give you clients. You're going to start owning clients because all that service calls that you used to take will now be done by a bot. We're upgrading the bot so the bot can do a lot of these lower-level transactions and queries and be very intuitive and very quick. So you don't have to do that. But can you take care of clients? Can you give them higher value-added, contextual, relevant advice, help them structure, etc.? And honestly, these guys, they can't wait to take on these new roles because, the AI can give them more capacity and the AI can help them be better relationship managers. So I'm happy to say the people that we're trying to give them this experiment to increase their capacity, they can't wait to do it. So I'm optimistic. I mean, humans we were born to be very agile and innovative. We're not extinct, right? So I'm optimistic that my colleagues and I will learn and relearn and take this next leap forward.
Are you seeing optimism, Feagin?
Yes. Optimism in terms of opportunities, optimism in terms of people's personal growth. And I think people, as I think Su Shan said, people have got used to volatility for so many years and COVID and so on. People just say it's just normal. So they're just getting on with So they're just kind of getting on with it, right?
Yeah.
But at least when I look at many of the people that I work with, the level of ambition, at least in Asia, is astounding, right? The level of ambition people have for their organizations and for themselves is actually astounding.
But Tanya, people still want that human-to-human connection, right? So you could be the best AI and enabled company or bank, but you want to be that company with AI enablement and a heart.
Yes.
Right? You want to be that humanistic AI-enabled company because you free up human time to do what humans want to do, which is create that human-to-human connection.
Are humans still important? We hope so. It's time now for questions from our audience. Who would like to go first? I'm sure we've got some questions for Su Shan or for Feagin. Yes, sir. We have a microphone that's coming round to you. So the mic is just coming. There it is. Fantastic. Thank you so much. That's brilliant.
Thank you. Su Shan, congratulations on breaking what must be considered a glass barrier. So a very political question about Singapore. When will we rename the Ministry of Manpower?
Mom?
Manpower.
Oh, as in, well, it is mom, right? Mom. Ministry of Manpower, I don't know. I think what you're thinking of Ministry of Human Capital or Ministry of... Oh, I don't sit in government, but it's a good point. I mean, maybe something that we should suggest to our Minister of Manpower. But I can assure you that, having been a nominated member of parliament before, non-partisan, the government is a big advocate for women, especially for working women, especially for women who need to balance family and careers, because we want to have more babies in Singapore. Our fertility rate is too low. But we understand also women want to have careers. And this is where I think a lot of women who have chosen to be full-time moms should be helped in their way back to their career ladders.
Is that an issue, Feagin, that you're finding, that work-life balance, and how people are navigating that?
Yes. I think there is no organization where people don't either complain or talk about it. There are very few where people don't. And of course, there are many theories. So one is it's not about work-life balance. It's about work-life integration and how you bring it all together. But I think it comes, to me personally, it comes down to how can each person and how can organizations help each person manage their energy. Because, you could be sitting in the office at 3 in the afternoon and be fully drained out and exhausted and not feel like doing a thing. Or you could be sitting there at 10 at night and be full of energy, right? And giving people the flexibility that allows them to kind of take the time that they need to, but really managing energy is probably the answer to this, because we can keep having this discussion on should we stop working at 5 or 7, but it's really about people having to manage their own energy in these constructs.
Yeah, we were talking about that combination, weren't we, earlier, about the mandate of being back in the office for 5 days or flexibility, and you still have 60-40,
Yeah, we still have 60-40. We believe in empowering our staff and, especially working moms, if they need to work from home, so be it. And those who want to come back to the office, come back.
We have time for another question. If we could have the microphone. Thank you so much. Here at the front. Thank you.
Yeah, thanks for the wonderful sharing. And just now, actually, both of the speakers actually mentioned about, Susan, you mentioned about the meditation. Also, you mentioned about really managing your energy. Also, this morning, actually, Ray Dalio also mentioned that meditation is kind of his really sacred weapon for success. But I wonder, really as leaders of the company, how do you bring that meditation seems like a tool to really fight against AI, make us feel more like a human being. But how to really bring meditation to the organization level or to your kind of really the management level? I don't know, do you have any suggestions?
Meditation. No, I talked about meditation. I'm guilty of not doing it now myself, but my meditation is running. So I go and I run and I do yoga. But everyone has their own personal way of, detoxing, right? Yeah. De-stressing.
And I've even done a meditation course for many days, and I've certified in doing some meditations. I think it's really about, the word meditation is one way of centering, and we call it that, but it could be going for a run. It could be even taking 2-minute pauses in the middle of the day to kind of center yourself, which is easier to get people to do rather than getting them to sit for half an hour meditating, because that can be quite hard to do. So yes, it's very powerful, but it's a very personal choice whether people. It doesn't work for some people actually. So it's not that it's something that will always work for everyone all the time. But for those who it works for, yes, absolutely. There's all sorts of scientific evidence that your brain it changes the way the brain works, and it does all sorts of amazing things. So.
Sadly, we've run out of time. In our final seconds, Sushan, please tell us your vision as incoming CEO of DBS.
Well, as I said, I would like to make DBS one of the world's best AI-enabled bank with a heart. That would be my vision, bringing one bank to bear and being, the better bank for a better world.
Farid and Sushan, thank you so much for joining us today at Converge Live. Thank you.
Thank you.
Wonderful.
Thank you, Tanya.
Thank you so much. Back to the wonderful Mandy.
Thank you so much for that, Tanya. What a high note to end on. And Sushan, I will second you. I had my babies here in Singapore nearly 22 years ago, and it is a superlative place to have children. It is an absolutely wonderful place to be a working mother. So what a wonderful day it has been here for day one of Converge Live in Singapore. And the great news is we've still got day 2 tomorrow. So let me just give you a little taste tester of what we have on deck for you. And these are just a few, by the way. By no manner of means, the entire list. We've got former UK Prime Minister David Cameron. We have Olympian Michael Johnson. We have Saudi Esports Minister, His Royal Highness Prince Faisal bin Badr Al Saud. We also have Live Golf CEO Scott O'Neill. And as I say, that is not an exhaustive list. But because we have now come to the end of the agenda for today, I would now like to invite all of you to have a drink with us. It's a great opportunity to rest, enjoy, maybe do a little networking, get to know each other. I'm going to be over at the drinks as well, so I'm looking forward to meeting some of you as well. So on that note, thank you so much for being a really great and engaged audience. Thank you for all of your questions as well to the panelists and guests. And I will see you over at the networking drinks. Enjoy. Thank you.